the Gulf. I think the geopolitical bit makes me very coveted at the moment, but I can tell you I have no crystal ball, so I will be as clueless as a lot of you on what is happening in the world. So, once again, let's start the proceedings. Thank you very much. I love the energy and the spirit of collaboration that all of you bring in. And believe me, we're going to need a lot of that if the geopolitical events of the last few months are any testimony to the disruptions, but also the opportunities that lie ahead. You know, so much has changed since in the global arena since the 360 TF's last conference in August 2025, when participants discussed and built on solutions for the impact of superpower rivalries on trade, tariff, and investment, emerging multipolarity, and sovereign corridors. But you would all agree that since then, what were nudges of risk have become an explosion of events that have left all of us grappling. No one really knows whether the Strait of Hormuz is closed or open, whether the Houthis have blocked the Bab al-Mandeb. Why is Iran targeting the Gulf states? What is President Trump's Iran strategy? And most importantly, when is all of this going to end, along with its impact on global trade, energy security, currency stability, and inflation? But as a geopolitical analyst, I am going to take the risk of venturing into some of these underlying trends of these events, which I believe will have massive implications for how cross-border trade and investments will work in the future. So just summing up, I think most of you know that. A lot of you are from the Gulf states, will attest to the fact that on 28th February, we woke to a new global reality. US and Israel attacked Iran, something which was not much of a surprise. But then instead of past skirmishes, including the 12-day war, where the targets were defined and the escalations were sort of contained, Iran went, for the lack of any other word, berserk on the Gulf states. UAE, Kuwait, Qatar, Bahrain, and to a lesser degree, Saudi Arabia. What followed has been well reported. Attacks on US military bases and facilities, Gulf's energy facilities, existing and potential trade corridors, and flirting briefly with attacks on data centers and critical technology. Of course, the conflict still continues, and new dimensions are added every day, and there are lots of moving parts. But let me highlight 4 key trends that impact the topic at hand. Can we get the presentation, please? Perfect. So I'm just going to quickly go through these slides. So these are what I feel are the 4 major changes that have happened in the international trade scenario. For years, exponential growth in the trade corridors was based on 4 key parameters: the centrality of the dollar and the sort of deep US markets, freedom of navigation across critical choke points, the US military's writing of these global movements, and most importantly, reliability and predictability of trade corridors, energy supplies, and commodity pricing. Now, I think 28th February changed a lot of that. The Hormuz disruption, has basically challenged the whole idea of whether the US is now willing to guarantee the secure lanes. Yuan settlement, Hormuz tolls, UAE's exit from OPEC are all questioning the fundamental paradigm of the dollar as the reigning currency. The attacks on US bases and facilities have challenged the entire concept of whether US is willing to sustain the security architecture. And I think most importantly, what we are missing is the renegotiation of energy corridors, trade corridors, and commodities repricing. All of that lent an unpredictability to a system which was till now predictable. It was just in time. It made financing possible. So before we move on, we're going to be discussing all these topics throughout the day. I'm just going to take 2 minutes and reflect on how the energy landscape has changed, just to point out what sort of unpredictabilities come onto the global arena. So this is oil production oil production in 2024, a lot of that, of course, has concretized. And I think one of the major things is this part of the world acquiring energy sources, shale oil, shale gas, but also the sort of revolution in Brazil, in Mexico, in Venezuela, of course, which is now part of the international system as well. This in 2026 has become even more concentrated. You see, US is the largest sort of producer of oil in that sense. And then if we move on to LNG, it's even more pronounced. United States is way ahead. It's almost 2x of Russia and 3x of Iran and Qatar. And if new projects are any sort of indication, it's going to by far exceed it by 3 to 5x. Right? So why does it matter? Right? It matters because it's mentioned in the US National Security Strategy that the US wants to control hydrocarbons to an extent where upper price volatilities don't impact its monetary system. Right? A large part of what President Trump spoke about in his campaign, which was Venezuela, control of the Western Hemisphere, Cuba, a little distant because it's got oil resources, but they're not proven yet. Greenland is all a part of geopolitics of energy, right? And what do we have now? We have a division of the world into 3 energy blocks, as I call it. The US leading the Atlantic basin, right? Which has emerged as the most reliable supplier of energy as Iran attacks the Gulf states and Ukraine duels with Russian energy. Russia here is about 10 to 2. This has come down significantly to about hovering between 8,000 to sort of 9,000, 100,000 barrels per day. So that has been, this becomes then the Atlantic basin, one of the key, most reliable incremental supply of oil and gas. The second one, the second energy corridor is being built around China, Russia, Iran, which is largely about sanctions, different modes of payment, bypassing the dollar system, etc. And the third one is what I call strategic hedgers, the mid-powers, the Gulf countries, India, Malaysia, are all hedging and investing in both these models to make sure that they can continue surviving. And the example is the Gulf states. I'm going to quickly throw up this map. The team at where I work loves doodling, right? So a lot of this is just the tip of the iceberg for Gulf energy footprint. It's now a global footprint. They're one of the largest global asset allocators in hydrocarbons, a thing that's often missed when we're assessing both the Gulf strength and how the energy sector is emerging. Now, because this is a complicated map, we have included everything from upstream, midstream, and downstream. But you can see Saudi Aramco, the Port Arthur refinery is what is refining Venezuelan oil. It's about 600 million barrels a day at the moment. They're exceeding it to about, 600,000 barrels. They're exceeding it to about 1 million barrels. Reliance Industries is setting up, outside of India, one of their largest refineries in the United States. Petronas is invested in Canada. And then, they've got downstream refineries in China and then all of Africa, which is one of the major areas where multipolarity in hydrocarbons is emerging. So I'm just going to conclude with the hydrocarbon environment is becoming more multipolar, but energy architecture and security is becoming more politicized. It's becoming more controlled by sovereign corridors, by who you ally with, by what you pay in. And then the question of who produces energy cheaply is replaced by who can protect their energy infrastructure, who can make sure that routes are available, Hormuz closure, Red Sea closure, what is going to be the Part C in that sense. Also then there is again, doodling. These are the trade corridors that are being contested across the world. Right, again, we've made this by hand, so please but these are all of the energy routes that are being contested. This is the Saudi east-west pipeline. When Hormuz shut, this was where it was routed. Then the Houthis apparently closed the Bab el-Mandeb. They started going through pipelines that the Gulf owns, or at least parts of it in Egypt, and then the Egyptian gas tankers were attacked. So it's plan A, plan B, plan C, and now plan D. And this is really going to impact how the trade architecture works in the world. all of the commodities, with the sort of petrochemicals, we produce about 50 crucial commodities, very, very important for AI trade. All of them are being repriced. All of them are, America now, for example, is one of the largest producer of aviation fuel, of helium. So it's going to be a couple of years of tumultuous time when we have to plan for trade finance in a way which no longer just looks at the risk of the party that is lending, the party that is receiving, the banks, etc., but also the corridors, the origin country, where are you taking on, which political affiliations, what are the sanctions, right? So, yeah, of course, that's a risk, and that we'll be discussing across the day, but it's also opportunities, which is what I want to harp on. It's an opportunity for new geographies. I was having very interesting conversations yesterday with some of the members from Africa. You know, the fact that trade is being rerouted through the Cape of Good Hope is actually a great opportunity. The Dangote refinery has made a lot of ripples around the world because it opens up Nigeria. On an average, I get a request for Syria every week in terms of investments, opportunities, etc. And I'm going to hold on India to here because there's a separate section for it. Technology innovation, I think, is going to be very, very important. And I know a lot of you here are working on digitization of trade, on sort of supply chain finance using blockchain, etc. Because supply chains are going to get complicated, and we have to prepare for it. And a lot of these emerging countries, Iraq, for example, has some very interesting fintechs that could be a part of this ecosystem. India, and I know we're going to be talking about the gift city and how that emerges, is a nodal hub for South-South cooperation. You know, the 2 trillion sort of trade targets that we have by 2030, the very deep capital markets that have now been integrated with financial inclusion, the fact that sovereign corridors are being created between the India and the UAE, for example, and then the vast HNI and the NRI population we have is going to give India, I'm guessing, an edge in the future. And I'm going to sort of close up with 2 quotes that I very recently heard. First was, Indian deep tech manufacturing and innovation will become to the world what China became to manufacturing about 2 decades back. And the second one is that if China had a Hong Kong, India has a gift city, right? So that is something that we're looking forward to. And the last opportunity, of course, is what 360TF is doing. You know, integrated trade platforms that can combine passion, patience, and pragmatism. Look at solutions, be on top of risks, and really, really build the future of trade finance. Thank you very much. Perfect. So, on that note, I will declare the 360TF Trade Finance Summit open. In President Trump's words, let's make trade finance great again. And I'm going to start with our first Desi boy, Mr. Vikram Lodha. Vikram eats, breathes, and sleeps trade and supply chain finance, and I am not joking. Our conversations typically always come to where geopolitics is heading and what are the opportunities for global South countries to really show their muscle and for small importers and exporters to grab this technology era for fintechs, digital platforms, and blockchain to finance their future. A consummate banker with 20 years across trade finance, supply chains finance, and global transaction business across top private banks in India. I think what stands out for me is his passion to support the SMEs globally, to help in trade and national growth for India and the world. Vikram, can we please have you on stage?
Good morning, everyone. It's so lovely to see you again. It's my great pleasure to welcome all of you to the second edition of 360TF Global Trade Finance Summit 2026. I extend a warm welcome to our distinguished guests, especially our regulators, Shri Rajaramanji, Dipesh Bhai, Supriyoji, Riddhiji, Ashutoshji, and the entire diligent team at IFSCI. Our banking partners, ICICI, DBS, Kotak Mahindra Bank, Bank of India, and State Bank of India, all our corporate clients, and our investors, especially, it's without their support and guidance, we would not have reached this far. Thank you, Vimal Bhai, Tarun Bhai, Murli ji, Ravi, Lalit, Rajni, Hitesh, thanks for being here. Jotin, thank you. Various other financial institutions, trade bodies, and delegates who have traveled from different parts of the world to join us today. My wife, Priyanka, my dear friend Sandeep, my niece Saloni, thank you for being here and supporting us. When we met here last year, we spoke about the opportunities that lay ahead of trade finance. A year later, in 2026, the global trade finance landscape continues to restructure rapidly. Once a model optimized for efficiency, cost, speed, and scale, the system now evolves for adaptability in the face of geopolitics and strategic hegemony. The shift in paradigm is reflected in alternations of trade flows and repricing of risk. Our systems fragment and complicate. It is worth examining how the aforementioned and the advent of every robust digital infrastructure are redefining the functions of trade finance. With the expedited systemic rerouting of trades, corporates are fast diversifying supply chains and supporting trade finance solutions, whilst banks reappraise exposures, develop compatibility, and advancements in trade supply chain finance technology. This implies greater intra-regional trade, novel corridors, reduced single geography dependence, and strategic alliances between logistics and trade finance providers. The model now grapples risk diversification fragmentation with the cost of new global routes, providing both immediate challenges and opportunities. The weakening of predictability has effectively led to rise of uncertainty, with banks now more compelled to support corporates and their counterparties with reliable instruments such as documentary credits, guarantees, and supply chain finance structures. The primary challenge is to deliver security whilst maintaining the efficiency of traditional trade processes through digital updates. The latter is a necessity given that in the complex systems, manual processes often falter. Thus, the digitalization now accounts not just for efficiency, but also reliability and risk control. Software solutions are now the core enablers of trade finance. Moreover, the evaluation of risk now rests on rich data, intelligence, coalesces, geopolitics, and exposure of sanctions. Importance of supply chain, participant flexibility, and convertibility of currency. Present day, companies within a geography can process disparate risk profiles to greater situational volatility. This requires the integration of nuance in the management of multi-currency complexity, backup funding channels, and changing financial influence. Corporates are fast adapting to varied norms, including shorter payment cycles, greater use of bank-backed instruments, diversified banking relationships, active working capital, and selective allocation. Their historical preoccupation with liquidity is evolving into factor in risk management, technical trade, and supply chain advice and risk sharing solutions. With all this, the future of industry appears to be regionally based system interconnected with new corridors and trading relationships, making trade ever complex and placing greater importance on strategic partnerships between countries, industries, corporates, financial institutions. In such an environment, success predicates on the ability to administer speed, complexity, and risk concurrently. In a less predictable trading world, in a growing need for specialized technology and collaboration. Recently, in one of the conversations, I was asked a question: what is 360TS function exactly? Are we a lender? Are we a tech player? My answer to that was, we are an enabler. We enable trade finance solutions through lending and technology and at a global stage. And that's something that we've been doing for last 5.5 years consistently with our two solutions, that's the LC exchange and the lending through 360TF Capital IFSC. We are the largest LC platform with 4,000 plus corporates, 120 discounting banks, 700 plus issuing banks. We witnessed LCs from more than 110 countries on the platform with an overall flow of $25 billion and upwards over the past few years that we've been around. Finance company in Gift City is our open account cross-border trade finance solution. We've been supporting exporters from India, exporting to various parts of the world, especially US, UK, EU, and UAE, for their receivable financing. We offer two tech solutions, primarily focus at the digitalization of trade. For the corporates, we have a centralized transaction management system. This is a single view framework which provides transaction status, compliance checks, and processing of transactions across branches and partner banks. To the banks, we offer firms, this is financial institutions relationship management system. It's an end-to-end digital transaction flow with an auto relay of quotes, audit trails, and automated offer letters. When we look at India, I look at it like this: India is well positioned, in this changing environment, with its expanding manufacturing base, growing export capabilities, digital infrastructure, and increasing engagement through bilateral and regional trade agreements. India has an opportunity to play even more significant role in the global trade. Gift City is an important part of this journey. It represents India's commitment to building an internationally connected financial ecosystem that supports innovation, facilitates cross-border investment, and strengthens global capital. This year's theme, Resilient Global Systems, Enabling Liquidity, Trade and Investment in a Fragmenting World, reflects many of the issues that businesses and financial institutions are navigating today. Throughout the day, we will hear policymakers, regulators, economists, banking leaders, corporates, and industry experts who will share their perspectives on how these challenges can be addressed and how new opportunities can be created. The sessions have been designed to encourage practical discussions on topics ranging from global trade dynamics and SME financing to institutional capital, cross-border investment, and long-term economic competitiveness. I encourage all of you to actively participate in these discussions and take full advantage of the opportunity to engage with fellow delegates. Some of the most valuable outcomes of the summit like this come not only from the sessions themselves, but also from the conversations and relationships developed throughout the day. The summit has grown large now. We've had 600 plus registrations this year. Gratitude to our team. Without them, this is unimaginable. Thank you, guys. Before I conclude, I would like to thank all our speakers for being part of this summit. Your participation and willingness to share your experience and insights are what make this platform meaningful. I hope today's discussions provide a new perspective, encourage valuable collaborations, and contribute to strengthening global trade and trade finance. Thank you. I wish you a very productive and engaging summit.
Thank you so much, The main aim, as Vikram said, is to facilitate discussions, to talk to each other, to provide solutions, and to appreciate, guys, be a little interested and enthusiastic with your claps, right? Now we will move on to Vikram's partner in crime, Mr. Pankaj Mundra. Along with his awesome professional accolades, which a lot of you already know, I think it's his awesome energy. If there's anybody who can solve what's happening in the world, I believe it's his energy. And that's what draws us to the very important topics of trade finance, SME growth, new avenues of financing, and digitization. 21 plus years of professional experience in investment and consumer banking. He's a pioneer in digitizing trade and securitizing sort of financial assets. He has a number of awards to his credit. I mean, it was like a long bio, but he was recently given a very prestigious award. The Institute of Chartered Accountants of India, the mother body, awarded him with an emerging business leader with the case study of securing a license from IFSCA last year. I think that definitely deserves, that's amazing. He's also been featured in the CA Makers of Economy, the first ever coffee table dedicated to CAs. I'd love to see that. I think we should get it here next time. But let's put our hands together for Pankaj, for his energy, and for the efforts he's making of solving the critical problems.
Happy morning, Swagat Chair. It's truly an honor and privilege to welcome all of you to the second edition of Global Trade Finance Summit. What a time we all are together. The Nasdaq and S&P is all-time high. A report came in yesterday that the margin money given by the banks in US for the margin trading and of course to support this investment is $1.5 trillion. So $1.5 trillion in the market cap is being funded by the banks, and there's also an opportunity for the Gift City Bank to finance investment into US stock, they leverage. We heard today Sheikh Hasina is getting back to Bangladesh on her way before end of this year. The tension increases, goes back. Crude is all-time low in last 3 weeks to $75, and gold is all-time high again to $4,300 per ounce in last 1 month. So a lot of business opportunity for us. Bonds are going down because Fed has kept the rate constant, but there's of course an opportunity for trade finance as an asset class, as an alternative as bond goes slow and the stock market and the other asset class grows. A very warm welcome to our chief guest, Shri K. Rajaramanji, the chairperson of IFICA, our distinguished policymakers, regulators, development financial institutions, banking partners, corporate leaders, investors, technology partners, industry associations, media representative, keynote speakers, moderator, panelists, and all the foreign delegates who have joined us from different parts of the world for this unique conference. As Vikram mentioned, with the overwhelming response of 600 plus professional audience, and we're almost going to see 300 plus soon in this ballroom from 11 countries. It's a well done and well thought and with this whole team effort in last 1 month. Kudos to my program director, Binita Shah. And team, we had a competition between our various teams, the Jaipur team, the Gift City team, the DIFC team, the global team, in terms of reaching out to each of the audience and the registrations. And the Gift City team played a very important role with 100% registration of these registration. So kudos to my colleague Alkesh Patel and of course Lokesh Paliwan from Jaipur office to make this happen. This all reflects that we are all gathered here with a shared commitment to shaping the future of global trade, finance, and investment together. Before I begin further, I would like to express my deepest gratitude to Almighty God, my parents, my spiritual master, my family, our board member in absentia, Ms. Monica Gogna, Mr. Peter Mulroy, Mr. Ravi Bhardwaj, who's come all the way from Canada, Shri Vimal Shah from Kenya, Jammu Sana sir, all other investors who have joined us today, our banking partners, our business partner from Dubai, from AGMS, Dr. Abhishek Jaju, our mentor, Dr. Anil Khandelwal in absentia, Rajesh Ji Somani, Dinesh Ji Tiwari, Krishna Ji Majithia, Ravindra Ji Mathur, Murli Ji from Nasik, and all above the exceptional Team 360 TF. I would like to extend my sincere appreciation to International Financial Services Center Authority, the IFIC, once again. Under the visionary leadership of Shri K. Rajaramanji, IFSCA has continued to create an environment where innovation and regulation move hand in hand. The initiative of Chintan Shivir, the brainstorming sessions, which started 2 years back, which brings together banks and finance companies to share their constructive feedback and ideas for the growth of GIFT City, has been phenomenal and very highly successful. Sir, we are testimony to the developments such as interest subvention for exporters, invoice registry and charge in CERSAI, the UCC equivalent in US, the possible extension of the CGTMSE credit guarantee scheme of Government of India to GIFT City banks, which we believe is under process, the possible increase in the per-party exposure on import factor partners, and many such catalyst initiatives. Chairman sir, I feel Chintan Shivir's success demands this should be a half-yearly exercise than a yearly exercise. We are happy to bring our ideas from our global experience to GIFT City and contribute value to the overall ecosystem of factoring and receivable finance. Thank you, sir, once again for your continuous guidance, encouragement, and support. Why 360 TF is there in GIFT City? I'm proud to share that we are the only firm so far in GIFT City owned by NRIs and global investors from 15 countries with a strong presence in UAE, East Africa, and India. This deserves applause for our investors from Canada to Kenya to Singapore and so on and so forth. So UAE, East Africa, and India. The triangle represents an opportunity of nearly USD $100 billion in trade finance. And I believe Team 360 TF is well positioned to optimize and capture this opportunity with its origins in the UAE, but its foundation roots from India. While the UAE represents a huge opportunity for domestic factoring, and being an NRI and resident of UAE for 21 years, with especially the implementation of e-invoicing by 1st January 27 in UAE, was in a huge pipeline opportunity. But what inspired us to come back as an NRI founder to our Desh is the touching story of the movie Swadesh, My Bharat. Yes, we all NRI can do a lot in India with our global experience and expertise. So I'll urge all the NRIs who are there in this room should explore the opportunity, what they can do in GIFT City. So with this opportunity on our way, we have continued to build our strength by expanding our portfolio in GIFT City through supporting Indian SME exporters, as well as with e-invoicing implementation, 50,000 SMEs in UAE. But you will be surprised to know this 50,000 SMEs in UAE, which will go for e-invoicing implementation in UAE, are either owned by Indian NRI promoters, they buy from India, or the supplying to businesses, the anchor buyers, are managed by Indian CFOs. So while the opportunity is in UAE, but it is controlled by our own diaspora. Now to fund and create liquidity for these SMEs, we have identified several partners, banks, private credit funds, the FCA network, Factor Chain International, the HNI investors who have tested the waters with us by participating in 550 plus transactions over the last 12 years with zero NPA. Yes, you heard it right, zero NPA among these all 550 transactions. Out of this 550, almost 375 transactions got paid, where we received the money back from the borrower. We are discussing lot of structures with banks and financial institutions, be it escrow structures, co-lending structures, FLDG structures, and book-to-sell structures to make this happen with our lending partners. Because with license, you can set up, but you need a liquidity to grow and expand and share this liquidity with the SME exporters. We are also happy to share that our bond structure is now ready in GIFT City for our lending partners and NRA investors. Yes, so our bond is live. If you Google bond GIFT City, you will see 360 bond details. So we are grateful to our partners Varia Gandhi, IIDL, Vistra, Anand Rathi and PwC for making this bond structure live. To scale and make this truly impactful, we must adopt artificial intelligence, the AI, and the newest technology. The artificial intelligence is helping us to improve document verification, strengthening compliance, reducing operational risk, enhancing communication, identify prospective exporters at a district level in India, and last but not the least, analyzing the general ledger between the buyer and the seller. I'm happy to share that a right prompt given to a chat GPT can even provide you a list of exporters in Ichalkaranji, Kolhapur or Anand, Gujarat. Yeah. So this is the tool which all of our, I tell to our business development, that even a building which you're going in Brigade, if you do a prompt, you will see what are the other prospects. Yeah. So that's the power of AI we all can use. The last 1 year progress. We have received a global recognition, and I'm happy to share 360 is the world #1 factoring company in marketing. Doesn't this sound inspiring? Yes, it is inspiring and path-breaking. I'm delighted to share that 360 TF have received the FCI Marketing Award, the Factor Chain International, for the 3rd consecutive year. Now, receiving this award in 3 years in succession reflect the consistency, innovation, and creativity of the 360 TF digital and marketing team. May I request our marketing team to stand up, led by my colleague Binita Shah? Please. Friends, well done, Saksham. This is the only award where it is just not about nomination, but more than 300 FCI members, which include lights of Unicredit, Intesas, DBS, and all large banks, who have to vote physically in an AGM, and which happened in this year in Lisbon. So the 300 banking FCI members who come forward and see all the nominations, they have to vote for you. And I'm grateful to my colleague who could make it to Lisbon to keep the trophy with us. Thank you. So I would like to thank every client, every banking partner, every investor, our regulator, every member of the 360 TF team for contributing to this achievement award. But I feel marketing and communication is very, very important. You have a liquidity, you have process, you have system, but what everybody lacks today in the world is the marketing and the engagement. So we are pioneer in this. This recognition has also led to partnership with more than 8 leading import factor partners from FCI across various geographies, and successful closure with 5 of these import factor, Deutsche Factoring, Mizuho Japan, and so on and so forth. So we have progressed well from the last year to this year with 8 partnership with import factors and closing transaction with 5 of the import factors. Our greatest strength, our people, our team. When I had many of you yesterday evening and again this morning, the one common feedback I received was, Pankaj, your team is truly adorable. Where they got this energy and enthusiasm from, it is contagious. I know Shraddha spoke about this, but our team was there to pick many of you at 3 a.m. yesterday in the morning from airport and remain in constant touch to ensure that you reach Gift City comfortably, whether it is your first visit or another one. Friends, yes, we are building a global brand with a culture where the goals, the lakshya, are not just those of founders, but they are owned by the team themselves. What makes a 360 TF team a truly great place to work? The Glassdoor rating of 4.6. How many of you have certified with Great Place to Work certification? Your companies? 1, 2. I think all of you must pursue this, and we have done this last year with amazing Glassdoor rating, right? Because every individual nowadays, the youngster, the Gen Z, before they come and join, they do the Google, what is the Glassdoor rating of this company? So friends, again, what is our culture? We celebrate every success. We celebrate joining, not resignations. There's no farewell in 360 TF. We believe in young team and providing opportunity to young talent. With 60 of our team, 25% of our team, which is more than 15 people, joined us as the young leaders through the internship. 10 of our team members travel abroad first time in their lives, and the passport was made because they have to travel on 360 TF business trip. Each team member gets one-on-one interaction with the founder every quarter, and many more. Team, I'm truly proud of you. Before I close my speech, we talked about a lot of business, the GDPs, the growth, the economies, the oil, and the gold. This is something very unique to all of us, the giving, the givers gain. And we have been part of very unique CSR initiative for last 4 years, the 360 TF book drive, led by our young leader, where we have been collecting books in UAE and donating the books to Africa. The first year was 5,000, the second year was 15,000, and the third year is 34,000 books. These books are going this year to Nairobi, Kenya. And I'm happy to share the young leader behind this initiative have been nominated for the Princess Diana Award and going to receive the award from Princess William in November. Let us together enable liquidity for 1,000 SME exporters with USD million each, creating a $1 billion cumulative portfolio as India moves towards and crosses $1 trillion in export before 2030. I wish all of you a highly engaging, insightful, and productive Global Trade Finance Summit. Thank you very much. Jai Hind, Jai Bharat, Jai Trade Finance.
Thank you so much, Pankaj. I think lot of very valuable insights, work in the UAE, roots in India, global experience, but then coming back to contribute to this wonderful country which has given us so much. And of course, the amazing 360 TF team that I will keep harping on through the entire conference. I think both Pankaj and Vikram have highlighted the themes of resilience, of interconnectivity, and of adapting to changes. So beautifully aligned with our conference's cultural theme for today, the Worli art, the tribal folk art of Maharashtra. Worli painting is built from nothing but circles, triangles, and squares. Yet from these simple shapes, the Worli community has for generations recorded an entire way of life. A tradition that has survived for years by shifting landscape, changing times, by not resisting, but by continuing to adapt, to retell, and to pass forward. That's how at 360 TF, they aim to solve problems through shared participation, rising up to challenges, and at the core, keeping the interdependence of the ecosystem, which is all of us. So thank you so much for this participation. I'm going to now move on to our very special chief guest. Please bear with me while I fangirl over his accomplishments. How many of you have seen the movie Kung Fu Panda? I'm guessing Kung Fu Panda 1, everyone has seen it. There is one of the first dialogues which says that legends tell of a legendary warrior whose Kung Fu skills were the stuff of legend. So when I was reading your accomplishments, I was thinking of your banking and public skills are the stuff of legend. 35 years in public service with various leadership roles in Government of India and Government of Tamil Nadu, as Secretary, Department of Telecommunications, and in very important areas of investment promotion, FDI, public sector undertakings, industrial infra, and commercial taxes, all coalescing to his current responsibility as the chairperson of International Financial Services Authority, where he has taken the mantle to reform, integrate, and grow India's financial services landscape to the global standards. No small feat. Please welcome our own legendary warrior, Shri K. Rajaraman, Chairman IFSCA.
Distinguished guests, Mr. Loda and all his colleagues, representatives of various regulated entities in IFSC, other distinguished participants, my own colleagues from IFSC and GIFT City. A very good morning to all of you. I'm very delighted to be part of this event, which 360 TF has been religiously organizing every year. So, first of all, I would like to congratulate them for a few years of very outstanding existence. I think uh, it's a leap of faith that they have taken in actually establishing this trade finance company, which focuses on supporting the exporters in India and in other geographies as well. So I'm very happy to be part of this Global Trade Finance Summit organized by them on the theme Resilient Global Systems Enabling Liquidity, Trade and Investment in a Fragmented World. I would like to once again congratulate 360 TF for organizing this theme around this important theme, which represents a challenge as well as an opportunity, and also gathering a lot of industry leaders, policymakers, market participants to exchange perspectives on a very important topic, which represents a means of growth and development in countries, especially countries, developing countries. As some of my preceding speakers outlined, I mean, we are faced with a disconnected world after years of working on the global order. So to the extent that I think we should actually be asking whether there is any global order at all. I mean, I think so. We have reached such a stage when I think what I say is the rule is the rule. I mean, I think so. When there is no global agreement on many things, and we see that many bodies like the WTO have actually receded to the background. I mean, I think so. I mean, so after several decades of very prominent existence, I think we see many of the bodies, many multilateral bodies, actually fading out. I mean, I think, and to the extent that I think we may actually ask the question whether do they exist. I think so. That is a question that we need to ask ourselves. So this global disconnect, perhaps, I mean, I think maybe sometimes is good because it may lead to reset of old practices which probably need to give way to new. But we only live on hope, so we hope that maybe in the coming future that this disorder will once again give way to, I mean, some way of new order in the global markets, especially the financial markets. In the midst of all of this, I would like to say that the Indian economy has stood out like a lodestone, and I think it shows a picture of resilience. I mean, the last decade has been a decade of challenges. I mean, I think there has been global geopolitical disconnect. There has been this COVID. Then there have been wars. I mean, I think so, and all these events have not actually impacted the Indian landscape significantly. I think, though of course there is an impact, and we have to acknowledge that. But the Indian economy has stood out as a resilient economy thanks to the reforms which have been implemented over the last several decades. I mean, we have had the monetary policy framework agreement signed between the Government of India and the central bank. It has ensured that even in the thick of all these global events, our inflation rates have stuck to, I mean, I think the 4% plus mark. So we had, in fact, in the recent past, I think the inflation rates have actually gone to zero with a growth rate of about 7.5%. So the Indian economy is on a very sound footing thanks to a number of reforms. I mean, if we can go on to talking about it for an hour, but I would like to very briefly say that the structural reforms which have taken place in the last decade or so have actually helped a lot. The inflation monetary policy framework agreement focused on inflation has helped the central bank focus on this single topic, I mean, I think, without bothering about growth and development, which is the job of the Government of India. The Government of India, on its part, has played a very important role on working on supply-side measures. I mean, I think because it's very important to work on the sources of inflation, which include oil, food, and so on and so forth. So the Government of India, thanks to its economic diplomacy, has worked on the oil factor. A lot of local development on agriculture and food-related investments have actually supported in cooling the food-related inflation. So that explains a lot of how our country has managed the inflation very well. The financial sector reforms have been a set of reforms which have actually helped the financial sector stay resilient in the midst of all these shocks. The recapitalization of banks, consolidation of public sector banks, the implementation of a very sound asset classification and provisioning norms by the central bank, All this have led to the banking sector turning around, and today it is one of the most healthiest sectors in the country, I think. And in fact, the stock market actually has given a big vote of confidence to the financial sector, and the financial sector has responded by churning out record profits, in year after year for the last several years. And so is the case with insurance companies. Similarly, the stock market has actually has transformed into what used to be an institution-led market to a retail investor-led market. In the past, I think a foreign event or a foreign sponsored event could actually turn the stock market upside down. But today, no more, I think, because the domestic retail investors, domestic institutions play a very important role in the stock markets to the extent that these kind of shocks are just glitches and not long-term events which actually impact the very the picture of the scenario in the stock markets. So, for instance, there are more than about 135 million investors in the stock markets. Similarly, I think the insurance industry is also in a very healthy footing. And I think today we have seen the regulator working on what is known as the Insurance for All agenda. So we believe that in the next several years, the reforms unpacked by the Government of India in all these sectors, including financial sector and the non-financial sector, will bring in more resilience, more growth opportunities. The Government of India, through its various policies, has actually pump primed the economy through its investments in the infrastructure sector. More than $130 billion being invested every year in infrastructure. Similarly, the Government of India is also working on very large programs for advanced manufacturing. India is a manufacturing hub with about 17% of the GDP coming from manufacturing. But the focus now is on the advanced manufacturing, which includes semiconductors, space, defense equipment, things like advanced pharmaceutical ingredients, and so on and so forth. So the more than 24 production-linked incentive schemes have supported the industry in actually investing in some of these cutting-edge sectors, including semiconductors. Now, while all that we saw, I think one of the most important things that would support the Indian economy is to ensure that the Indian manufacturing is able to export its products significantly. So last year, for instance, the total exports out of India was about $860 billion. The merchandise export was north of about $450 billion. So while that we saw, the Commerce Ministry has focused on a $2 trillion export agenda. And if you may look at what are those constraints which would actually which is actually slowing down the exports in India, one of them is finance, and that's why we are all assembled here to see how to close the access to trade finance. In fact, the Director General of Foreign Trade has done a study early this year. I think some of you must have seen the study, and I would request you also to look at the study. So the study unpacks the various ways in which I think we will look at the gap, the trade finance gap. So for instance, we may talk about so many things, but one of the things that actually is very important from Indian perspective, from the trade finance perspective, is the factoring industry. So the Indian factoring industry needs to, is off the ground. I think thanks to the innovations done around threads and so on and so forth, and the ITFS platforms here. But I think we have a long way to go in terms of, say, looking at what is the percentage of factoring, as a percentage, factoring as a percentage of the merchandise exports. In India, it's still about 27%. So if you look at a large number of other countries, like including OECD countries, I think this number is north of 40%, I think 40 to 45%. China is about 37%. So I think that could be taken as a proxy for the trade finance gap in India, because measuring trade finance gap is a very challenging task. I think we don't know how many applications are rejected by the banks, etc. That could be one way of measuring it, but that data is still not in the public domain. But this proxy, by measuring us against countries, similarly placed countries, would be a good idea. So I would put the trade finance gap at, say, 10 to 15% of the merchandise trade exports, which will be, say, about $50 to $100 billion. I think we can pitch the numbers somewhere close by that. So our focus is on how do we create a factoring environment both within the domestic India as well as in IFSC to support the exporting community. So the efforts by the IFSC has been towards that end, and we have taken a lot of measures towards that, and we believe that growing the factoring industry in several ways is the way forward. So when I say that, I think the banks also have got a very important role to play. I mean, I think we have seen in the last year, for instance, the total the trade finance extended by the international banking units in IFSC was $50.6 billion. So we believe that the banks are perched at the top of the pyramid. I think they look at the corporates and the larger among the mid-sized companies and so on and so forth. Whereas the SME contributions are done by companies like 360TF. And so we believe that this marketplace, and especially the domestic Indian marketplace, needs to become more inclusive by supporting the SME agenda in a bigger way. So towards that end, I think our IFSC teams have worked intensely with the policymakers in Government of India. And in the last year, I think, as you pointed out, an interest subvention scheme for providing a subvention of nearly 2.75% of the interest cost borne by SMEs engaged in international value chains and availing export factoring finance from IFSC entities has been provided under the Niryat Protsahan Yojana of the Ministry of Commerce. Similarly, I think so this disbursement of subvention amount happens directly into the exporter's bank account. I mean, and the direct disbursement of the subvention amount into the exporter's bank account all enable SMEs to come into exports in a big way. So we would want this ecosystem to expand, and I think there is a great opportunity here. Similarly, I think let me also say that the meetings like this provide a lot of feedback on what needs to be done. So last year we had a Chintan Shivir, and many of your 360TF and other factoring companies and other ITFS platforms provided a lot of inputs, and one of them was about the provision of capital relief for the factoring companies. So we have issued a circular providing capital relief for factoring transactions undertaken by the IFSC finance companies. And this measure is aimed at recognizing the importance of factoring as a financing instrument and facilitating greater participation of regulated entities in supporting the credit requirements of businesses, particularly MSMEs. This circular also recognizes both widely accepted credit risk mitigation mechanisms in factoring. It permits factors to mitigate credit risk either through trade credit insurance or through internationally established two-factor models, such as those operated by the framework of FCI. Banks in IFSC, being branches, may also avail such capital relief, subject to the prudential norms of the home country regulators. So there are many foreign banks here who can certainly avail of the capital relief. We are also working with the trade insurance, with the insurance companies and the reinsurance companies to make this happen. The total value of trade finance transactions undertaken by IFSC entities during 2025-26 amounts to nearly USD $54 billion. Further, the value of trade finance transactions undertaken by these entities in April to June, the first quarter of this financial year, amounts to nearly USD $15.3 billion. With the rapid growth over the past few years, it is expected that the GIFT IFSC will play an important role in contribution to India's ambitious target of achieving USD $2 trillion in exports by 2030. The trade finance ecosystem in GIFT IFSC comprises 42 banks, 21 foreign banks and 21 Indian banks, 6 factoring companies, 4 digital finance trade finance platforms, we call them ITFS platforms, and 39 insurance offices. Further, the IFSC ecosystem has been at the forefront of meeting India's cross-border finance requirements, emerging as a key enabler of international financial services and facilitating seamless access to global capital. As of June 2026, more than 1,250 plus entities across banks, capital markets, insurance, fintech, aircraft leasing, ship leasing, bullion exchange, and many others have been registered with IFSCA. The financial services market is gaining momentum with healthy and growing participation of domestic financial services institutions. The ITFS platforms are aimed at facilitating efficient financing and settlement of international trade transactions. We have been working with the banks to enable them to use the ITFS platforms to bid for the invoices. So this will enable the smallest among the SMEs to actually to raise money in an efficient manner. During 2025-26, trade finance transactions amounting to USD $61 million and approximately 1,700 transactions were facilitated through the ITFS platforms, with the volume projected to increase to about $300 million by 26-27. Approximately 90% of the transaction value is financed through these platforms is attributable to SMEs, underscoring their pivotal role in expanding access to trade finance. This aligns closely with India's export promotion mission, which places strong emphasis on availability, affordability, efficiency, and timely trade finance for SMEs. While establishing a presence in GIFT IFSC is not a prerequisite for participation on these platforms, factoring entities all over the world can choose to establish operations in IFSC and obtain registration as factors, as they would benefit from a compelling value proposition including tax efficiency. A physical presence in IFSC provides entities with closer access to the rapidly evolving financial ecosystem and greater proximity to the market. Coupled with tax incentives available in IFSC, the offerings becomes more competitive. I would urge insurance companies operating in IFSC to develop innovative and competitive trade credit insurance products that can effectively support the growth of which enables the factoring companies to undertake multiple activities and launch multiple products. The insurance companies such as ECGC and the other private and public sector-led insurance companies have helped in developing competitive trade insurance products, but I think there needs to be more. Similarly, there are a few reinsurance companies which also do reinsurance for trade credit insurance. I would encourage funds specializing in trade credit to actively participate in ITFS platforms and to explore opportunities to provide refinancing support for trade finance activities undertaken by factoring entities. Greater participation from these stakeholders will contribute significantly towards deepening liquidity, strengthening risk-sharing mechanisms, and establishing GIFT IFSC as a globally competitive trade finance center. Over the next several years, we intend to focus on several measures, which include, number one, access to refinancing from the IBUs and multilateral development banks for companies like 360TF, because providing a very robust and significant sources of debt financing is a very important way for companies like 360TF to leverage on the capital they have and to expand their lender base, the borrower base. So I would expect that, in fact, we are in conversations with the Asian Development Bank and the New Development Bank and other multilateral banks to look at such kind of lines of credit. In fact, I'm happy that some banks like Standard Chartered Bank have actually been able to access lines of credit from the multilateral development banks. So we also should work with the African Exim Bank also to see how we can support the trade in the Africa-India corridor as well. Second agenda would be to also to work on strengthening global factoring partnerships. So collaborations with factoring institutions across jurisdictions under established international networks such as FCI to obtain credit guarantees and facilitate cross-border factoring needs to be expanded, and I think that is where I think IFSCA will also focus on. The third topic will be to also to focus on enhancing the availability of data for credit assessment. So harnessing alternative data sources such as DST, tax return information, the e-commerce sales data, digital payment histories, and other verified transactional data raises the trust and confidence levels in the markets, enabling more participants to enhance increasing sums of money to exporters. So in fact, the Honorable Finance Minister last year in this budget, I think, announced the development of the Bharat Trade Net, which will integrate the sources of information and the documents that are available in the public information systems, such as IceGate, EDPMS, IDPMS, and the DGFT's export and import platforms, and so on and so forth, GST systems, etc., enabling this data to be made available to financial sector companies. Similarly, I think we are also focusing on ensuring that the Government of India is also focusing on certain measures such as bringing in electronic documentation systems. So there is a model law on electronic transferable records which is being built by the Government of India, and the Commerce Ministry is working on it. And let's hope that towards the end of the year, this law will see the light of the day, enabling greater trust and confidence in the trade finance markets. I would also urge factoring institutions, ITFS, and other stakeholders in IFSC to increasingly adopt technology, including AI, to enable them to be capable of analyzing large volumes of trade data in real time to detect fraud, suspicious transactions, and automate the compliance processes relating to AML and CFT. These innovations not only improve operational efficiency, but also reduce the risks in the lending. And I'm happy to hear that 366TF, though the operations are small, has enabled to have a zero NPA existence, which I think is very creditable. So congrats to you, and let it be that way as you adopt more and more technology to ensure that your lending is safe and secure. I will conclude by saying that in the light of India's growth in the recent years, with the country's exports during the previous financial year scaling up to about $860 billion. We expect that a GIFT IFSC will play a very important role in the supporting the trade finance requirements for the Indian economy, and also to support the various FTAs which India is signing with various partners. So I would encourage factoring institutions and trade finance stakeholders across the world to leverage the opportunities that India offers by looking at the business opportunities, either to set up operations in IFSC, or tie up with institutions like 360 TF. I also encourage the IBUs who are present here to work on lines of credit, and including organizations like Exim Bank, to work on lines of credit for factoring companies, so that I think the operations in factoring can scale up significantly. So given the ambitious target that India has set up for Viksit Bharat at 2047, and also the export target by 2030, GIFT IFSCA will continue to play a very important role in supporting this vision, and enable trade finance transactions in GIFT City to translate to a significant level that actually obviates or reduces significantly the trade finance gap that exists in India. So thank you, and wish the conference all success, and look forward to hearing from 360 TF the important recommendations at the end of the day. Thank you very much.
Thank you so much, sir. It's so heartening to know that the regulators are so open and willing to engage to really make India the center of trade finance, given the international conditions. Can I please invite Mr. Vimal Shah to felicitate our amazing guest speaker here, and Pankaj and Vikram, please also join us. So, global reset is good. Complicity and strife can sometimes lead to very, very revolutionary changes, and I think India and GIFT City is really the example of this. Let's move on to our next legendary warrior in the Kung Fu Panda series, who I think has what many would call an ultimate long-term investment strategy. Not in stocks, not in bonds, not real estate, nor crypto. He's been invested in GIFT City since 2008. And I say it's delivered some pretty impressive returns. From blueprint to skyline, from disbelief to belief, he's helped transform a bold vision into India's first international financial services center, to now leading its development and global outreach as Executive Director at IFSCA. Mr. Dipesh Shah has been at the heart of this remarkable journey. Please join me with a bigger round of applause, Mr. Dipesh Shah.
Good morning, everyone. I must compliment the organizers for 9:30 start in Gujarat, in GIFT City. It's a very challenging task. I came at 9:31 and the program already got started. So I was really happy to see this. On dot 9:30, a conference in Gujarat, in GIFT City getting started. It's a remarkable achievement by the organizers. I'm not going to put an opinion poll as to how many Gujaratis are in the room, because I'm sure there are very less number. At 9:30, I don't think they will be in this room. But when I was invited to speak on this, I was thinking about how do I begin today. And I realized that whenever people hear about this word trade finance, they always feel that it's a very niche subject. But let me give you a simple test. If you had this morning coffee, or you used your phone,
or you, for that matter, had your breakfast, or even wore your clothes and came by car to Gift City, I think you invariably use trade finance. And that is the beauty of this particular industry. It is actually invisible, but it is working seamlessly within the ecosystem. And I think that is what is remarkable to see, this invisible industry being made visible by 360 TF. You are really bringing the focus on trade finance and making it really work. I think it's really a great achievement with both the promoters here, Vikramji and Pankajji. In fact, whenever I see them, I always see them trade finance coming, because they are synonymous to these two words, trade and finance. I think whenever we have met them, they only talk about trade and finance, they do not talk about anything else. So I assume that this is what was rightly said in the opening comments, that you live and breathe trade finance and is visible in your approach also. But friends, I have a different challenge. Whenever I've been invited to speak at GIFT IFFC, I face a very unique challenge. People expect me to speak about the future, but after being associated with GIFT since 2008, I inevitably actually talk about the history. And whenever we began, in fact in 2008 we began, there were more presentations than buildings. There were more vision statements than infrastructure. And certainly there were more questions than answers. In fact, some of them asked us, can India really build a competitive international financial services center? Are you guys serious in what you are trying to build in Gift City? These were the questions, and probably I think the answers were very difficult to find. But I think it was remarkable to see the vision and the commitment at the top to make sure that the Gift City delivers on what the concept and the vision was. And probably today when we are seeing this, sitting in this room and seeing people from global banks, from trade finance, from fintech and innovators all together, I think I have no doubt in my mind that the vision which was created by the Honorable Prime Minister, who was the Chief Minister at that time, is really seen in action now with the commitment of so many people coming from all across the world to make this possible now. My job is to maybe probably in 7 to 10 minutes, I already can see that you are running little late, and I could see the pressure on the moderator to every time look at and say that, look, your time is going to get over. So I will do it in 7 minutes and try and complete and present few slides which probably will give you an idea as to where we stand. Friends, I think the objectives of GIFT IFFC is very simple, and that's where we stand. I think we should always keep our eyes on the objectives, and if we do that, I think we'll be able to succeed. How to onshore the offshore, this is really gaining momentum. Chairperson of IFFCA mentioned 1250 plus firms now in the ecosystem and many more growing. In fact, every month, at least 30 companies keep entering the IFFC zone now. We have become a very dominant gateway. Probably trade finance is one such factor of huge potential been seen in this particular field of the capital coming and capital going out from Gift City. Coming in and going out as a gateway, it has become very prominent now. Very niche areas like aircraft leasing, ship leasing, fintech, global treasury, they all are gaining a very firm footing in the Gift City, which many of you would probably see some numbers after a few slides. High quality employment is now been visible, 28-30,000 people. In fact, I see a lot of bankers in this room. Only question for in my mind is, last I met him in X bank, I hope he is not in Y bank now, because they keep, I keep seeing the cards every 3 months, 6 months, 1 year, they are moving in their career at several places. And last but not the least, I think the major exporter of financial and technology. In fact, all of us know that IT has been the major exports for India, but the financial services has actually the potential to surpass the IT exports if it is really done well through the regulations and through the commitment of the institutions that we see in Gift City. Let me today start straight. I think in India we have a habit of, starting differently. We will always come to the main point last, but I'm bringing the trade finance slide first because this is what you are here for. Why we are all here, and probably you can see the slides, the numbers. the international banking units which are present in GIFT City, that's already created from in last 3 years from $12 billion to $13 billion now. Trade finance disbursement by the IFFC banking units has moved from $35 billion to $50 billion now. And you can see the number of ITFS transactions from 281 to 2487 now, which means from $12 million to $105 million is what you can see is already transacted through the GIFT City now. And if you see the latest number of Q1, which is as on June 2026, the trade finance disbursement by the IBUs has already crossed $15 billion. We've already seen number of transactions to reach 2857 now, and almost $126 million of value of transactions of ITFS platforms happen in the IFFC zone. So I think what this represents is this is becoming a reality, and trade finance will become one of the fastest growing services within the IFFC zone. So keep an eye on what is happening in the trade finance particularly. Chairman spoke about banking. We are almost 41 banks now, 21 foreign banks, 41 total banks, 21 foreign banks. And you can see the banking asset size has now touched $120 billion. Cumulative transactions in last quarter itself, which was a Q1, is $190 billion, and almost $111 billion of cumulative derivatives been traded in the IFFC zone, including the NDF. So these volumes are now becoming increasingly more and more in the IFFC zone. The same numbers, but probably represented in the different slide, but giving you the similar idea that how this banking asset size is moving. You can also see on the right how the deposits are moving from $3 billion to $7 billion from corporate deposits, and now retail deposits are making their inroads from probably $0.6 billion to now almost $2 billion in the GIFT City in last 2 years. Even this retail ecosystem and the retail deposits are also moving very fast. The capital market vertical has been moving quite fast in terms of the transactions, $105 billion average monthly volumes happening on the stock exchanges, almost $2 billion of debt listing in the first quarter of 26-27, and almost $16 billion of open interest as of June 2026 on the exchanges operating in the IFFC zone. So this also gives you an idea as to how the things are moving on our capital market side. You can also see large contracts being traded and also the debt listing on the IFFC zone. In fact, in the first quarter, there are 10 listing, and in the last quarter of 25-26, almost 16 new listing had happened on the IFFC stock exchanges on the debt side. We're also seeing fund management, which is one of the important industry, and we always keep talking to Vikram and Pankaj that, look, this is a very important area that you should develop. Why can't you create a trade finance fund within the GIFT City ecosystem? And probably at some point of time, this may become a reality. We have almost 217 fund managers, 360 funds, and almost $39 billion of cumulative money being raised and deployed $19.5 billion within the ecosystem. So you can see the funds becoming a reality with almost 9,500 investors from 70 jurisdictions. They are invested in GIFT City, which is investing into India and outside. So this again, as I said, has become a major reality in terms of the businesses. We have seen an healthy activity in the fundraising, almost, as I said, from 39, which was 15 to $40 billion, and from $7 billion to almost $20 billion of the funds being raised and deployed within the IFFC ecosystem. We also seen finance company, I think it was spoken about 360 TF holding some licenses. You can see almost 98 finance companies now in the GIFT City ecosystem. $73 million of credit outstanding as on June, and almost $6 billion of loans and advances by the global and regional treasury centers within the IFFC zone. So this again, I think, is a very important activity started happening from the IFFC zone. I will urge all of you to keep an eye on this particular business segment, which is growing very rapidly in the IFFC zone. I think in terms of the lease of assets, aircraft assets have almost 412 assets been leased from GIFT City into India. and 42 ships have been leased from GIFT City into India and outside. Now this again is a testimony of a product which was not visible and have now become a reality. So I will also urge you to look at this new opportunity emerging from GIFT City for several businesses. Last but not the least, I think there are quite a number of sustainable finance transactions happening. Almost $6 billion by the credit by the banks. ESG labeled debt is almost $500 billion in the first quarter, and ESG funds investment is almost 27 million as of March 2026. Large number of, as I said, the aviation asset size and ships are all being leased from GIFT City. Insurance, which was an important area which was mentioned by the chairman, that 37 insurance firms, 33 intermediaries, $419 million of premium written out of the GIFT City in the first quarter of 26-27, and almost 127 million of the insurance intermediary offices have transacted through the IFFC. We also have now 4 foreign offices, foreign universities in the IFFC zone. We have 2 from Australia and 2 from UK running their universities in GIFT. 127 TechFin and ancillary service providers are part of the ecosystem now, and almost 98 to 100 applications been approved in the first quarter by the administrator within the IFFC zone. So this all probably is a testimony as to where the GIFT is moving. I don't want to take a lot of time, but I'm sure with this data points, you can now understand that GIFT has become reality from all aspects. And probably the area in which you have today come to GIFT City on trade finance is the most promising sector which is upcoming from the GIFT City. Thank you very much, friends, for having me here, and all the best for today's deliberations. Thank you.
I should congratulate you for being so on time. I could have loved hearing more though. Can I please invite Mr. Rajesh Sumani to felicitate, sir, can we please have you? Felicitate our speaker, and Vikram and Pankaj again, please. So Mr. Dipesha has given us all a lot of homework, right? We have a gold bullion deposit as well, right? Where is the key? Where is the location of that particular article? Everybody here wants to know that. Once we invest. I think we've been given a lot of homework now. 360TF has to set up a fund for trade finance. We have to figure in how to increase India's sort of factoring industry. Also, we have to help with the exports of $2 trillion that India is aimed at. I think we've had a very, very intensive morning. Some very, very interesting discussion points on where the world is evolving, GIFT City. So I'm going to let all of you take some time off, reflect and absorb. So we'll take a short break, but please do the reflection and the absorption. And be back in 30 minutes, because I have given an LC to 360TF that all of you will be back, and that expires in 30 minutes. So see you all in 30 minutes. Yes, we can clap.
Check, sound check, 1, 2. Hey, sound check, 1, 2. Hey, check, sound check, 1, 2. Hey, check, sound check. Check, sound check, 1, 2. Hey, sound check, 1, 2. Hey, check, check, sound check, 1, 2.
check, sound check. Sound check, 1, 2, check. Check, sound check, 1, 2, check. Check, sound check. Check, sound check.
Hello, hello, mic check. Hello.
Check.
Hello. One, two, three.
Check, sound check. 1, 2, check. Check for sound. 1, 2, check. Sound check. 1, 2, check. Check for sound. 1, 2, check. Check. Check, sound check.
Hello everyone, can we please start coming in? Otherwise, I will have to pay a penalty to 360 TF for the LC.
एक बार स्टार्ट कर मैं चेक कर दूँ
स्टार्ट कर लो जो करना है करो शुरू करें 11:25 तो हो गया यार Can I please request everyone to take their seats? And whoever gets in more people from outside will get a gift from 360 TF. Guys, come on, my LC, I will have to pay money. Come on, can't do this to me. Oil pipeline is yours. An amazing session now. Please, everyone, get up. You don't want to miss this. Okay, so living up to the praise of starting on time, let's go into our next session. We'll dwell a bit more on GIFT City's uniqueness and what really is the scale of potential collaboration between the GIFT City and the world, especially for emerging global South hubs like nations in Africa. And who better to put it into perspective than Mr. Vimal Shah, who's as charismatic as he is knowledgeable, as passionate as he is world-wise, and as entrepreneurial as he is a builder, who has built, expanded, and grown his business in multiple countries, and is well-versed with the elements of the ecosystem, regulation, capital, financing, SME support, that are required to make a trade business work. Something he said last year stayed with me, that this jurisdiction has become India's gift to the world for facilitating cross-border linkages and anchoring many growing economies. So without further ado, let's hear from Mr. Vimal Shah, Chairman Bitco Group, East Africa's leading manufacturer of consumer brands, on why the GIFT City.
Thank you very much. Good morning, everyone. Good morning. I thought there were gifts around, so be a good energy. But it's a privilege to be here amongst you in GIFT City. And I stand before you as an entrepreneur, right? And not as a banker, as most of you are, or not as a trade finance facilitator. But for more than 40 years, I have built, along with my father and my brother and our team, factories, brands, supply chains, people, systems, and institutions. And that journey has taught me that finance is not merely the movement of money. Finance is the movement of belief. It is the moment when one person says clearly, I trust your idea. I trust your institution. I trust your promise about tomorrow. So today, I want to ask you two questions. Why Gift City and why now? I know Dipesh Shah spoke about it, the chairman also spoke about it, but my question is slightly different. Why is it now and why is it required? But beneath both of these questions lies a deeper question. What are we choosing to compound? And I will expound on compound. I think the issue around this is that when we look at Indians or India abroad, it does create huge, immense value. And I think overall, when you look at it, where does that value get housed? If you went to your KPMG, PwC, EY, consultants and all of them, they would tell you, you know what, if it's IP, Delaware, Ireland, Nevada, or other places, used to be Switzerland for numbered accounts and stuff like that. And I think this, when you look at that, it's different. And again, I would say this 40 years ago, when my brother and I approached banks in Nairobi to finance a factory, we were told, trading may be for you, but manufacturing is not. It was left for the multinationals. And we were getting into FMCG, and there was somebody who told us that Unilever could kill you. So we had very little capital, but we had courage, and we built anyway. And that has taught me, over the time, the first law of entrepreneurship. Courage creates motion. But courage alone does not build an enduring enterprise. Cash keeps it alive. Cash flow. And systems make excellence repeatable. And ultimately, it's trust that opens opportunities and culture that allows an enterprise to continue after the founder, patriarch founder, is gone. So when you talk about entrepreneurs, they create businesses, we create businesses, but an institution builder asks one question: will this enterprise endure without me? And I think I talk to many patriarchs and they say, yeah, you know, I'm 70, 75, and I don't know. So today, if I look at it, this statement itself, India creates technology, companies, brands, algorithms, and intellectual property for the world. Yet too often the ownership and the capital and the monetization of this IP is housed elsewhere. And I come from Kenya, born and brought up there, and my father's born and brought up there, so I'm indigenous African. But a lot of times when we go, and I've got M-Pesa was not introduced, but it was created as airtime as a currency. And that concept, when the young person who developed it was told, oh, you know, take it to Delaware, take it to Ireland. And then the IP was taken offshore, and Kenya lost it, right? So I'm just saying this is the concept that I'm talking about today, saying India has huge amount of this available today. So that opportunity, and thank you, Dipesh Bhai, for being here. I think the important issue is that that is what is the opportunity before Gift City. Not only to finance Indian value, but to become its trusted global home. And that's housing, right? And that's important to say, house it here. So I think when we look at the typical question that comes in is, why do global investors choose Singapore, London, or Zurich first? Why do they instinctively think of that? I talked about it, Delaware, Nevada, Singapore, London, Zurich, Dubai, or Mauritius first. It is tempting to say tax rates. You know, most people talk about it's the tax rates. But capital is more intelligent than that. Serious capital does not ask only, what will I save this year? It actually asks, can I trust this jurisdiction for the next generation and for the generations to come? And this is the enduring question about what happens when people talk about jurisdictions. Will the rules remain understandable? Will contracts be enforced? Will disputes be resolved independently and quickly? Can capital enter, operate, and exit with clarity? Capital does not move or ultimately move to the lowest tax rate. So this whole thing that people have is a tax haven. It doesn't happen that way. But capital moves to the highest confidence. Tax can attract a transaction. Only confidence can retain a relationship. And enduring financial centers are built through relationships compounded over decades. So I just want to bring this introduction that I've curated over the last 1 year about compounding. And I think when you look at all these, you can read for yourself. I'm not going to read from the slides. But the point is, it's just not tax. And most people think it's only tax. It is a lot of other things. So what I'm talking about here is what compounds wins. That's my statement, right? Now, you all know compound interest, right? The central philosophy of my life is this 3 words. We all understand compound interest. Compound, get 10% per annum. Work it over 30 years and you'll see amazing results. Even if you just invested 100,000 rupees today, in 30 years' time, that's going to be billions, right? Small returns repeated consistently become extraordinary outcomes. But money is not the only thing that compounds. And this is what my slide is going to talk to you about. Trust compounds. Integrity compounds. Reputation compounds. Knowledge compounds. Culture. Culture is so important. That compounds. Capital compounds. Institutions compound. And eventually, civilizations compound. However, I just want to put this to you, even negative things compound, right? So, delay compounds. If you delay anything, it compounds. Confusion compounds. If you have a lot of confusion, it's going to get compounded soon. Complacency compounds. Broken promises compound. So the question is never whether something is compounding. Something always is compounding, right? Whether it's positive or negative. The question is, what are we allowing to compound? For an entrepreneur, one courageous decision may start the journey. For those who are in employment and thinking, should I leap off, should I go into my own business or not? And I've talked to many, and they talk about it, oh, hang on, wait, let's see. I'm in my comfort zone, and that comfort zone is compounding too. So one courageous decision may compound, but it is thousands of disciplined decisions that create an enduring enterprise. And I just want to say this, that when you look at all this, today, Gift City is no longer merely an aspiration. The foundation already exists. We've heard from the previous speakers, more than $111 billion, right? That's what I've been told in banking assets. More than 1,100 registrations and authorizations, more than $39 billion in fund commitments, and more than $112 billion in monthly exchange turnover. These numbers matter. They show motion, they show scale, they show possibility, but numbers tell us only what has accumulated. They do not yet, and I will just use the word yet, tell us what has become instinctive. The next milestone is not simply more assets, because these figures, you can add 1 0 or 2 zeros there. It's not more registrations, it is this. When a global founder or investor or family, like I come from Africa, and I think in Africa we have the same thing, I've seen that even in other countries, when they ask a question, where do I house my capital, my intellectual property, or my succession? Because there is going to be a huge amount of capital being transferred from one generation to the next generation. Where should I house it? Do my children want the same sort of hassles as they would get in a jurisdiction. And I think this is where I raise this question. Does Gift City become the first thought? I don't want an answer. I'm just saying think about it, right? And I'm talking about from Africa or from wherever. I think a lot of people here from Dubai. Does it become the first choice? So I think the important point is not just figures, but it's about trust. This is my central theme about trust. And if you're a banker, you know it. It's all about trust, right? If you're in finance, it's all about trust. So how does this happen? Through trust. I think the key issue is trust reduces friction. When friction falls, decisions move faster. And of course, when decisions move faster, opportunity expands. In any enterprise or enterprise, low trust creates meetings after meetings, approvals, duplication, protection, delay, auditing, internal auditing, audit. In our Kaizen language, we call it audit is a muda. Muda means non-value adding activity. So for auditors, I'm saying, sorry, but auditing is a non-value adding activity. If the trust was there and the transaction was clear, everybody's intentions were okay, there would be no need for that. So I just want to say that high trust creates clarity, accountability, and speed. The same is true of a financial center. I want to zero in and can bring it back to Gift City. Trust lowers the invisible cost of doing business. It reduces the time between intention and execution. So trust is not a soft value, but trust is an economic infrastructure. And this, ask anybody with succession planning or discussions about where to do, what to do. Trust is this economic infrastructure. So for banks here, for funds, for regulators, and for the platforms, the real question is not only how much capital do we manage, because I showed you the figures. You could say figures have gone 10 times or whatever. It is how much confidence do our actions create. Because the minute that happens, it becomes clear. So when I was young, my father asked me one question every day. Not how much did you sell as products, not how much profit did you make. He asked one thing. Did you do the right thing today? At that time, I thought he was teaching me morality. Today, I understand that he was teaching me institution building. But the most valuable asset is not always on the balance sheet. Because that issue called trust, how many of you accountants can see it on your balance sheet? It's not there. It's not a tangible product, but it is there. And this is where it is trust. Every institution has an invisible audit. Do customers trust it? Do employees trust it? Do investors trust it? Do counterparties trust it? And do they believe that it's the world that will survive any pressure? Strategy may help you. I mean, your AI will give you a strategy within seconds or minutes. It can win a quarter. It can win you a financial period. But trust helps you endure for generations. And if Gift City wants multi-generational capital, it must offer multi-generational trust. That's all I'm talking about. And I think that's the important point about what is happening. So when we look at this, tomorrow's wealth needs a home, and it needs a housing. And I'm talking from a global reset perspective. Families are not planning only for returns. They are planning for continuity. They ask, where can wealth be governed responsibly? Where can succession be structured clearly? Where can ownership pass from one generation to the next without uncertainty, without destroying value? This is also our test for any enduring enterprise. If you're an enterprise anywhere in the world, it's the same thing. Family-owned, family-managed companies and family-owned, professionally managed companies have the same thing. And the founder's highest achievement is not to remain indispensable. It is to become progressively unnecessary. This may sound strange to you, but the CEO or the patriarch needs to become progressively unnecessary. Not irrelevant, but unnecessary to the daily continuity. That requires systems, that requires governance, that requires capable leaders and culture. Family wealth requires the same architecture. Gift City can become the place where entrepreneurs do not merely accumulate wealth, but they convert their wealth into stewardship, continuity, and legacy. And this is another aspect that a lot of people forget in my age mates who talk about, this is my company, I created, I built it. We're all stewards. We're all stewards. What does a steward do? Make sure they take it and they pass it on to the next generations in a nice manner. So IP or intellectual property is the new factory. It's not about a big refinery and factory that we build up. It's the factories of tomorrow are not only made of steel. They're made of what? Patents, algorithms, brands, designs, data, formulation, and platforms. India creates these assets every single day. If you look at all the youth in India, amazing IP, amazing being created. But the creation is only the beginning. Can an entrepreneur own the IP here in India? Because they want to monetize it later in terms of international revenue. Can they value it here? Can they finance it here? Can they license it globally? Can they protect it credibly and monetize it efficiently and then transfer it securely? If those answers are clear, value can compound here. And that's what I'm talking about. The premise for Gift City is not just about new industries. It's about how do you house all that and give it a home. But if they are uncertain, then ownership will continue to migrate elsewhere. My point to you is India should not only export talent and ideas, India should house the value created by them. And this is my main central theme about can we house it here so that Gift City is where it's housed, right? And when we talk about today's topic of trade finance, trade finance is where trust becomes working capital. A purchase order is only potential. Trade finance converts that potential into raw materials, production, employment, shipment, and payments. And banks who are here are therefore not merely lenders. Banks are institutional trust multipliers because their premise of a bank is all about trust. Check out when a bank is mistrusted, like that happened in Singapore or somewhere else where the whole queue outside the bank is long because people want to take away their deposits. But then banks, what do? They validate counterparties. They price risk. They create liquidity. They allow an entrepreneur to act before cash has arrived. And today, digital platforms. And none other than India has got amazing digital platforms. And I think digital platforms, even like 360TF, right? Today, if we look at it, they can help connect corporates globally, banks and financial institutions more transparently and efficiently. So when we look at this, the opportunity for Gift City is to multiply such ecosystems, right? Digitize trade, reduce friction, unlock liquidity, build trust, not as 4 separate objectives, but as one compounding cycle. So when we look at this, it's clearly working capital that trade finance or that's doing right now. But the experience must feel integrated, right? When you do all this stuff, the investor should not have to understand the architecture of government before being allowed to invest. The entrepreneur must not repeat the same identity documents and explanations across multiple institutions. Today, this whole concept of KYC, there's something called eKYC, and you do it single. I think India is a serious point of Aadhaar and UPI and done fantastic work on that. So I think the promise should be very simple. One KYC, right? This is the premise for Gift City, to make it clear so that everybody has one KYC, one dashboard, one accountable journey. Behind the front door may sit the regulator, the bank, the fund, the investor, the trade platform, and the IP structure. But to the user out there, say I'm in Kenya, to the user out there, it must feel like one ecosystem. Simplified digitalization, because we're agnostic about location in IT right now. We can be anywhere in the world, and everybody here has probably got a device or two, and that becomes your office. So digitalization is not putting an old process onto a screen. It is redesigning the process around the person using it. That's how technology turns into trust. And I think this is where we look at this whole concept. The minute Gift City does this, we will have something we call global confidence, right? The global confidence issue, this architecture, of global confidence. First, it puts in predictability. Investors can actually accept strict rules anywhere in the world, but what they cannot accept is unknowable rules. Second, grandfathering and consultation wherever possible. Long-term capital needs protection. And I think you can see all the pillars. I know they're sideways, but you may have to read sideways. The point is, it needs to have that protection from retrospective uncertainty. We can't have, oh, you did this, you set up here in Gift City, and now, after 1 year, the rules have changed. This needs long-term predictability. And I think this is where, again, world-class, arbitration results. A jurisdiction where you can get contract law enforced. A contract is only as strong as the confidence that will be enforced in it. And fourth, the whole family office. Family office is where we work from. And the family office capability to say, fine, I have an office, a family office in Gift City, and I headquarter here. It's not just merely for investment products, but for succession governance, for philanthropy, for continuity, and fifth, a complete IP domicile here, right? Ownership, valuation, financing, licensing, protection, and monetization, right? And sixth, capital mobility. Legitimate capital, I'm not talking about illicit trade here, so do not get me that, oh, it's illicit. Legitimate capital must be able to enter, operate, and move transparently. And seventh, the digital execution of everything. Speed, visibility, accountability, and eighth, the service culture. The service culture here needs to be far more proactive, far more faster. And a regulator must protect integrity. I'm not saying that at all, that it is not protecting integrity. It must protect integrity. But it can protect integrity while being responsive, proactive, and solution-oriented. Rules create structures. Culture creates confidence. And I think this important point is to drive home the point of saying that do not just trade more, build together. And the larger opportunity, it's not about doing more, it's about building together. And since I come from Africa, I'm talking about India, Africa, the corridor. You talked about South-South cooperation. I think there's a lot that can be done here. It should not remain as Africa is the only buyer and we are the sellers, right? Because I think the chairman talked about just exporting to those countries. I think it's about we should become co-builders of supply chains, manufacturing capacity, technology, markets, and Gift City can become the trusted financial bridge for that relationship. Banks can finance that corridor. I think banks here do that all over the world. Platforms can digitize it, and the platform housing can be done here. And I think this is important. Insurers, I think it was talked earlier, insurers can de-risk the model. Entrepreneurs can build through it. And artificial intelligence today is available. It can make it more intelligent. My word for AI is not artificial intelligence, it's augmented intelligence. So it's not artificial anymore. It used to hallucinate before, not anymore, based on your prompt engineering. So AI does not replace entrepreneurs. It replaces excuses of non-performance. It can reduce documentation delays. It can improve your risk assessment. It can detect fraud. It can translate languages and make smaller transactions more financeable. That's the whole beauty of having large amounts of data and not knowing what to do with it, but the data set that AI loves is there. So technology without trust also only automates doubt. The real breakthrough comes when technology, capital, and confidence compound together. So I'm bringing this back to compounding together. And I think the important point here would be, what are we allowing to compound? Oops, not moving. It's not compounding. Have I lost it? Oh, there we go. So my question to all of us is, what are we allowing to compound? I return back to the discipline of why. Ask that question, why. Start with why. Why is capital still housed elsewhere? Because confidence has compounded elsewhere. Why has confidence compounded elsewhere? Because predictability, service, legal certainty, and experience have repeated consistently. The question I ask now is to all of you here, why must Gift City act now if it really wants to be relevant? Because today, geopolitics, and I think everybody talked about geopolitics and what's happening. It is rearranging capital all across the world. AI is rearranging ownership. Families are also rearranging wealth today, right? Across generations, across entrepreneurs, and they're choosing various jurisdictions. People are looking for where to have a new jurisdiction. And today's wealth transfer is happening to the Gen Z, Gen Y, whatever. They have a very different mindset. They're looking for where can I make it easy, safer, and really, where will my value live tomorrow? But the final question is not about why is the world like the way it is. It is about us now. And I think the thing is, what must change inside our institutions here? And are we compounding clarity or are we compounding complexity? Are we compounding speed or delays? Are we compounding trust or suspicion? Service or control? Integrity or convenience? The answer will determine what Gift City becomes. So I think this is where I want to end on this note to say, Gift City's moment is now. There has never been a better time to live than today, right? And of course, tomorrow will be better again. But the point is today. The point is, Gift City moment is now, right now. Not because of other financial centers, they're weakening. Not because India is strengthening. And not because India has the talent. Not because of the technology and entrepreneurship and the scale. But I think a global diaspora. And I want us to look at all the flows that we don't know are happening in Mauritius, Dubai, Singapore, Zurich. Because I think India focuses only on Indians and Indian wealth and Indian exports. I think Gift City needs to look at, can we attract those flows to come here? So the ability to combine Indian values with global standards, but the potential to bring it up, it just does not compound by itself. I think this requires now disciplined action. A business creates transactions, but an enduring enterprise creates capability. So a financial zone attracts activity. An enduring institution earns trust. And businesses create wealth, institutions create civilizations. So my final note is that let us build a Gift City where capital feels safe enough to remain, where IP feels protected enough to grow, and where entrepreneurs, right, feel understood enough to build, and where families feel confident enough to plan, because beyond their own lifetimes. And I think this is where we all go to say, fine, what's my next generation? That's a cultural issue that we have. So I think this is something that we really need to build on. So lastly to say, trust compounds, confidence compounds, capital follows, and in finance and in entrepreneurship and in institutions and in life, what compounds wins. Thank you. Thank you very much, and really keep compounding.
Thank you, Mr. Vimal Shah. I'm compounding the learnings. Can we just have you here for 2 minutes? Mr. Shah, we'll just have you for 2 minutes. I'm compounding the learnings that I've gotten from this session. Can I please invite Mr. Dilip Masand and Pankaj and Vikram to felicitate this amazing speaker? I think we've been posed and answered a lot of questions today morning. I think Mr. Shah raised the point whether India can build a greenfield financial services city, and that's a yes, sounding yes to that. Now the question is, are we building trust to create the entire ecosystem, including housing IP? I think that's a beginning of yes. Will we be one day the conduit through which all of the financial centers interact? Inshallah. Let's move on to now, like a change of pace. We will have our first panel, doing business in a fragmented world, navigating growth, liquidity, and cross-border expansion. If the introductory notes drove home the point about fragmented economic growth, Changing Trade Routes and Economic Uncertainty, this panel will focus on how to do business in a VUCA world. What will it take for SMEs to finance growth, manage working capital, and successfully compete in global markets? I was recently addressing a resilience conference for MSMEs in India on the Middle East events and realized the intricacies of the supply chains. There's an essential ingredient in making soap that's 95% imported from Iran and stopped due to the Strait of Hormuz closure, leaving the manufacturer to rush around, stocking inventory, looking for alternatives, diversifying supply chain, none of which happens overnight. So this is, of course, an extreme case, but symptomatic of the very big challenges facing our small and medium enterprises in today's world. This panel will discuss the financing and treasury needs of the SMEs and its solutions across financial institutions, digital trade ecosystems, fintech, and alternative financing. Can I invite our moderator, Mr. Vikram Lodha, to please take the stage and introduce the panelists?
Thank you, everyone, for your patient listening, and thanks, Vimul Bhai, for that very informative session and the opportunity for Gift City. We move on to a very interesting panel, and we have a lot of corporates in the house today, in the room, and we have got a house full for you from the corporate world to talk about the issues that are being faced by every exporter, importer globally today. And I'd like to welcome CA Rajesh Somani, CEO and MD ABGT. So kindly. Sumit Bhojwani, MD Spire Foods. Shri Supriyo Ji, Executive Director, IFSCA. Siddharth Mehta, Regional Director for MENA, Department of State Development, South Australia. Mr. Stephen Heckling, Deputy High Commissioner, British High Commission. Nurpesh Shah, sorry, my bad. Mr. Nurpesh Shah, MD, Symphony. What we'll do is, we've got a very powerful panel on the dais. I'll let everyone speak for themselves, maybe a minute or two if you can take and talk about yourself and the business that you are into. And then we deep dive into what we have in store for the audience. Sir, Rajesh ji.
Myself, Rajesh Somani. By profession, I am a chartered accountant, company secretary, and Harvard Business School alumni. I'm in global commodity trade since last more than 30 years, and stationed Dubai, leading a Aditya Birla Global Trading Company, having a $7 billion and 23 countries operations. Thank you for inviting me and making part of this panel discussion.
Our pleasure. Thank you. Sumit?
Thank you, Vikram, for having all of us here. I'm Sumit Bhojwani, founder of Spire International. I founded this company 22 years ago after graduating from university. It's FMCG trading. We export to 42 countries around Middle East and Africa, going all the way to Singapore, Brunei, and Malaysia as well. Today, we have around 1,000 employees, a turnover of over $500 million dirhams, and I hope this panel really helps, and I'm looking at opportunities with the Gift City as well.
Absolutely.
Thank you.
Thanks for being here. Supriyoji?
Yeah. Good morning, everybody. I'm Shupriyo Bhattacharya, Executive Director of IFSC in charge of banking and payments. I've been with IFSC for the last 6 years. And before that, I was with the Reserve Bank of India for 20 years. Thank you.
Thank you, Supriyoji.
Thank you.
Sumit?
Thank you, Vikram, and thank you for having me and the other panelists. My name is Siddharth Mehta. I'm from the Department of State Development of Government of South Australia. Adelaide is the capital of South Australia. I'm based at the Australian Consulate in Dubai. Last 6 years in this role. Previously, I used to work for the South African government, again based in Dubai at the South African Consulate there. I've got other than government experience, my experience has been also into private business intelligence. So also based in the Middle East since the last 19 years. Thank you.
Stephen?
Hi there, I'm Steve Hickling. I'm the British Deputy High Commissioner to Gujarat and Rajasthan. I've been a diplomat for nearly 25 years, served in Latin America, Central Asia, Eastern Europe and India. We work primarily around trade and investment, science and tech, and clean energy. And we work very closely with the Gift City authorities as well, who've been extremely supportive to us in our work in support of British institutions, banks and universities. Thanks.
Thank you, Steve. Nirpeshji?
Hello. So professionally, I'm Chartered Accountant and Company Secretary, and I ride on 2 horses. I'm founder chairman of Nrup's Family and Multi-Family Office, managing the wealth in excess of $500 million in the same city, that is Ahmedabad, and also managing director of Symphony Limited. We are world's largest evaporative air cooling company and India's MNC. Once upon a time, we were a bankrupt company, and now we have been a blue chip company and have made several overseas acquisitions, and 45% of the top line is generated from the rest of the world and 55% locally. Thank you.
Thank you, Nirpeshji. With this, let's quickly dive into the hot topic of today. How do you see the developments emanating out of the present day crisis, be it the blockage on the certain sea routes, disruptions of supply chains, and the overall geopolitical scenario. So maybe we pick your thoughts first. Rajiji?
Say today's global business environment, I can say that we can sum up in the 4 boxes. First is the changing profile of the risk. It is increasing level as well as type of risks are more. Second, changing requirement and composition of the working capital. And third, reduce or negligible level of importance of the international institution, whether WTO, IMF, World Bank, UNO, etc. And fourth, increasing role of the technology as well as social media, not only in business, but day-to-day life, and even in the political, established political system. We know very well the history of Nokia, history of Kodak, history of post office. All have become irrelevant in this today's world, and communication has become boundaryless. In a one shot or one take, you can communicate with any part of the world. So that has a very big role in business also. Anybody can ignore it at the cost of risk of existence of the business, existence of the government itself. In view of the sort of time, coming to the first point, changing profile of the risk. Earlier, there used to be 2 types of business risk. First is the market risk, price risk, or second is the counterparty risk. Now these two risks are taking back seat, and number of major other risks have already started playing the vital role in business decisions. Whether it's a geopolitical differences, whether war in any part of the world, your country may not be affected with direct borders, but profoundly impacted by all these actions. For example, we have never seen such type of volatility when war started on 28th February, and today is hardly few months, but within few months, the crude prices have moved from 75 to 125. Without having any extra demand, without having any shortage of the supply. Rather, I should say, supply is more than the required. But geopolitical situation, diversion of the route has created a havoc in various developing as well as major economies of the world, including Europe. So this type of risk assessment and attempting it to rectify or addressing at a speed is important for today's dynamic world. Similarly, earlier I remember a risk in doing the trade, like we do the sulfur, we do the fertilizer, few dollars risk used to be there. Now today, just give you one example. India invited the global tender for the fertilizer few months back. In the month of the April, they imported urea at $900 plus. And just after the second tender, after a few months, they again invited the world tender, and they gave the urea at less than $500. So within the few months, $300, $400 disappear from the commodity value. This kind of risk was never earlier, but now, because of the Strait of Hormuz closed, Ukraine war is there, China is out of the market to support their own domestic market. So kind of the risk profile is changing, and those who cannot prepare for the depth of the risk and type of the risk, they are inviting the big risk of their not only capital disappear, but existence. Coming to the second point about the composition of the working capital. Historical working capital used to be financed by either the promoter's capital or by the banking limits. Now in the short span, the requirement of working capital becomes so high that neither your bank is ready, nor promoter's pocket is ready, and that is where I must congratulate the team 36, 365. They visualize this opportunity in advance, but this is where the bridge capital required now in the business, where bank can finance later, or the promoter can also finance later, but they need immediate finance for surviving their bank. For example, if you want to supply urea at $900, you require much more working capital than what you can supply at 500, but you cannot have a availability at set notice. Now coming to the third, WTO. WTO used to play the major role in playing the fair game between the two countries or international trade. But we all see that WTO almost disappear. In the night we see 50% duty, in the morning we see 25% duty. And nobody object. And this is disrupting the flow of the business as well as the international trade. So this is again, and now there is almost UNO is not playing any role, whether world war or whether anywhere. So this is again a big challenge before the business community or countries. Coming to the fourth, technology, I think is not an option whether for the big business, SME or anyone. If you don't adopt the technology, you are inviting the problem of surviving and existence in the international market. Social media is playing big role in advertising, promoting, and other business. In this type of environment, I personally feel speed, risk management, and imagining the opportunity of the business are the key success areas. I end with my submission with the one strong, which I like very well. His Highness Dubai and the Prime Minister of UAE. He said that future belongs to those who can imagine it, who can design it, and who can implement it. Otherwise, you can't continuously claim that father has established a business, fourth generation will continue to survive. That time has gone. Every year, you have to face the new challenge. Thank you very much.
Absolutely. Very rightly put. Sumit, I'll come to you on the business resilience side. What's your take on that, and how have you fared in the last few months?
Sure. As an entrepreneur, I'm a live example of getting into all these issues which are going on and most of us are facing. But we have offices in Dubai, Bahrain, Qatar, and we can see with the blockage of Hormuz, it's really disrupted not only the trade, but the finance capacity, because the shipment routes are taking so long. As he said before, our suppliers, the banking, would finance us to a certain limit, but this is a big constraint on every company. I can speak of many people I know in Dubai going through the same issues. It's not just the finance, it's the stock. We don't know when the next shipment would come in. So we need to counter for ample amount of stocks to supply to a restaurant, to a cafe, to airline. So a lot of the entire economy is dependent on importers and distributors like us. And I feel this issue is taken everyone in backseat. We need a guidance of 360 ETF and institutions similar, where I think we can bridge this gap and hopefully come out of this situation very soon.
And thank you. Always there to support. I'll come to you, Nrupesh. How do you see, from India perspective, exports from here and the trade routes? How has the business fared for Symphony?
No, so if we talk about our experience, we were impacted by tariff, we were impacted by oil price, we were impacted by Hormuz. Before that, of course, on account of Russia-Ukraine war, there were some uncertainty. So what we have learned over a period of time, as far as the capital allocation is concerned, for each of the company, for each of the business, it needs three kind of capital. One is operating capital, operating working capital, which is a normal working capital. Second is a survival working capital. Survival working capital, and that capital talks about whenever there are uncertainties. And we are witnessing that in last 10 years, 12 years, time to time, there are so many unpredictable uncertainties. So there has to be some surviving capital. And third is a opportunity capital. Because any time, any major opportunity comes, and one needs to really get the advantage of that. So one needs to bifurcate that. Secondly, despite this, I think it is more and more important to have perfect capital allocation. Ultimately, what matters in any business is return on capital employed. Thirdly, earlier we used to, for our India business as well as global business, manufacturing and sourcing in India. After this experience, we have diversified. We are also manufacturing in China. And apart from that, in the respective country where we have made overseas acquisition, we have made standby sourcing and manufacturing facility. Fourthly, we believe that technology, design, philosophy can be local and centralized, but when it comes to the team, talent, market channel, has to be decentralized. And I think by and large, this really helps to navigate this. To give one practical example about the tariff. So when we got the large order from some of the large format stores from United States, just in next 15 days, 50% of the tariff was imposed. But because of our diversified supply chain, we found the way out that our Mexican subsidiary was not subject to tariff. And there we had made a standby arrangement, and in the shortest possible time, instead of India, we could manufacture and supply from Mexico. It's a different issue that by the time when goods were on the verge of reaching, tariffs were withdrawn. So that is the kind of uncertainty. Similarly about the oil or about the commodity prices. So we have decided to have a variable come fixed pricing as far as our products are concerned. Thank you.
No, fair. Quick takeaways from me is, and to the team, the business team especially, we need to create buffer for the working capital, the two different types of working capital that you spoke about, both opportunity and the buffer working capital. I'm moving on, and I'll come to Supriyaji now. How do you, we have three corporates speak about, from Singapore to UAE to India. How is Gift City viewing all this? And as a regulator, we know that you've been extremely forthcoming, at least from a financial company perspective. But from a corporate side, how do you view this?
Yeah, so it's very interesting. The three gentlemen spoke about how they are coping. I think our role is essentially to ensure that the financing flows, and in the sense the existing financing flows, and maybe as he mentioned, the risk financing, the buffer financing also is available. I think the goal for us has always been how to ensure that we have a goal of 2 trillion export target for in the next 3 years. And how do we ensure that financing to people who can't get financing from our banking system? Essentially, that's been a challenge. I think Chairperson spoke about the trade finance gap. And that's a reality. It's a Pareto kind of a thing, that 20% of the industries get 80% of the finance. So how do we ensure that the 80% of the people who are not able to be financed out of our normal banking system, how can we bring in finance for them? And factoring is one area where we have been focusing. The government itself has been focusing in a big way. The non-traditional channel of financing, factoring through factors here that would like you, but we are also open to entities who don't want to normally set up here, but if they just finance it, that we are happy with that too. So we are open to financing through entities who set up here as well as set up outside, but would be willing to lend to Indian exporters.
Absolutely, and we see that happening through the ITFS framework also, wherein you're inviting multiple import factors to come and participate on the platform. So yeah, that's there. Let's move on to two of our specialists on the trade corridor side, and I would come to you, Siddharth, first. What's your take on the entire trade flow, and how do you see this present situation?
So I'll give you some insights, probably. I mean, both from government, but also what I see and how we are supporting our corporates. First of all, we are supporting not just our exporters. I think as government, we need to also support the importers, because in the end, such disruption is playing havoc, as Sumit said, is playing havoc not just for the exporters, but for the importers itself. So the sort of role we are playing in terms of trade promotion is more, at this point of time, while we can do promotions for Australian products wherever, but we also need to think of the fact that logistics per container from $2,500 has gone to $10,000, right? So for me, the most important thing is to keep continuity of business going rather than trying to get new products from Australia, say, into the MENA region. Yes, that will go on, but how do we keep the continuity going? So therefore, my role as a trade promotion agency or an export promotion agency at this point of time is a lot to do how do we support the importers as well, who are in the war zone, right? So that's one thing. The other thing what I see right now is, well, globalization obviously is there. We always used to talk about think global, act local, and all of these things. But post 2020, I think right now all of these jargons are coming into execution, right? I think resilience no longer can be thought of as a risk. Like, this is not risk management. Resilience today is probably, for corporates, it's a competitive advantage. Like what Sir just said for Symphony, the fact that he had the supply chain in Mexico and he was able to do that, that is a competitive advantage. So how you put it forward, to your trade partners, stakeholders, that right now is the most important. And I'll probably, what Mr. Vimal spoke, and those two things, trust and the IP, the innovation. I think world today is moving from trade corridors to innovation corridors. If I just talk of, and I've done for Australia, for South Australia, I've also covered India previously, remotely from Dubai. I'll give you two examples, live examples, what I've worked on. Within the space sector, India, sovereign space, we are, amongst the leaders, right, in the world with ISRO, whatever ISRO is doing. But when it comes to commercial space sector, probably commercial space sector, India is, as nascent as what Australia is. But in Australia, we are helping companies to, private companies to launch, because we've got launches, commercial launches from South Australia, low orbital launches, due to the geographic location in the Southern Ocean, less population. Therefore, companies like Agnikul or Digantara and all of these commercial India-based space startups can come to Australia and do it. So you've got innovation there. On the other side, if I talk of Gujarat, I've supported companies from Australia who are providing ingredients to innovative pharmaceutical manufacturers here based in Ahmedabad, and they are doing the value add and taking it all. So one has to think from a perspective of strengths and create your trade corridors and choose your trade corridors accordingly.
No, thanks, absolutely, and this is important. In continuation, I now come to one thing that I'm sure a lot of our audience are looking forward to. A few words on the UK, India, SEPA, and the opportunity from a trade and investment perspective. Steve.
Yeah, thanks very much. I think it's, the original question is very pertinent. I think what we've seen in recent years is the combination of unpredictable tariffs, conflict, disrupted supply chains, all impacting business, and we've seen it in the economic statistics in economies across the world. But I think this is where recent developments in terms of the UK's trading relationship with India come into focus. I think we signed the free trade agreement last year, and it entered into force in July, on July the 15th. And what we saw through that was a surge in trade between the two countries, and through our offices in the India network, an increase in interest in investment in the UK. So I think, why is that? I think the question is why. How did we get to this point? And I think it goes to the previous speaker's point about trust, about that compound trust. What we have in the UK and what we have in India is strong institutions. You've seen in the UK, we've have a habit of getting through prime ministers at the moment, but the fundamental strength of the UK as a market and as a trade and investment partner is the strength and the consistency and the continuity that you'll find in our institutions, whether that's in the law, whether that's in the regulators, and what have you. That trust is also manifested in a deep historical context. So we have that people-to-people trust. We have a large Indian and Gujarati diaspora in the UK, And they really are the drivers of some of this trade and investment. Some big investments from India to the UK are driven by Indian business families and Indian entrepreneurs. Equally, on the UK side, we've got some of the big industrials looking, in fact, having established here in Gujarat, companies like JCB or Croda, the specialty chemicals manufacturer. But that trust builds, and it's a compound trust, as you were discussing. And we've seen it more broadly beyond those industrials. So we're seeing it in universities coming into Gift City, because we have such a good relationship with IFSCA, the regulator, and we have that open conversation, that open dialogue that allows us to do these things. And that doesn't just build overnight. That's about the trust, the people-to-people links, and the idea that we know what we're getting on either side, and that consistency. I should also mention we both operate on common law, and we have a love of cricket, which always helps. And the Australians, of course. But let's not talk about the Ashes. So, yeah, there are headwinds at the moment, but I think we're seeing our relationship go from a trading partnership to a partnership of collaboration and deep collaboration, and that's built on trust, the removal of tariffs through the free trade agreement, and some of those deeper linkages as well. So I think these obstacles can be overcome, and we're seeing it through rising volumes in trade and investment inquiries. So actually I'm quite positive, despite that turbulent background.
Thank you. This is quite a view. Keeping time in mind, let me ask a quick question to the corporate side, and maybe I'll start with you, Nrupeshti. With the present things happening around us, what's the take on business? Have you revised the targets for your team, or you still have the same budgets?
No, I think take for us and take for everybody is the concept of Kaizen, the concept of just-in-time inventory, concept of just-in-time production, and concept of just-in finance is gone. It is cushion inventory, cushion production, and cushion finance. I think that is need of an hour.
Thank you.
If I may add,
please.
I think we're moving from just-in-time to just-in-case now, because right now, just in case a war happens, just in case something happens, so it's very important to focus on that. And just talking from a government perspective as well, and I'm not speaking on behalf of the Australian government right now, but dealing with even, say, the UAE government, and having lived in the UAE now for almost 18, 19 years, I think sovereign capital comes at play in such a scenario in a big way. Just to give you an example, we talk about semiconductors and everything and what is happening today. Back in 2007, 2008, UAE has gone and invested, as Mubadala, one of their sovereign wealth funds, has gone and invested into AMD. Eventually, when semiconductors were not even in fashion, not even being spoken about, right? And then have gone and founded global foundries. And today, if you talk about it, so that gives them that position of strength to negotiate in the global stage. And therefore, I think that is something which countries as well as corporates need to do. And from an Australian perspective, if you look at the CEPA which Australia has signed with the UAE, there's a big part of it which is just not trade, it is also investment. So what we've done is, both UAE and Australia, we've put 5 investment MOUs there for investors in both countries to take it as a directional navigation point that these are the sectors you need to focus on, and that's where your investment will, well, I can't say investment will be protected, but at the same time, those are our priorities, and therefore that will always become a point of strength for the corridor, if I may call UAE Australia and even India Australia, with the AI ACTA between Australia and India as well. So that becomes sort of a global corridor.
Sure, thank you. From a policy making perspective, you want to shed something on this point?
The direction is very clear that people, one of the idea of just in time was to reduce the cost of everything, including the cost of finance. So I guess, as the gentleman says, if that is changing, then I guess overall you would probably, people would need more finance because you would have to hold working capital, you would have to hold stock, you would have to hold, I guess manpower as well. And as he said, he has to now produce in different countries just because he wants to take advantage of the tariff, So I guess, so the financing becomes even more important in that scenario.
More business for us.
I mean, in a way, yes, probably, yeah.
Thank you. Your take on this?
So I would just like to say that business dynamics keep changing, changing very fast. But trading or international commodity business is one of the oldest business in the civilized world, and it's going to exist. So today, if you ask me, the risk in the business has elevated, but not taking risk is the biggest risk in this business environment. So keep ready yourself and keep addressing the new risk, new dynamics, and I can tell you it can create a wonder in the even dynamics or challenging world.
Absolutely. Thank you. Sumit, your quick remark on a closing statement.
Yeah, I just wanted to add, as they said, just in time, just in case, which is the new reality. But I feel with every crisis situation, there is opportunity. We are based in Dubai. It's an import economy. I did some research. It is a $50 billion US import economy, out of which I think FMCG is around 20 billion. And it got me thinking there is opportunity. Today with this closure, with these issues around the world, we are unable to import. But I'm trying to put up a small plant in Dubai, trying to manufacture something locally. I think this will create more opportunities locally, as India has become one of the biggest exporters and industrialists. Dubai is way behind in that category. So I think there is big opportunity coming up as well.
Thank you. Thanks, everyone. See a great adaptation of sorts, be it the corporates, the policymakers, and the trade corridors specialists. The noise is around, but the industry keeps moving. That's the order of the day. We may have challenges, but the order of the day or the ask of the day is keep working towards it and keep moving. Thank you. Thanks, everyone, for your time. Thank you. Thanks, the panel.
Thank you, everyone. Just the panelists, please hold on. So not taking risks is the biggest risk. I like that. Can I invite Mr. Jyotin Dholakia and Mr. Hitesh Makija to please felicitate our amazing panelists? And can we do it with a round of applause, please? Such an informative panel. And can I please invite Pankaj also? I'm sorry, I started missing his energy, so I'm like, now he has to come. Thank you, panelists, for an amazing session. Now we move on to our next session, from risk to liquidity, how financial institutions are navigating the cross-border trade and SME financing in a fragmented world. The many jobs a moderator has to do. All yours. So while we set the stage, can we get on screen a Slido quiz, please? Let's see how much everyone knows about all these concepts that we keep floating around. All of you can please scan the code and answer the question. The prize is an amazing lunch. Let's see who gets it. So while we get the results on, let me just talk about the next panel. It's a very interesting panel with liquidity and working capital at its core. Because let's be honest, who can take the risks if there is no liquidity? Oh, do we have the answers? Because technology alone solves the challenges of cross-border trade finance. That should be a magnanimous 100%. Okay, so let's move on to our panel about liquidity and working capital. I think we've spoken quite a lot about fragmented world, but how will this impact the relationship between financial institutions and the trade finance ecosystem? How can financial institutions better manage FX uncertainty, payment and supply delays in risk, treasury, and capital allocation? And do you know, have we answered this question now? Can we move on? We go to the panel? Okay. And it's going to be the best panel ever. Do you guys know why? Can someone tell me why it's going to be the best panel? Any guesses? Because I am in it, of course. And I also have my mentor who's sitting right here, Mr. Pankaj Jain, who's a part of it. And also because of our awesome moderator, Shri Ashutosh Sharma. Can I please have him on stage? Everybody knows him here, but I will still do a brief introduction because I get paid to do that. They say policy moves slowly. Our moderator clearly didn't get the memo. In just a few years as a founding member of IFSCA, he helped transform GIFT IFSC into a thriving global financial center, bringing global banks, aviation, shipping leasing, and entirely new financial ecosystems to GIFT. With 22 years in international banking, business development, policy strategy, financial ecosystem, I'm sorry if I missed anything, Shri Sharma tackles high-impact problems like a seasoned entrepreneur. A warm welcome to you, Mr. Sharma, and please go ahead and introduce our panelists.
May I request our panelists to come on the stage, Shri Pankaj Jain sir. I think you yourself has to join us.
Yes.
Ms. Shraddha.
Yes. I've been added for glamour.
I don't know how many people remember her name. She's talking about everyone, but she's Ms. Shraddha. Yeah, please join us. Do we have Ms. Kratulus? Is she joining us virtually? Can organizer check if we have the VC link on and we have Ms. Kratulus joining in? If you can confirm us too. And now we can have Mr. Shankar joining us in. Thanks a lot. And let me start with the introduction of my panelists. I can tell you that Pankaj and Vikram has put us on a tight spot, 30 minutes. And if you look at the expertise of the people who are on the panel, it's like we cannot do the justice. So we need to probably trade brevity for that today, unfortunately. And later on, you can catch up the panelists subsequently on this. But let me introduce first Ms. Kurtulus. She has more than 30 years of experience, and she has been steering the factoring initiative and with FCI for a very, very long time now. And she is right now Deputy General Secretary of FCI. We welcome you, Ms. Kurtulus, and we look forward to your contribution to the discussion. If you can just say a couple of words and we can check whether your audio video is working perfectly, please.
Yes, thank you. Do you hear me?
Can you say it again?
Do you hear me?
Yeah,
Do you
we hear
hear me?
Perfect.
Okay.
Now I think.
Thank you.
Thanks a lot. Now let me introduce Ms. Shraddha Bhandari. And she has a special skill, and I was discussing with her yesterday whether she's a gatekeeper or gate opener. But she's ex-geopolitical and security intelligence head, Asia Pacific for Barclays. And we'll speak about the profile subsequently. But if you know, in all the panels, I'm the only one who is a regulator who is moderating. But I'll put my industry cap on when I'm discussing this, and that's why I'm talking about the business, whether you're a gate opener or gatekeeper there. Perfect. Now let me introduce Shri Pankaj Jain. I think he brings a very, very different vantage point. And I don't know whether many people know here, Pankaj sir was earlier a member of IFSC. Let me start with that. So he has seen the growth of IFSC from the inception. He has seen the 0 to 1 journey of IFSCA. Subsequently, he has been Secretary of Energy Ministry as well. He has seen all the trade, big ticket items from here. Currently, sir is serving as a member, 8th Pay Commission. But before that, he was in DFS, Additional Secretary. So he has seen RBI, he has seen the banking ecosystem. And he has also worked on committee that has looked into SME financing in 2019. So sir has all the depth, and we look forward to your expertise, sir, in this discussion. Mr. Shankar, he has spent 3 decades in transaction banking across multiple banks, Bank of America, CB, and FinTech world at TradeStream. So he comes from the industry, but right now he's into advocacy, and he's working with BAFT, and he's based in Singapore. So congratulations for having such an expertise, being on the panel discussion, and 360TF has putting it together. Let me open with Ms. Kurtulus first, but before that, just a couple of points. So I think today we are talking about, and previous panel discussed about the perspective on trade finance, and what I notice is the large conglomerates, large corporates, and they're talking about trade finance, they're talking about the volatility. But when you think of the impact of volatility on MSMEs, it's at very different level. And if you look at some of the facts that global trade is around $34 trillion, and you look at the trade finance gap, which moved from 1.7 to $2.5 trillion, and the impact on emerging market is even more, and within that, MSMEs are even deficient. I think there's a joke goes in the banking ecosystem where we say that MSMEs are the backbone of global trade, but they do not get that rate, and they even get lower credit. So trade finance is missing on the MSMEs. That's what we are going to focus on in this discussion. And first I go to Ms. Kurtulus. Ms. Kurtulus, I think you have worked fantastically, and congratulations for $4 trillion of factoring number that we have hit recently. But if you can lay down for the audience what's happening globally on the factoring ecosystem, and if you can connect that with how do you see that from India perspective, and then subsequently connect it with what's the role that GIFT FSC can plug into that ecosystem. Over to you, Ms. Kurtulus.
Okay, thank you. First of all, I want to thank to 360, Pankaj and the team for this great organization. I was listening to the panels since the beginning. It's really, really very informative discussions. These are very important for the development of any of the industries in any country. So thank you, Pankaj and the team, for organizing this event. Unfortunately, I am online. The travel schedule not allow me to be in person. I want to give you some statistical information first to describe what kind of industry we are in. First of all, I think the global figures tells us a very positive story, as you mentioned, that the global factoring turnover is reaching 4 trillion euro in 2025. But the story is not only story is not good for only for last year. It has been 20 years. The compound annual growth rate around 7%. Even in 2025, despite the whole geopolitical uncertainty and slower economic growth in many of the regions, the market still expanded by almost 4%. So it is, when you compare this growth with the growth rate of the emerging countries, even with the developed countries, it's very, very satisfactory growth level. These numbers demonstrate that receivable finance is no longer as a niche product. I really want to stress on this. It has become an essential part of the global financial infrastructure and helping the businesses improve liquidity, the working capital, and supporting the supply chains and support the international trade, because trade is very important for all of our economies. Another interesting trend is the continued rise of the Asia Pacific. Of course, when you look at the factoring turnover in general to the world, Europe remains the largest factoring market globally. But Asia Pacific now represents around 25% of the global turnover, and it continues to gain momentum because the changing trade directions. This is also reflecting the turnover of the international factoring, and I strongly believe this trend will continue over the coming years in the trade process. It is changing. Within that story, India is one of the markets we are most excited about. Why? Because given the size of the economy, it is manufacturing capacity, it is growing export ambitions, and it is the entrepreneurial SME sector. I'm very convinced that India will become one of the major players in the global receivable finance industry. And equally, I'm thinking within the FCI network. But markets do not grow simply because there is a demand. They grow when the entire ecosystem develops together. Receivable finance requires regulatory support, financial institution support, fintechs supports, and insurance industry support also. And also the business needs to move in the same direction. If only one part of this ecosystem grows, the growth will always remain limited. So strong regulation without market adoption is not enough. So we have an experience in more than 90 countries, working with the multilateral development fund and regulators and market players. So this strong market demand without a supportive legal and regulatory framework, or vice versa, it also limits the growth. So this is precisely why I see the IFSCA GIFT City such a very important initiative, and it can be replicable model for the other countries also, because the establishment of this GIFT City demonstrates India's long-term vision for becoming a global financial and trade finance hub. This is the fact. So in general, in many ways, IFSCA GIFT City organization has the potential to become the model for the emerging market and also for the Indian FIs and the SME industry.
Thank you, Ms. Kurtulus. Pankaj sir, Ms. Kurtulus highlighted the changing risk profile and talking about the gap in trade finance again and the role that city can play. But if you link it with India's position that we put an ambition of 2 trillion of our exports between merchandise and services, and you look at the trade finance support that is required from that perspective and the changing risk profile, if you can give a perspective on how our policymakers and also, if possible, how the financial and financial regulators are thinking about how to plug in this ecosystem, considering our target is 4 years away. How will you plug that gap?
So thank you. And see, the thing is, I think the point which you raise, the context which we are working against If you look at 2020 COVID, since then, it's been a series of financial and geopolitical shocks, one after the other. COVID, Russia, Ukraine, US tariff, Op Sindoor in our case, the US, Iran, artificial intelligence, extreme weather, El Nino, one after the other, we've been looking at shocks which have been coming in. So which really takes me to the point which Mr. Somani made in the previous session, which was, it's not just, I mean, there's been not just an increase of risk, that has increased definitely, but what is more important, what is underappreciated is how the risk allocation itself has changed. Now what do I mean by that? Typically, in a contract, risks were allocated between the supplier and the buyer. Today, the risks have disproportionately increased on the supplier, and on a second order, they have increased on the lender. They have devolved much more on the lender. And therefore, the entire idiom of trade finance suddenly has to deal with higher requirement of working capital, a longer duration of that working capital. All of that suddenly is changing the way lenders look at this. Now, lenders have to also live in a world of regulation. They can't just pretend that, regulation doesn't matter. And then when lenders start thinking this through, a part of that risk again moves on, it becomes a systemic risk for the economy. Because if lenders' behavior changes, then how does the economy grow? So therefore, how are policymakers reacting to this? What are they doing? We are seeing this in country after country, across geographies, the kind of state support which you are seeing, both from the state and from the central bank. So you are seeing zero or low interest rates, you are seeing easier liquidity, you are seeing printing of more money, sovereign backstops, direct support to MSMEs. And again, I think India has been no exception, whether you look at the way policy rates have gone down in 2025, you have the emergency credit line guarantee scheme being introduced, you have interest subvention for exporters, reimbursement to MSMEs for higher freight. We have seen a whole litany of interventions which have happened. But what is that doing? At one level, one can talk about its impact on public finances, which is, maybe a discussion not for this forum, but what is happening on commercial credit is, because some part of the risk is now devolving onto the sovereign and to the central bank, it is becoming difficult to distinguish how much of that is exceptional risk and how much of that was normal risk. And in this, it then tends to give a free pass to lenders and to borrowers, because a disproportionate amount of the risk is getting covered by somebody else, which therefore encourages. So when you see, for example, you suddenly start seeing MSME NPAs are not what you would have expected in this kind of crisis, partly because of these backstop measures. It then also in turn encourages more aggressive lending in terms of, okay, let's give this out, there's somebody else who's writing the check. How does it really matter? And we have seen this again happen in country after country where this moral hazard starts getting built up. So the thing we have to understand is this. At some point of time, that music is going to stop. At some point of time, sovereign is going to start saying that, okay, I think there's an end date to this. I'm going to taper it down. And therefore, the entire structure of trade finance from the lending side has to start anticipating this. Businesses have to start anticipating this. So some of those practices which we used to have earlier in terms of tight inventory, tight utilization of limits, efficiency in doing so, those bad habits which will get built up during this time will have to be unwound fairly soon. And that is what policy is going to end up nudging you into.
Thank you, sir. But sir, just if I can again have a follow-up on this. See, if you look at across the asset classes in banking ecosystem, and if you look at the default rates in trade credit typically is the lowest of all the asset classes. So if you look at from that perspective, shouldn't sovereign at times look at the instrument that is just because it's a temporary shift of the risk, but the default risk that is actually going to consume the sovereign capital will be limited? Shouldn't sovereign be looking at some of those proactive because it builds some predictability?
No, you're absolutely right, and that is what justified the support from the sovereign. That give predictability, and maybe this crisis is temporary. This crisis is a 1-year crisis, 2-year crisis. I think where that changed is because the succession of crises meant that you really did not get breathing space. Hence, is it going to remain something which is going to be around for longer? I think that the jury will probably still be out on that. What I'm saying is, we can't take this for granted anymore, that this is going to be a steady state, this is going to be a regular state. We have to start also preparing for a phasing out of that kind of support, which will happen at some point of time, simply because there will be other claimants for that sovereign support who will come up at different points of time, and then they will be crowding out. I mean, don't be surprised when that happens.
Noted, sir. I think capital is limited. It will always look for the better allocation. Moving to you, Ms. Shraddha, I think carrying on what Pankaj sir has explained is last 5 years, so many events have happened. And putting on your hat of, you're advising banks on the geopolitical risk. So last 5 years must be very, very busy for you. If you can just give a perspective how, like as a geopolitical analyst, you will see the journey in last 4-5 years. And if you think in this ecosystem, how India is positioned, because India is certainly a lot of import-dependent nation today, and it's getting challenged. And you advise banks on like, should you take that credit or not take that credit? Should you go into this product or not? From that perspective, what is your view on broader perspective and also from India?
Just sort of put a caveat. My role in the bank was limited to sort of giving the advice on macro geopolitics, and then it was their headache. Like I wouldn't take the risk of advising them whether they should finance or not, but just to sort of answer your question, I think as Pankaj sir said, I think geopolitical risk is now the biggest financial risk. And within it, it's moving monetary systems, it's moving currency risk, it's moving semiconductor, AI, competition, tariffs, and everything. I'll give a simple example. The semiconductor supply chain, I think, is a very typical example. You had a very set supply chain. The upstream technology research used to happen in the US. The wafers mostly came from Japan. The fabrication happened in Taiwan or in Korea. The specialized equipment was provided from Netherlands by ASML. And then China got those ingredients into sort of consumer manufacturing, component manufacturing, etc. Now the US tariffs have sort of broken that chain, right? So that entire trade of the semiconductors is now being questioned. The trade architecture changes means your financing architecture changes, right? So that's my first point. The second one, I know the jury is out there on how long this will last, but I can say from what I've understood that last 70 years, at least since the end of the Cold War at least, the power polarity that we're being used to is changing. Right? We're going from a US-led, US guaranteed in a lot of ways system, and then I've said this in my introductory thing as well. We're going to a new paradigm being built, whether that's from unipolarity to a bipolarity, a unipolarity to like a mid-stream states that will sort of come together, what will be their collaboration, their competition. That will decide, but I think we're in a period for uncertainty. So the trade finance definitely needs to prepare for cushion inventory, it was mentioned earlier, for cushion capital, for the sources to sort of start drying up. So how do you then manage that? And my third point is going to be that I've said earlier as well. The main ingredients to sort of trade and trade finance, energy, commodities, routes, shipping, insurance, everything is up for questioning, right? We're building a new order. Of course, the last 6 months have probably been extremely on-your-face examples. Like I gave this example in the morning. So the Saudis bypassed the Strait of Hormuz by the east-west pipeline. And then Bab el-Mandeb was blocked, which meant they tried to use their Egyptian pipelines in which they're also invested. And then the Egyptian gas storage was attacked, which meant now they need to have a plan A to a plan B to a plan C to a plan D. right? And this is something we've used these terms before, just in time to just in case, but we, 360TF and sort of trade financing platforms especially need to prepare for better risk assessment. For India, I would say, MSMEs especially, I think were unprepared for what happened in the last 6 months. I've had panels with them where they're like, they don't even know what their diversification plan can be. Within India, how do they do import substitution? Can their product be locally produced within India? Is there a supplier that they can go to? So that kind of knowledge has to be built. That kind of platforms, whether they're technology platforms, whether they're digitized platforms, those have to come into play. Our currency risks have to really be managed. I think the dollar has weakened comparative to other currencies, but the rupee has weakened even more. So our exports typically should have become competitive, but because of all of these supply chain issues, they're not. So with Gift City, I think more education, more skilling, more of these trade platforms on the lines of what you're already doing, but also hedging. We get these questions by clients in the UAE now because of what's happening. You think the UAE banks are going to remain robust. What is the hedge for us? Where can we go and park our capital? So all of those things are thinking that the Gift City can definitely address, and then knowledge to exporters is something I think which should be top-notch.
Knowledge to exporters is one thing, but you're talking about MSMEs, and I don't know how many MSMEs are in the room right now, but people who interact with MSMEs, they will concur that typically MSMEs do not have the resources. They do not have the knowledge, they do not have the teams. Mid-sized corporate maybe, SMEs usually do not. Are you seeing some trends in other ecosystem in other countries where whether sovereign or the industry or the advocacy group, they have created some kind of platforms which has played this role to hedge some of the risk from the MSMEs, or are there some instruments which are popular?
So I think, like somebody said in the last panel, it may no longer be optional for SMEs and MSMEs to say that they don't have the working capital for plan for that. We are getting into a world where diversified supply chains, local sort of import substitutions, how do you make sure that your supply chains are protected, etc., will have to be managed. There are ecosystems emerging within the world. DIFC, for example, now has a trade platform which combines certain segments that the government sort of gives prerogative to. And how do you then, of course, short term will be that the government protects you, government gives you financing. But then how do you really work to, in the long term, diversify your sources, diversify your supply chains? And that's something don't think you can get around with now.
Thank you. Moving on to you, Mr. Shankar. I think you come from BEFT, so you are into advocacy, you're seeing multiple jurisdictions, and you're engaging with multiple regulators as well. So I think when we at Gift City, we are looking at this solution, we are also looking, one side is trade. Other side is we are seeing the remittance cost of remittance is very high, payment. So we are trying to solve both sides hand in hand, because that's where the smaller ticket becomes very costly for MSMEs. So from your perspective, what trends you are seeing on both on the trade side as well as payment side? And if you can also bring in some element about where Gift FSC or IFSC need to focus on from that perspective, will be very useful.
Sure. The first thing, of course, I have to make sure my mic works. I'll give you a different perspective from what I'm hearing. And perhaps I'm a little withdrawn from what's happening over here. But things like trades in India, I had the opportunity to be in Philippines, I think, where the central bank governor, Eli Ramlona, wonderful guy, stood up on stage and said, we need to put what India is doing in trades in Philippines. Why do I say this? And this is not like rara, we are the best. And some of us were at GTR, I think, a couple of years back, when one of the banks, and I asked the question, said the ultimate pricing to MSMEs is going down because competition is increasing. And competition not just from banks, because the way trades works very quickly is you put your invoice on a platform and people bid for your business, so pricing was going down. The same is happening on the payment side, okay? we are wary of opening payments for one reason or the other, but a lot of companies, especially, and I talk to some of them, mostly Bangalore-based and so on, who look at importers, people paying into India, to India, so exporters receiving money, and they're able to price better. The reason I mention this is, for a small company, a 1%, 2%, 3% cost has now got reduced. It got reduced on the trade side, it's got reduced on the payment side. Can we do more? Absolutely. Should we do more? Absolutely. And I know in Gift City we have the cross-border angle, and I occasionally talk to people over here on how that can get improved. I am seeing that holding up for the country. And we all know the payments, perhaps you take it for granted. The payment system in India is just wonderful, okay? I don't know how many of you take a bus, but if you do, in Mumbai, you can pay using an app. The point I want to say really over here is, you cannot see all of this when you're living here every day. You just cannot, because it's incremental. And governments work incrementally, unfortunately. However, that is making a huge change outside. When I talk to people overseas, they tell us, hey, what is trades all about? How is it that MSME is getting a better price? Now, granted, this is domestic. Granted, it's not, to all the points that you mentioned, it's not cross-border. Granted that there are challenges. But these incremental changes are making a huge difference, and which is why I think Gift City itself as a concept, and this is my second year over here, I mean, it's amazing to see this coming up. You don't see it because you see it every day. I come to here to display once a year, and I see the change. That is starting to spike in. I just think we can, and which is why your last question was, what can we learn from the world? I want to turn that around and tell you what the world is learning from us. Again, this is not wearing my patriotism on my sleeve, no. People are starting to notice what we're doing differently. When I started off, I worked in the first offshore banking branch I worked was TOBB, Taipei Offshore Banking Branch. I was 25 years old. I thought an offshore branch was away from the sea, so shore, offshore, That was my impression of smart people don't need that explanation anymore. You know how it works. That incremental change is happening. Yes, we can be pessimistic about a lot of things that are happening around us, but wars have always happened. At 15 years back in a Cybos event, I said, we're all going to, globalization is dead. That's what I said. Because we're all going back to our kampung, our village, right? Is that happening? Maybe some of it is happening. But the smart people away will always find a way.
Thank you. I think what you're saying, world can learn from us. And I think I also got one learning here. He spoke at length about trades. He did not speak about ITFS, which means that IFSC has to market its own trade finance platform, which FCI is well aware of. So now I think what he mentioned is trades working well, but that is only domestic. For people who do not know, IFSC has two solutions here. One is payment service providers. These payment service providers have been enabled to gift FSC to facilitate cross-border trade finance payments at low cost. Typically, it's around 6 to 7% is the cost of remittances. We are trying to reduce the squeeze down to 1 to 2%. I think this is something that MSMEs can take benefit of. And ITFS platform is a platform where our open account trade, you can actually list down your receivables and you can take the discounting of receivable financing through these platforms. It's just like trades, but cross-border. And with that, I think I'll come back to you, Ms. Kruthalos. I think you heard Mr. Shankar, he went gaga over trades. ITFS I'm bringing into discussion. And when I opened up discussion with Peter way back, 3 years back on FCI and IFSC, my core question was, India has MSMEs, they need financing. FC has the platform, two-factor authorization, where you have the global financiers on the platform. IFSC came out with the ITFS platform. We are plugging in the MSMEs onto ITFS platform. How can Indian MSMEs, which are coming on MSME ITFS platform, how can they take the benefit of the liquidity that FCA members provide on the FCA platform? Is there a way practically that we can create some kind of a pipeline, or you can think of some suggestions that FSC need to take forward or FCA need to take forward? Over to you, Ms. Kruthalos.
Thank you, and I want to say hi to Peter. It has been some time that I haven't seen him. or former Secretary General Harpeter. So one additional word I want to add what world can learn from India. Maybe not learn, but there is a very supportive issue for the receivable finance industry. India is a very strong position because it's already one of the world's most technology-driven economy. So it is the leadership in digital infrastructure, the fintech innovation, and registry system in the financial world. These are excellent foundation that for the next generation of the receivable financing, because technology makes financing easier, so more transparent and more accessible, and you have more data. That data makes everything is much more easier if you use the technology on a proper way, especially for the smaller businesses, for SMEs and MMSs. There are very different, very good models in a fast landing on the SMEs if you have the data. So it is, I think the position of India from that perspective is very, very positive. And I also believe that the steps taken by IFSCA so far is extremely very supportive. Of course, the regulatory supports, but of course the regulation is a continuous journey because the trade is evolving and the digital innovations and the solutions are also evolving. So it is not a one-time exercise, but as FCI, we will be always ready to support the IFSCA and the marketplace players by sharing the best practices that we are gaining from the regulators in more than 90 countries. But in particular, what I see, we very recently introduced prudential treatment and the reserve requirement provisions is a very, very good supportive developments in India. But regulation is not enough itself, because the market also needs to use these opportunities that regulation creates. From the FCI perspective, one of the greatest opportunities for India is to further develop the export factoring through the international correspondent network. FCI's two-factor system connects financial institutions across the world, allowing the exporter in one country to work with the trusted import factory in the buyer's country or where the buyer is located. That provides something that's extremely valuable, not only for financing, also for the credit protection and collection and local market expertise, because factoring is a continuous control. Of course, insurance is part of our business, but assigning the invoices, collecting each and every invoice from the buyer gives us really, really big data for controlling the buyer. At the end of the day, the export factoring is about protecting the exporter's balance sheet. If a buyer becomes insolvent or just fails to pay because of maybe a cash flow problem, the exporter is protected through the international two-factor mechanism. In other words, we are simply not financing the invoices, we are helping the business to protect their liquidity, because the liquidity is very important for the SMEs, even for MMSs, they don't have enough liquidity. So to preserve their cash flow and trade with a greater confidence, so, because they usually do not know the buyer financially. So this also protects the country's export economy. I believe the Indian banks and the financial institutions can leverage on this more extensively, because the domestic market of factoring is growing very on a high level of increase in every year. Export factoring is just comparing the potential of the country is not that big, and when I can compare the developed countries of the export factoring or factoring in total, it's usually the penetration of the GDP is usually like 15%. So India is one of the fastest growing export economy, and many of the MMSCs and also SMEs are now selling internationally. Having access to global correspondent network gives those businesses the confidence and enter the new markets while managing their payment risk and the working capital. But there is another, I think the challenge it is, maybe it is also equally important. The product itself must become better known, especially for not only for the banks and the factors, the FI people, but also for the exporters. I'm not physically there, but I heard that there are lots of corporates in the conference. I think it is really important for them to know what is international factoring. They need to understand the benefits of the product. SMEs and the international organizations, local organizations like Chamber of Commerce, trade associations, they also need to understand and help their members that what export factoring actually offers.
Thanks, Ms. Krothlos. I think it's very helpful. I think what I will do is I'll have to follow up this discussion in detail with you subsequently. But two things that I take away from your suggestion is one is on the product gap. Second is on the digital and digitization of trade. I think while the clock is showing red, sir, but I'll take being a regulator a privilege that I can extend the time myself. I will not ask the organizer that, but I will ask you, sir, if you can build on that part. So what is the world knows for? India's digital platforms, our infrastructure has been very successful. People talk about it. We are now passing the bill for the digitalization of the trade as well. If you can combine that if you can tell the world about what approach we are taking there, but also if you can augment it with whatever you have heard so far, that there are regulators on both sides, what those regulators need to look into, and if you have to take some steps to, integrated approach. It's a strategic subject now.
So look, the whole idea of Bharat TradeNet really is, you're right, in terms of replicating the kind of success which we have seen through UPI and the entire digital public infrastructure and so on. So the ambition is there. Let us not underestimate the complexity, because in this case, it is not something which is just two regulators sitting together can do. There is going to be, in our case, the DGFT or the commerce, the entire import-export entities on both sides who regulate import and export. And then you have to get the financiers on board, because the real benefits are not simply about data interchange. The real benefits come if on that data interchange, you are able to build a financing layer, something which Trades did very well, because Trades was the invoices there, it's visible to everybody, it is unique, and it can then be financed using the credentials of the buyer. Here, it's not just the law. The law will be the first step. The rules will be the second step. The not-for-profit entity would be something which happens in parallel. And then you start getting the competing jurisdictions, the alternate jurisdictions also willing to share data on that. So I would say this, that yes, it is something which needs to be done. It will happen slowly. Timelines are stretching. The kind of ambition we have around the timeline is stretching. But the fact is that this is the right time when all the building blocks are already in place. On top of that, you then get all the lenders in play, and that is when where the real benefits will start flowing.
Thank you, sir. I'm wondering that once Bharat TradeNet comes out, probably first step to solve might be between gift FSC and domestic, because that itself will bring one element to the zone, and that will be easier to achieve. But we'll work on that with the government as well. Shraddha, is a follow-up question to you.
There's a question from the audience. So given the lack of time, do you want to ask me the question, or would you like, as a moderator, would you like to take the audience question?
I never doubted your knowledge, but let me ask the audience if any couple of questions here, show of hands here.
There is one that already came.
It's already there?
Yeah.
You're coordinating. It's planted?
So no. To you. So it says the world order in geopolitics change and we move towards a multinational, multipolar world. What is the source of outsourcing in documentation and billing?
I can take that if you want. I mean, data is, and this is a much bandied, much abused term. Data is new oil, as they say. And who controls the data controls transactions. One of the, and please don't quote me, all 400 of you, please don't tell people that I said this. One reason why e-bills is not taken off as much as people would like it to be, and please don't ever share this with the ICC DSI people as well, and I really mean it, is because of what SWIFT has done, willingly or unwillingly, in Russia, in Iran, in Cuba, and some other markets. I say unwillingly because when I talk to them, they don't want to. But when you start restricting, what do? You say, I won't work with you. When Russia's money in Europe is taken away, I'm not getting into the reasons for it, but when it's taken away, you evade trust. Why do you think India moved 100 tons of gold from Germany to India? I don't know the answer to that, but this is where I think you mentioned that very clearly when your father said, whose trust did you win today? I think for us, from an IFSCA perspective, the first thing is to improve trust, to improve rules. It cannot be stuck in a Gandhinagar court for 10 years. It cannot. And that's the fear that people have. I don't know if that answers the question, but that's where I would go with this.
Thank you. I think I'd like to conclude this. I think I will take somewhere from Mr. Vimal Shah's presentation where he said that build the trust, compound it, regulations, make it practicable, it will come out itself. I think that's an area where both Government of India and regulators on both sides, they have to work towards. And I think we're moving in that direction. But with this, sir, I thank all the panelists here for taking their valuable time out. Thanks a lot to everyone.
Ask Mr. Murli Srinivasacharya and Mr. Pinaki Roy to felicitate the panel, please. And Vikram and Pankaj, of course. Okay, quick show of hands. Everyone's awake, still full of energy. Can I get something to show that everyone still has a lot of energy? Okay. This is the last session before lunch, so you will get your fuel, but this one is unmissable. We're moving on to our next segment, which I call Grilling the Gatekeepers. This is your chance to hear more about the gift city, how to multiply your capital, how to participate in a new era of leasing, finance, and capital markets. And most importantly, as I said earlier, I want that location of the gold bullion. This is Pankaj Mundra in conversation with Mr. Bharat Shivappa, President and Chief of Markets, Gift City. Can we please welcome both of them on stage with a huge round of applause? We planted all the money-making questions with Pankaj, so they'll all be answered now.
Thank you, Shraddha. I request everyone, Pinakida, Rumkiji, to come and join us the session. And yes, we are holding you in between the money and the lunch, but I'm sure it will be worthful, the discussion, as you await for your lunch. Thank you, Bharat Bhai, for joining for this fireside chat just before the lunch. It's very, very interesting as we were discussing about you heading next month to road show for the vibrant Gujarat and Gift City to US. Interestingly, we're going to meet again in New York, hopefully. So interesting. So starting with this, we all have heard about the remarkable progress which Gift City have done. Just to, of course, in the interest of all the new audience today, Bharat Bhai is being President and Chief of Markets for Gift City and leading the growth of Gift City with his global experience, especially when he moved back from UAE ADGM to Ahmedabad, Gift City and Gujarat. So thank you. And so taking it forward that we all know the GIFT has made a remarkable progress, but what do you consider the 3 biggest achievements so far?
Okay, thanks Pankaj. Hi everyone. That actually is a tough question, and you only gave me the option of 3, right? I would have gone a little more lengthier on that. But yeah, if you ask me, I think the first big thing they did is getting, an IFSC as an independent regulator. And this was a much needed change to build this platform or build this, an independent regulator or in real sense an offshore. That itself is a big milestone for me. And second one is, if you look at Gift City, though the concept came in 2007, the IFSC regulation got formed in 2019, and then you also had the COVID. So by 2021 or 22 is somewhere actually the whole growth of the momentum of finance entities started. So if I take that as a starting point, and then the story looks very nice, because today GIFT is home to almost around 1,300 plus financially regulated entities. We have almost 217 asset managers, 40 plus banks, a significant chunk of them are global banks. A pretty decent AUM if put together, banking and asset management, you are talking about anywhere between 130 to 140 billion. So all this in 4 years, looks a good story. On the breadth is a good story. That is the second one. And the third one is also in the short period of time, today we are one of the top 50 globally recognized and ranked IFSCs. There's a long way to go. If you really ask me in real sense, that's just a beginning. But I would see GIFT to be on the top 3 or top 5 in the next 3 to 4 years, ideally.
Fantastic. And by the way, how you see GIFT City differentiating itself from the DIFC, Dubai, the ADGM, and the Singapore? When you're going to see the Canary Wharf of UK in GIFT, how do you think you differentiate from these GFCs? Yeah.
Good. That's a tough one, particularly for the ADGM one. I'm sure my folks would love me with my answers even. Look, I think we need to understand fundamental difference of what ADGM or Dubai or Singapore, even if I take a step to London and New York or even Hong Kong, right? If you look at the evolution of that, many of them are built, like they were all evolved, right? Whether it's London, Hong Kong to a good extent. Singapore is a hybrid. It's evolution and design. But the new age ones, Abu Dhabi, Dubai, and rest of them, they're all design built. So they learned and they're able to kind of accelerate in a faster pace. If you look at some of the regulations also they've adopted is quicker and it's like nuanced. And many of them have its own different strengths. Like if you look at Singapore, it's a trade hub, right? Did not have a strong domestic asset, but they became the strongest, value proposition of there was the regulatory reform that they brought. Correct.
Dubai has a similar story as trade. Abu Dhabi was a different story, like Saudi. They are home for a very strong capital. So therefore, their strength starts with access to capital, then access to regulations, then maybe access to tech or a talent, and then market in the order. But in India, for gift, the story is completely different.
True.
So we are one of the biggest markets in the world today, and we will be one of the biggest market in the world tomorrow, because if you look at the broader numbers, 65% of my working population is still under 35. So consumption fundamentals, we are going to be a very relevant market. So access to market is our biggest differentiator, and followed by tech and talent, and then regulations, and then capital, right? Because I open an access to the largest market for anyone, so that is very, very critical. You know, sometimes it beats even access to capital.
Correct. No, I agree with you, and I think the key other differentiator is also the high cost of living and operation in all three these centers.
Correct.
And as you mentioned, the largest population, so Singapore or Hong Kong or UAE, they have much lower
domestic market,
population.
they basically all pass through mostly.
India is a huge market.
Yeah.
Now, which sector do you believe will create the biggest opportunity over the next 5 years?
Okay. Look, I think, this is where I want to bring in the India's vision, okay, of a developed economy by 2047. Let's start from that vision that gives you a broader direction.
Sure.
Like if you're looking at 2047, 30 trillion. Now, if you think about global matured market, which are, the 20 trillion plus size, look at their banking capacity. They are almost around 1:1 or 1:1 plus, but in India today, we are at around 4.5. We are talking about almost 2.5 is our banking capacity. Now, if you take now the next 2 decades, and we are trying to meet that ambition of 30 trillion, there is a humongous need for accelerating our banking or financing capacity, right? So this is where I think GIFT City plays a tremendous role of capital formation, critical global capital formation here. So therefore, naturally, there's a huge opportunity for, again, banking, asset management, okay? But trade is very important. Again, I told you in the previous point, the fact that we are one of the largest market,
Yes.
trade plays a significant. We will also accelerate in financing, whether it's assets, aircrafts and leasing, for example. You're already witnessing so much of progressiveness that regulators and government is bringing in these spaces. So you'll also see a good spur and good acceleration in financing. And then, as I told you, the next 2 points are tech and talent. Therefore, you'll also see the mid and back offices. I'm not talking about just GCCs, they are the larger India story, but GIFT would kind of position itself as, a great place for the finance-led GCCs, right? Whether it's a mid or back office, as we call.
Yes.
I think that's a humongous opportunity because we deliver tech and talent combination. So I think.
No, well, I know the global capability centers have been growing.
Yeah.
And there's a lot of been talk. In fact, I've been talking to the Institute of Chartered Accountants in India. They have a special committee now to focus on GCC accounting and growth of the GCC, because a lot of the GCs are being led by the chartered accountant and the CFOs.
Correct.
Yeah.
Whether it's R&D, whether it is IP, there are a lot of other areas where treasuries, for example, another big area. You must have seen the news around today. A lot of global treasuries, regional treasuries, operations have been moving towards here. And this is also a good sign, right? End of the day, even they are, they add to the capital formation. They bring those liquid, kind of a semi-liquid to an extent, capabilities to the center.
True. Now, where you see the opportunities for the NRIs and Indian residents who are there in this room and otherwise, do you think it's a job or better lifestyle in GIFT City versus other metros like Bombay, Bangalore, or business opportunities? So where you see both resident Indians or NRIs, where you see opportunity for them? So we know opportunity for banks and financial institutions, but what is for the individual?
Correct. I think, when you talked about in the first question about my peer ecosystems, most of them benefited because of the Indian diaspora, right? The NRIs having their family offices, accessing those, like products that are available through, whether it's Dubai or Singapore or Abu Dhabi traditionally. Now, the fact that we are bringing that ecosystem, those products and housing out of GIFT City, it's a great opportunity.
And it is not just an opportunity, we are already seeing that in reality, right? You must have seen the recent deposit products.
I've seen
actually-
yeah.
Yeah. So, I'm sure in the next report, you will see a significant growth in the banking assets based out of here. This is one. And second, also we are now, hopefully very soon by end of this year or early next year, we should have VCC structure. Variable
Very
capital
good,
company
like
structure,
Singapore,
right?
yeah.
It's like Singapore. Now, a lot of those, that whole hub of almost 4,500 family structures have an opportunity to relook at Gift City, right? So again, that I see for NRIs. And for Indians, I think, they access to this experience of working with global companies, global, financing companies, which otherwise they were hunting in Singapore, NY, even in Middle East. I think they are able to access those opportunities here
From
within
here.
India, right? And as you said, asked me in the first question, we are investing tremendously on the infrastructure and, the quality of life living here, right? We are building our Canary Wharf here. We got a 5-kilometer, riverside that's being developed. We
Wow.
have one of the world well-known landscape, advisors working on rebuilding our landscape or redesigning our landscape today. We are doubling down on our district cooling system, which is almost 20,000 tons today, which is centrally managing the entire Gift City. But we're going to double down that. It's scalable almost up to 200,000 tons.
Wow. So huge opportunity for the commercial state, and of course in this growth, I'm sure a lot of contractors and the other business people will
Who
also
has
come in.
invested, Pankaj, in Gift City, they know already. There is a story.
Yes.
In terms of the value creation in the real estate also has been a great story for who are early investors. But I would say this is just a starting point. Your alpha you're not seen. It will multiply. Because again, we are investing in Central Park, for example, if I have to tell you. We are again further building a metro, which is from the South Gate today to 2 more stations, so that when we have the first high-speed train, the bullet train from Mumbai to Ahmedabad, we have in 20 minutes connectivity to Gift City,
Oh, wow.
which means I have BKC and Gift City, Gift House sorted in 2 hours, 20 minutes.
This is fantastic. I think, in fact, we have a case study, friends. We had a guest last year, an NRI guest, who is actually from Ahmedabad, who came to GTFS and ended up visiting Gift City. And as we speak, he and his friend invested $3 million. So he was actually from Ahmedabad, only coming to the city for his meeting his parents. But when he came to Gift, went around, he ended up investing 24 crore, around $3 million in commercial real estate in Gift. Interesting. So if we meet again in 2030, whether in GTFS or otherwise, what milestone would define success of Gift City?
First would, I would say this ecosystem should be kind of already very much aligned to the 2047 goals, right? Which means I would have had an ecosystem which has a strong breadth, which already we have in some form or others, but also the depth in terms of housing a significant, growth in the AUM that is managed out of Gift City. Liquidity for trading, a significant growth across that. Also home for global talent. Today, I'm not bad, 25,000 people.
Yes.
But I would see that to be a like 150,000 people by then. So we would like to kind of grow at around 30 to 35% across all these, whether it's
Fantastic.
companies, talent, AUMs, and infrastructure.
So 25,000 people. How many of you are working in Gift City and have moved to Gift City in last 2 years? How many of you are working in Gift City and moved in last 2 years, right? So I think a lot of us have moved, relocated within India. He relocated from Abu Dhabi. We imported him back to India. So let's start the rapid fire. We have 58 seconds to go. And which will be the quick ones. The one word that defines Gift City.
Growth.
Fantastic. Biggest opportunity over the next decade.
Biggest opportunity for the next decade.
Next decade, yeah.
Value creation.
One reform you would like to see.
One
new reform you would like to see.
Trade.
Yes. Advice for young entrepreneurs.
Take a chance on Gift City.
Fantastic. One reason global investors should look at Gift City today.
One? sorry.
One critical reason global investors should look at GIFT City today. We have Vimal Bhai and so many other investors like he spoke about. One critical reason they should be coming to GIFT.
Gateway to the biggest market in the world.
Fantastic. The population and the growth. Awesome. Thank you. We have finished before the timer. 6 seconds left for the momento. Thank you so much. Bye-bye. And it was a wonderful session. I'm wishing you all the best for the US trip. Yeah, thank you.
That was amazing. Mr. Bharat, so if he gets in $3 million of investments, what is the 1% commission rate for 360 TF? We can always mix patriotism and materialism. I'm just kidding. Can we invite Mr. Ravi Bharadwaj and Vikram to please facilitate Mr. Bharat? Thank you so much. I realize that I'm standing between you and your lunch. So I hope you've enjoyed the sessions of the morning. The lunch is now open. Please go enjoy. We'll be back by 2:25. And we've got so much praise for being on time, so let's not break the chain. So I'll see all of you at 2:25. Thank you so much for being such a wonderful audience. Hello, everyone. I'm back to pester all of you. Can we please take our seats so that we can begin the second half of the conference, please? I know this is the afternoon, but I can promise the sessions are as good as what we did in the morning. Okay, let's get going. Welcome back, everyone. I'm sure all of you have become best friends over lunch. But after an amazing and full meal, I think we all need to wake up, at least I do. So we're going to do a short exercise. Don't worry, I'm not going to make you do pranayam or Surya Namaskar. What I want you to do is turn to the person sitting right next to you, ask them their names, have a very small chit chat, and give each other a fist pump, a clap, a hi, whatever you want to do it. Right? Can we take 2 minutes to do this? Turn around to the person next to you, say hello. If you haven't met, try, or maybe find somebody you haven't met when you were busy eating lunch. 2 minutes. Wake up, everybody. Oh, you can say hello to me. Okay, great. Okay, I'm going to quiz everyone now on who's sitting next to you, what are the names, what do they do. Perfect. I've been very eagerly waiting for our next session. I'm a deep tech investor, and I've been recently telling some of the funds I work with to set up in the Gift City to avail of the global NRI and HNI investment potential. In the words of Gift City veterans, many of whom have graced this occasion, GIFT was created with the perspective that a lot of Indian-centric business goes to Singapore, Dubai, and Mauritius. GIFT City will be the vehicle to be able to do business in India in foreign currencies by accessing global capital and a well-built financial ecosystem. The Gift City has enlarged this vision with every passing moment, and our panel now will discuss both problems in cross-border investing and how GIFT IFSC can simplify access, taking into view global tax jurisdictions, compliance, FX risks, etc. And to moderate this panel, I would like to invite Dr. Abhishek Jaju, please to come on stage. Founder and chairman of AJMS Group, based in the UAE. Our moderator seems to have taken "don't put all your eggs in one basket" very seriously. He's built companies across AI, fintech, insurtech, compliance, to name a few, while growing AJMS Group into a 700+ strong organization across 10 countries. A trusted advisor on AI governance and regulations, including at the highest ranks of the government. Dr. Abhishek Jaju, very, very welcome, and the panel is all yours.
Thank you. Thank you so much. Obviously, first of all, great organization done by 360TF. So congratulations to everybody, especially Pankaj and Vikram, for putting such a great show in Gift City. Hats off to all of you and your organizing committee. For today's session, it's again building up on the momentum which we have got and building on the words which we heard today, that we have to keep compounding the things. So my purpose is here to make sure that the compounding doesn't stop, and I continue and bring you a strong panel of people who would address and bring more important concepts, especially on how they actually see Gift City to be a pioneer in unlocking the cross-border investments, which we have seen globally happening, but now being discussed not only within the closed doors of Gift City, but globally. So joining me today, I would like to invite Mr. Dipesh Shah, who is Mr. Dipesh Shah is, again, needs no introduction from IPSCA. Along with him will be joined Ms. Bijal Ajenka
from Khaitan and Company, Dr. Suresh Swami from PwC India. I think the lunch people have not taken, so the clap should continue. Last but not the least, Mr. Brajesh Jaisalmeria from AK Capital Finance. Yeah. So before we start the panel discussion with this star-studded and beautiful panel, I would like, starting from you, Ms. Bijal, if you can give a small introduction about yourself. I know time is limited, but still.
Hi, good afternoon, everyone. I'm Bijal Ajinkya. I'm a partner in perhaps the largest, the oldest, and the best law firm in the country. So I'm a partner with Khaitan, and I lead the succession as well as the tax practice. Thank you.
Hi, good afternoon, everyone. This is Brajesh Jaisalmeria from AK Capital. We are one of the largest bond player in India. And
good afternoon, everyone. I'm Dipesh Shah, Executive Director Development, working here in the IFFC and GIFT City for quite some time.
Hi, I'm Suresh Swami. I'm a tax partner at Pricewaterhouse. I'm based out of GIFT City. I believe in the philosophy that you always keep the regulator above you. So the regulator is on the second floor, we are on the first floor.
That's a very nice strategy. We all should learn. But thank you so much for joining the panel. Before I kickstart, I think just to set the tone, what we want to discuss today, we want to make it very interactive. And obviously, we will ensure that all the panelists contribute from different areas, starting from how incorporations of foreign entities and funds are happening, along with the regulator, giving the regulatory perspective, along with the business side, where Brajesh will talk about how the capital investment is being done. And when you make the income, I need Mr. Swami to help us do tax efficient structure for especially people like us who are NRI and also global families who are looking at GIFT City today, especially more than ever, to come and set up. Before I start, I'll give the podium to Mr. Dipesh as a regulator. How do you see, especially from the NRI, over the last 6 months, we have seen such huge demand, especially focusing on the FCNR deposit and the leverage route, which they are seeing from GIFT City perspective. But there are again regulatory challenges for them, opening account, doing the KYC, not being in the country. How these all things, especially from a regulator, one is to ensure that the business thrives. At the same time, the right regulations and controls are in place for all the banks to onboard the customer. And the third, which is again a fiduciary responsibility of a regulator, to make sure that the vision on how GIFT City was formed, becoming a door to the global capital, to help them grow, to provide them the entire efficient structure. So all these three things coming together, if you can highlight how IFSCA as a regulator is playing a role in that, that will really give everybody a good perspective.
Sure. I think let me start with the last question first, which is, what's the structure of GIFT? It's an offshore center within onshore India, which you know that by now that when you set up in GIFT City, you are outside India from a FEMA, foreign exchange law perspective, which gives you a similar access to undertaking international financial transactions more efficiently. So that's your starting point. Unless and until you are offshore, you can't transact freely. So that's a starting point for a financial center, and that's what the government of India has provided for GIFT City. But when you get started as an offshore center, the problem statement is it's not enough. You need to be comparable as far as the regulations are concerned, the tax law are concerned, and all parameters, because in today's world, it is the institutions which are the choosers. They can choose location based on what is available from their perspective. It's no longer you can say that, look, this is what I offer, You give and take. You know, you want to take it, you would take it, otherwise you leave it. It's not that type of a world. You have to continuously make sure that your policy and your regulations are benchmarked with the international best practices. So what government did was to benchmark the regulation and tax law for GIFT City with the other financial centers. And I'm sure Suresh would agree that, you know, before GIFT, he would have probably the booklet of doing business in Dubai, doing business in Mauritius, doing business in Singapore. And probably when it comes to India, he will say, no, in India you can't do this. You have to go outside India to do this. Probably with GIFT coming in, the good part is all his booklets are gone now. You know, you can just need to have one booklet saying doing business in GIFT City, and it answers most of the questions that the institution used to come to them and say that, I don't want to go outside India, but they were forced to go outside India to do India dollar business. I think that is what the GIFT is now answering, that you don't need to go outside India. You create business in India, you create jobs in India. That's the bottom line for the GIFT City. But I think let's analyze, the question is multifold as to what then it is trying to achieve. It is trying to achieve multiple things at this point of time, because we are starting late. We are not, you know, London, which is 100 years. We are not US, which is 100 years. We are not Singapore, 30, 40 years history. Even DIFC in 2004, 22 years history. ADGM 2015. Even Labwan in Malaysia, 1989, 1990. So we are starting in 2019, the unified regulator. Obviously we started in 2015, but we have started late. We have started this whole journey quite late, considering the opportunity that India represents. So for us, I think to quickly jump to where the others are was to make sure that the regulation comes in line with the international best practices, and fortunately for us, we could see Singapore, Dubai, Abu Dhabi and others and learn from them and probably adopt some of the best practices, make sure that the institution understand this. Thanks to the law firms present here, that they are also making it simplifying for the end users to understand how you can set up. That has given us probably a comparable stand in terms of the international best practices. But when it comes to India, and it is often said that when you land into India, you land into law of regulations, you know. Even if you don't do anything, some law you will be violating. So that's how the laws are structured. So for us, I think the perception was so hard to first to change and say that you are lending into GIFT, you're not lending into the whole of India. So it is a carved out zone, you are outside FEMA, you are outside certain laws, and you don't need to comply with domestic law. Now from an investor perspective, I can go to Singapore and invest into India. So unless and until the GIFT becomes a similar to Singapore or others in terms of as an investor, nobody wanted to come. So what happened for us was make sure that the investor journey coming into GIFT, whether it is a tax law or whether it is getting a PAN card, written filing exemptions, all had to be benchmarked with the outside. And then came the onboarding journey, because in India we are part of PMLA rules. We are not outside, we are not in Dubai and Abu Dhabi and say that no PMLA will apply when you are operating in GIFT. It has to apply. And that's why we needed a carve-outs and make sure that the onboarding journey for the investors becomes smooth. And today I can very confidently say that now the solutions have started emerging in GIFT, where an NRI can be onboarded, including a foreign national, in GIFT City with a straight 60 minutes online journey without having to file anything on physical documents. And this journey has been made possible because so many solutions have now emerged, and there are institutions in GIFT offering those services to onboard. So it's a long answer to the multiple questions that you said, but I think the bottom line is GIFT is almost there in terms of what you wanted to achieve when you wanted this journey to be smooth for the foreign investors to invest into India or Indian investors to invest outside.
No, thank you, Mr. Dipesh, and I should commend the vision of you and the entire team at IFSCA that within 60 minutes onboarding, which is even in the best of the best regulators have not been able to achieve. They still takes days to do that. So I think a round of applause for them. Amazing work which you guys are doing. Moving on, I think you have set the tone that why GIFT City is a preferred partner for global families and investors who wants from India to the world on especially on dollar denominated investments. But my question now goes to Ms. Bijal. You have been working closely with Gift City, and you have been working both on the inbound business and the outbound business. Outbound business obviously makes logical sense. A lot of families and the structure in which the money can be efficiently sent out, invested without non-compliances, like he said, is very important for all the Indian groups. But again, how are you presenting or how are you seeing people are looking at Gift City from the global investors' perspective? And is it easier than ever for you to bring them to Gift City today?
Thank you for that. So I would say that, when you're looking at international investors, global investors, they're looking really at GIFT not only as a gateway to India, which is providing them a lot of, tax efficiency as well as a regulatory leeway, but they're also looking at GIFT as a gateway to really invest across the world. And that is something which I would say it's really hats off to the authorities to be able to create a center of excellence wherein you are really neck to neck trying to compete with the Singapore, Mauritius, DIFC, etc. I mean, of course, there will be, matters to be ironed out, with respect to, when you're looking at just pure succession laws and all of that as to how these will really pan out for such global families. But having said that, when you're looking at global investors, they are looking at GIFT, especially, fund managers as well as investors as a real gateway to India. And of course, with the derivative trading, exemptions, etc., it's definitely much better to invest through GIFT than to actually access any tax treaty.
I think this is very important point what you mentioned, that when they are looking Gift City, they are looking as gateway to India, and which means that there's a lot of business which will come in the form of funds, in the form of investing through bonds or accessing Indian capital markets. So Brijesh, my question goes to you next. How do you see and what are the platforms and what is the support today? I have a regulator here, I have a lawyer here who can support you on the panel. And this is the forum where you can speak out from the business side also, what are the support you need. But there is a big opportunity which is waiting for people like you who are one of the largest players in the bond market. And obviously the global players look at, like she mentioned, a gateway to India. So please elaborate on that.
First of all, I would like to thank 360 for arranging such a platform for us to demonstrate that how things are working. We had eminent participants over here, regulators are there, so we can put our thought very candidly and we can propose few whiteboard papers which have been there. As an Indian, if we see over a long period of journey from a agriculture-based nation, we have been now service-oriented nation. Earlier we used to be money savers, now we have learned how to invest. And that eagerness to invest more is there. And gives that platform those who are NRI to invest in India. Few things are there. One which sir has already highlighted, that account opening is there for within 60 minutes, which lot many of us are not aware about. So that needs to be demonstrated well within the system and to the end user, that how this works. I think that gives a major light to them. Lot of issuers are waiting in terms of MSMEs to get into the dollar denomination bond, gives that way forward. And a lot of consultation papers have been discussed with SEBI that how this market can be deepened. And one of the robust way which we see is through OBP platforms, which we had within our system also. That gives a huge platform to access anybody from world to, at a click, you can do your KYC and get invested in dollar denomination bonds within the GIFT circumference. That gives huge opportunity. What we have seen in India, that UPI has done a wonders and world is chasing now UPI. We see if GIFT give that platform, and which is one of the unique platform which can be built for global investors to invest in India for Indian companies in dollar denomination, or the cross-border company to have that Indian investor as a base. There can be few things which can be, done across to support, and which I think regulators are doing with this. And to deepen that entire thing, that clarity needs to be there, that how the things can work on.
I think, thank you so much. Clarity is the cornerstone of any success story. And I think a lot of consultative papers and papers issued by IFSCA, SEBI and other regulators working unified way has brought much more clarity than ever. And one of the points which I think Bijal also mentioned, Mr. Dipesh also mentioned, and you also touched based upon, was for global investors about taxation. And that is something which a lot of people are not aware globally, that how GIFT City provides them the best efficient structure, and especially the tax structure. And that's where I leave Dr. Suresh the podium to enlighten all of us how he has been advising on the tax efficiency structure. And actually, when you do a benchmark compared to other global regulators, how the tax efficiency structure comes into picture in GIFT City.
Sure. So maybe I'll start with some anecdote. When I moved here to GIFT City about 5 years back, and my son used to go to school and used to tell little friends that his father is working in GIFT. I could see when I used to go and meet the kids, I could see a spark in their eyes, saying that, when you go to GIFT, do you every day get some gift? So my answer at that point in time used to be no. It's no, there's nothing like that. I used to try and clarify a lot. There's no such gift and all that. But over the last 5 years, if you really ask me, I think my answer has started to change. It has started to change because if you see the amount of changes which have come, right, and the amount of benefits which have been given to taxpayers, that is really humongous. And what we really need to probably look at, and when a lot of people ask me, what is the benefit? And there's a lot of benefit. Some people say there's a lot of benefit to GIFT. Some people ask me, what is the benefit? I think what we need to really do is look at the tax benefits in layers. Right? Whom are we really talking about, and what is the benefit? So firstly, let's say we are talking about the investors. Right? Investors who are coming in investing in GIFT, right? But if they are investing on the exchange, there are tax benefits, there are tax exemptions which have been given to NRIs who are buying and selling, say, securities on the exchange. If you are investing in a fund in GIFT City, the regulations have clearly said that you don't need to obtain a tax ID, you don't need to obtain you don't need to file tax returns. Right? If you are, say, the fund manager themselves, the fund manager has been given earlier a 10-year tax holiday and now a 20-year tax holiday. So if you are a fund manager, you get that benefit. If you are the fund itself, you are a Cat 1, Cat 2 fund, there is no leakage, it's a complete pass-through as far as the fund is concerned. Right? And if you look at it from a transaction standpoint, if you put that layer, there is no GST, right, as far as transactions are concerned. Any procurement which you do, there are no GSTs. So if you ask me, there are a lot of these benefits. Every type of investor and type of player has its own benefit. Apart from the fund industry, if you look at players like us, chartered accountants and others, right, or any other player who is set up, the moment you get a license from the regulator, you get a 20-year tax holiday, 20-year out of 25 years. And the sweetener which has come in this budget is that apart from the 100% tax holiday which you get for life, perpetually, you get a 15% tax rate. Right? So which is like the industry used to ask a lot as far as certainty is concerned, and probably we have that certainty coming in this budget. If you are borrowing from a non-resident, if you do that borrowing from India, there is obviously a tax leakage, there is a withholding, and your cost of borrowing actually goes up. But if you do that from Gift City, there is no withholding, and therefore to that extent the gross up which happens as far as tax is concerned, that goes away. So I think government has all of this could not have come in at one go, because all of this needed deliberation with the industry and understanding what the industry need. But the government along with the regulator has been receptive, and you see that these changes have probably come in, and now probably we are in a phase where it's probably a very, very exciting growth phase.
Thank you so much for putting it very, very effectively, that you mentioned about this 20-year, the change in, and it's actually tectonic shift, because the way we are talking about tax holidays and the way it is going in a very clear and concise manner obviously gives a clarity to foreign investors to come in. So building upon this tax idea which is there, and probably before I go for the next round of questions, I just wanted, because there are a lot of investors who are both inbound and outbound in the crowd. How many of you are still not convinced to invest in Gift City? Please raise your hands. We will only ask the questions for them. I think no one. So we have achieved our target.
There's one person who is waving his
Perfect.
hand. Okay.
Perfect.
So we should know.
And that is my question. How can I convince him? One idea, starting with you, that actually can make a big difference compared to a global players. Like if I talk about DIFC, ADGM, Singapore, the different tax structures which is being provided. One area where you say Gift City has done something very innovative compared to them, or something which actually attracts him to now choose Gift City.
See, I'd borrow from what my panelist just said, certainty, right, today. Gone are the days where you had to rely on tax treaties to get any, say, relief or tax exemption. Today, what we have is tax law, which is coded under a domestic law. You don't need to rely on treaties. You don't need to probably satisfy the substance, the PPT test or substance test, whatever they call, which is there as far as tax treaties are concerned, and live with that uncertainty whether even after having done so much, will you be entitled to the benefit. Here, you have a regulator which has put down the regulations. It is a fully disclosed model. You really go to the regulator, put up your business case, the regulator looks at your case, and then he gives you an approval. And then from the risk of which usually lingers in tax treaties is that there is always this fear of general anti-avoidance rule, GAR, which can come in. Here you have the tax law which says that if at all if that CBDT has to invoke GAR, they will have to come to the regulator, ask for a factual report. Right? Only if they are not satisfied, then they can probably proceed. So there are a lot of certainties which have been built into the system. There are safeguards which have been built to the system, and that is what gives a lot of certainty to the investors. And that is what I would say from an overall Gift City standpoint, that's what we have to offer.
Excellent. Certainty is what it is there, and this 15% aligning with the global pillar 2 tax of 15% for large corporates is also a very good initiative, because it gives an organization like Google whether they should come here and have the, let's say, APAC headquarters set up in Gift City or not. And if that they are doing, how they are comparing their taxes compared to different jurisdictions. So that clarity is very important. Before I move to the regulator and the legal side, from the business side, he needs a platform from you to invest. Give him the best platform.
So I I agree with what Suresh told, that certainty has to be there. And the kind of moves which the regulators and government are doing and the kind of initiatives they are doing, they are making their marks, but the steps are baby steps that needs to be gallop fast. And one major difference which can be created, and as I told earlier also, that would be a game changer, and the kind of transformative the generation is. We are highly a technology driven field, right? So GIFT needs to think in that perspective, that this generation is not here to wait for 60 minutes to get that KYC done. Once they have decided that I am investing, so that needs to be done on the click of the second, right? So technology would be one thing which would be a game changer. For bond market per se, we have been there on the technology side in last 4-5 years with the blessings of all regulators. The OBP platforms have done wonders in that segment. And if GIFT open their arms and, welcome us and promote us in a same way that they are promoting in the corporate, I think this market is going to be robust.
Absolutely. So basically the red carpet is what is being demanded, sir. What is your view on that?
I think dealing with this corporates for many years, I can tell you, whatever the red carpet you provide, they will come up with some more. You can
compounding effect.
You can never satisfy them. Because Suresh, every budget we will have 30 items coming up for tax changes, and it never ends. But I think what is in front of you is what you should experience, and I think that's where we are. We should experience the way the others have, and there are first movers, there are some investors would have a risk, so they will take their call. But those who are first movers always has a added responsibility, because they are actually showing the path. So I would consider even 360 TF from that way is laying down a path for a larger ecosystem to emerge. And I think that is what probably the GIFT City today represents. There are takers, early takers, and there would be late takers, but those who have come in first, they are going to build the ecosystem behind them. And that's what probably as a regulator, we see our role to facilitate them, not to give them more pains in the journey, help them and get them going so that the others can see the examples of this and probably lay the path for the larger ecosystem to emerge.
Absolutely. I think you have absolutely said it right, that appeasement is at a level which has to be looked from the regulatory side in a very different way. But the point which you mentioned, and you brought 360 TF also in, was also very important, that, and it is actually true, that private players or the corporates or the ecosystem players actually goes in a joint hand together and go to the regulator with perspective, with ideas. And today what Brajesh has given, obviously 360 TF can sit with him, build that path, go to the regulators and make sure that all the ideas are presented. And obviously the regulator will come out with consultative paper, the process and everything. But before I go and conclude my session and take a couple of questions from the audience, especially from you, if you are still not convinced, I will take the question. But Ms. Bijal, you have heard all of them. What is the truth? Because you deal with an investor who's sitting outside India. He uses Khaitan and Company and especially your services and wants to establish in GIFT City. What's his major concern?
So I would say the biggest concern would perhaps have been, and I think it's really evolved over time, and of course as lawyers you love to be in the side of the grey, but definitely not an investor. They would want that certainty. I think what they really got is, I think the regulations or GIFT came before the regulations did. And it took a long time to really iron out and provide that certainty. However, what investors really like, one is the fact that there's certainty, and the second is the fact that there is access to a regulator. And it is important where that access is there for them to really understand the fact that, okay, if this is what we really want, you do have a regulator who's actually working on it, is open to hearing our thoughts, and is actually playing out something which is going to help us. So I think that is something which for a lot of the investors they have enjoyed, and they do continue to actually see it. And of course, it's always going to be a case wherein you'll keep, there's so much of an investment option in India, it's only going to continuously evolve. So you will see them much more. Just one point which I would say that, when you're looking at any investment in India, it also is important, and an investment, as Vimal mentioned, it's a belief, it's a conviction. And to that extent, it's at the end of it, you're really looking at this conviction turning into a legacy. From that perspective, just having a governance structure as to how this investment is going to leave a legacy for the family is also something which needs to really be cleaned up. And whether it means if we're really looking at, say GIFT becoming like a hub for, families to set up, say, family investment funds, the structures which should evolve here should be such which are globally recognized. So whether it means common law trusts, whether it means foundations, having those type of structures will actually help from a long-term perspective.
Very, very, very important point. Foundations, trust, and these vehicles, especially globally also, because when I see this getting set up, the ecosystem is not there to thrive. The banks are not opening account because trust, it is a memberless trust. Foundation can be memberless. It can be sponsored by a trustee, but who are the actual players doing that? The KYC is not there. So that ecosystem and that clarity is something which I'm happy to hear that GIFT is also providing, and that gives a global perspective. Can we take a couple of questions, the organizer? Because I think one of them is there. So, yes, sir. I think I will come to Rajesh ji aapke paas. He has one question. Sir, aapki आवाज बुलंद है. The arbitration process and everything. Yes, that is something anybody, sir, if you want to take.
I think if you really ask this question across all the financial centers, everybody has their own challenges. We are in today that type of the world where you can't go to one financial center and say in certainty that everything is good here. Everything needs to be re-examined with the type of the geopolitical things happening globally. So even the best of the financial centers today have their own challenges. And for us, I think, as you rightly pointed out, that what are the pillars? The pillars is the regulation, tax, and the arbitration or the dispute resolution. So while the regulation and tax has been sorted out, the government also announced setting up an international arbitration center, which is a work in progress. The law has already been, been submitted for deliberations, and this is something which the government and the regulator are working on. So you will see in the journey that also happens. But let me tell you one thing with very firm conviction that, look, it is us as an individual and us as an Indians to also make sure that we also value what is getting created. There would always be, something up and down in everything that you do in life. That is not the stopping point. If there is a stopping point which is that I can't proceed because of this, that we are considered as something which is a non-starter. But something which is as a part of the journey, I think we should adopt that. And that's where we do believe that at the financial center, many things have started been coming to the place. There are few pieces that we have to make sure that it really finds the right solutions, and that's what we are working on. But today, globally, the challenge is everywhere there are some or the other problems, and people are looking at much more certain zones, and probably India from that perspective emerges as a very certain zone for the investors, which we are seeing from the GIFT City perspective.
Yes, one question sir had, if we can give the mic. Here.
This is linked with the same question that DIFC Dubai has found out this solution. They delink the DIFC from the normal code procedure, etc. They have created a separate DIFC code. I think that can be a starting point to think how the gift city can provide the similar. If suppose you are subject to the same jurisdiction, which is normal procedure in country which take the number of years or even number of generation to get the justice, that can be a big hurdle according to me for the whenever there is a dispute, differences, interpretation of law. If it is available for the quick resolution, that can be a very big strength for the gift city.
Totally agree. I think we have a 10-year journey now, and with so much of transactions that you saw, fortunately there has not been any major commercial disputes at all which have emerged. But obviously Khetan is now opened their office here. I'm sure she will find some disputes to be operationalized in gift city. But the point is, I think it's a work in progress, and we will probably reach there, what you are saying.
Yeah, absolutely. So thank you so much, both of you, for the suggestions and the ideas. I think all the panelists will agree that these kind of conversations will only thrive Gift City overall. And feedback is a 360-degree feedback, like the regulator also mentioned. What are the things they have done immensely well, and what are the things you guys as corporate and the ecosystem ancillary partners are doing. So together, I think the future of cross-border looks very bright for Gift City. And with that note, I would like to conclude and make sure that this compounds ever and ever. Thank you so much for being a great panelist, all of you. And thank you everyone for being such an attentive audience. Thank you.
Thank you very much. I think a regulator, a businessman, a compliance, and legal together, often at crossroads, but I think you did a great job in getting them all together. So thank you. Can I invite Ms. Rajni Ravi and Mr. Lalit Zawhar to felicitate along with our two Desi boys, Pankaj and Vikram. Thank you, panelists. I think this is a never-ending sort of a cycle. The regulators think the corporates demand too much. The corporates think that the regulators are not doing enough. And you say we have a separate court in the DIFC, which UAE does, but wait till you have to sue a fund and you'll know what the problems are. So it's an ever-evolving sort of a landscape. Now we move on to our next session. It's all about woman power. as Dr. Rumki Majumdar ties up the conversations around economic transition, whether it's temporary or structural, the underlying reasons of demography, technology, monetary systems, and global power parity, and how to prepare for these massive shifts, which frankly is not for the weak-hearted. Dr. Rumki, can we please have you on stage? She's a business economist with Deloitte India and has 18 years of experience in macroeconomic and industry research, has published 100 thought leader reports, wow, and has supported chief economist of Deloitte US and Deutsche Bank. Again, I think I'm a little obsessed, but as President Trump says, she knows more about macroeconomics than anyone else in the field. Over to you.
Hello? Yeah. Shraddha, you pretty much gave me a heart attack when you said women empowerment. I was like, my topic changed. Like, I know the world is changing every other day, but topic changing like 2 minutes before the stage is like, But first of all, I would like to thank you, Pankaj. Vikram is not here. Vinita, for involving me here again for the second time. It's a privilege to be here speaking to you all. Thank you, Pinakida, for giving me the reference and introducing me to this great crowd. And I'm extremely happy because many of you were audience last year as well. And you do remember me. I was really happy that maybe I made a difference. Do you even remember what we talked about last year? Huh? No? Well, we don't, even I don't remember, trust me. Yes, because things have been changing pretty much every month. Last year, when we were worried about tariffs, 30%, 50%, whether we will get a deal, no deal, India will, what will happen to India? Today, for the last 5 days, I've been looking at the newspaper, not a single word about US and India deal. Chal raha hai. Since January, it has been going on, but nobody's paying a heed to it. Because now the world has moved to another crisis. We have been just moving from one crisis to another. And we are just losing our sleep over it, only to know that next year it's not a crisis, there's something else that has come up. Maybe it's time for us to step back and think, are we seeing anything structural that we need to worry about rather than moving from one crisis to the other? Do we need to worry about something that is probably changing the way business is being done? How is my business is going to look like 3 years from now? 5 years, forget it. Maybe next year. But structural changes, and that's what we are going to see here today. Okay? There you go. So some of the structural changes that we thought of bringing out here, and they may not be exhaustive, by the way, are these 4. What we thought of and how they are changing the balance of equation in the world. 1, geopolitics. Have you been counting how many wars we had since 2022, maybe? 4 years. 5 wars. 1, you might say, hey, Venezuela was not a war, man. But yeah, the president got abducted overnight. Well, no bombs were fired, but okay. But it changed the geopolitics. Suddenly, oil supply increased. Not now today, but maybe another 10 years from now. But one event can change the dynamics so much. And we saw 5 such dynamics happening, one still continuing. Then about AI. Everybody's talking about AI. How many of you use AI in your life? I'm sure everybody will raise hand, and even, okay, my neighbor's raising, maybe I should. I ask you a question. You have done your annual checkups? Most of you, right? How many uploaded that onto ChatGPT and queried it. Why not? You know, I saved 1,000 rupees doing that. Took my medical checkup, uploaded on ChatGPT, asked what my problems are. It gave me a fantastic analysis. What just happened? I got exactly a doctor's bill just got reduced. I didn't pay the doctor fee. I saved my 1,000 bucks. I got my value. What is it happening? Just imagine, multiply this by 1 million. There will be millions such doctors who will not be needed. You might be seeing the doctors' revenues going down. Have you thought about it? That's where AI is going to take you. Very simple. There is a startup guy who's preparing a legal draft. And they're like consulting one of the biggest legal guys who can draft it. All he had to do, and this is an idea for you also, whoever is starting up, upload it on ChatGPT, upload it on Claude, and ask each other, find me problems here. Do you agree with each other? Now, two of them are fighting with each other. Just imagine this could have been done by a lawyer. They found 50 flaws done by 3 legal, and they're paying a bomb for that. That's where the world is going. Do that if you haven't. And seriously, there were some really interesting things that they had missed out. That's where AI is taking you. That's where AI will change a new order altogether. The way you do business, the way you take services. And by the way, have you ever thought about, and this is where we are researching also, imagine hundreds of doctors, hundreds of lawyers lost their salaries. What happens to the GDP? What happened to the GDP? GDP is sum of all those revenue, right? So if your next year's GDP came down, what happened? AI is actually impacting your GDP of your country. Nobody's thinking about that. That's how powerful AI is going to be, which is going to impact not just jobs, but economies, economic numbers, fundamentals. Everything will change because of AI. How you do business, how you government make policies, because everything is as a percentage of GDP. Your GDP numbers will change because suddenly the revenues are going away. It's not that the value is not getting created. I got my doctor service. He got his lawyer's service. But the fees just disappeared. That is what even we are doing a research on, is how is AI going to impact the GDP of a country? It's scary, by the way. Next, I'm sorry. When I didn't want to change, it changed. Okay. Sustainability. We are seeing so much of changes happening. Europe is seeing so much of weather changes patterns, and how is it impacting not just people, but businesses? That will have an impact on how you need to prepare yourself. And of course, credit conditions. Money will not be flowing all at the time. One trigger and suddenly the market will go dry. You are seeing inflation happening in the West already. Fed might be raising rates. ECB is already raising rates. Who's going to fund you? Where is the money going to come from? Another bomb drops in Iran, FPIs flow out, FDIs come down. You are suddenly finding yourself competing for resources because money is not there. Everybody's sitting on the money and like, no, let's not invest. What do you do? So many things are changing, and amidst all this, somewhere the balance of power is changing. US definitely is one of the most powerful countries in the world. But China is also aiming to be at the top slot. When suddenly you have two big brothers fighting to be at the top, you will see a repercussion in the economy, in your economy, in every possible economy. How are you preparing for this level of global new order that is changing right now? We focus on geopolitics more because that seems to be most interesting. What we did is we looked at some of the geopolitical risk index since 2020. This is the pandemic time. It peaked, started coming down, and here, this is where I gave the talk last year. You thought you lost your sleep here? See where you are today. Look at the way the uncertainty has gone up and what it has meant for everyone. 4 things that we are looking at: realignment, trade and investment realignments that are happening. Did you know that trade blocks like USMCA, then ASEAN, these blocks have been trading 12% less than what non-trade blocks are trading among themselves or even investing with each other. Dost na raha. Yeah. Friends are no more friends. Now you are finding out partners who might be more a reasonable friend than a partner than a friend. Investments are coming down, so which means right now trade is no more a cost function. How resilient is trade right now is becoming more important. Industrial shift happening towards strategic sectors. If you listened to the budget this year, most of the focus were on strategic sectors. Can you name them? Energy, semiconductors, defense, logistics. Logistics is still coming up the ladder. But these are becoming strategic sectors. What happened to leather? Footwear. Anybody talking about it? They're important. They're very, very important. But right now, the government is focusing on sectors where you really, really need to be resilient. These are the sectors. And every country is now focusing there. Where is my vulnerability? Today, if US stops shipping or exporting chips, we are dead. 80% of our cloud services are provided by 4 companies. We all know those names. And where are they based out of? We know that too. How much vulnerability we have today to certain geographies, and if those channels close, we are at the mercy. So strategic sectors, critical inputs, minerals, aluminum, cobalt, copper, right? Critical mineral, the magnets, they are becoming pretty much the nerve of an economy. They stop, these strategic sectors also get into trouble. And that is where you know who's holding the most amount of critical minerals. China. They hold pretty much the nerve of every industry, be it renewables, be it defense, be it semiconductors, be it electricals, be it electronics, name it. So everything that is held by China right now, we know we have dependence on one geography there. So we are seeing ourselves how we are becoming a lot more dependent than what we think we are. And of course, security. Question, no. The government is going to spend a lot more on defense, which means it has to take the money away from somewhere else, right? So what this implication has? We need to be more self-reliant. We cannot just say, fine, China has control over critical minerals, so be it. No, sir. No, sir. That's not how it is going to be. What we looked at is the other risks that logistics somebody said, right? We looked at how much exposure we have to some of the primary shipping routes. If you're trading with the ASEAN, almost 9%, Africa 10%, and where do we have the most vulnerabilities? Of course, we are all looking here, right? Hormuz, suddenly our geography knowledge is very good now. We know where Hormuz is, where is Red Sea, where is Mediterranean Sea, which I never knew, of course. Last 1 year, my knowledge has also gone up. But by the way, while you are looking at West, did you know there have been 80 incidences in Malacca Strait itself? 80. This is why even I was surprised by the number, which is to the east. So while you are looking west for all the uncertainty and shipping disruptions, there must be something happening on the east which you completely missed out. Are you aware where your vulnerabilities are in this shipping region, where you are doing business, where you have exposure? And what it means for your business, what it means, as these disruptions happen, your revenue realization is delaying for every disruption. You're seeing longer cash conversion, you're seeing higher insurance costs, you're seeing more working capital requirement, and of course, more collateral risks because ships are taking much longer route. Sorry? Fact, absolutely. I will come to that. I'll come to that. So, clearly, all these are having implications there. Next slide. Okay. How are the geopolitical shocks are traveling? How is it traveling at the economy level? Somehow the clicker is not working anyways. 3 F's: fuel, food, and finance. You all understand fuel? We saw prices go up. It was very down. We were happy. Yes, oil prices are back to 70s. And then again. We saw natural gas, commercial LPGs go up. India did a very interesting thing. This is where the crisis happened. Pretty much everyone raised prices of LPG. India did a little lag in raising the prices. They didn't want to pass it on to the consumers so quickly. What about fertilizers? At least urea is easing, but look at the palm oil prices. Where is it feeding into? Yes. Where is it feeding into? Your pockets. Your pockets. You are paying for this through higher petrol prices, through higher food prices, which accounts for 52% of your consumption, by the way, on average. Exactly. It's feeding into fuel, food, all is feeding into inflation, price rise, which you are paying, by the way. You are becoming poorer thanks to these. And then you have the finance, which is where you are seeing a lot of volatility in the money. FPI is where, I mean, last year we saw all outflows. February was a relief. We were seeing sunrise happening and suddenly a bomb dropped. And we saw, again, capital outflows in the month. And only in June and July, the numbers started edging up. Thankfully, since the RBI's announcement, FPIs have been positive. What happened in case of stock market? India is one of the worst performers. So let me explain the chart a little bit here. If you had invested $100 in Indian stock market, we are just tracking which stock market would have given you most returns. This is Vietnam. Your money would have become $150. Whereas India is here. You have gotten no returns in the last 2 years. India has been beaten up so badly in stock market. In terms of exchange rate, we also did the same thing. If you see FPIs flowing out like this, no returns happening, so much of uncertainties, right? Then you have foreign exchange rates, the worst performing currency. If it was 100, we have against the dollar, we are almost, like not 100, in the sense we indexed it to 100, not 100 rupee a dollar. Everyone has been indexed to 100. If they were 100 a dollar, where they are. Malaysia is the only one which has appreciated, and maybe China. All other countries have depreciated. India is the worst performing. And of course, yields went up. It is kind of now edging down, but if you look at the policy rate cycle, We are again seeing, this is the policy rates, how US, ECB and RBI had reduced the policy rate. They were all going in sync, as if they're dancing together. They were coming down, very good, good for borrowers, and now suddenly, ECB has already raised rates. Inflation in the US going up. RBI is also seeing a higher inflation rates. What does this mean? What does this mean? That if you go back, if yields are coming down, it might be short-lived for you. Now, what this means for you in India and for the trade finance? At least be happy that at least when we entered this crisis, the latest one, which is the US-Iran one, we were in a very good position. India was doing really well. If you look at some of the economic parameters, fiscal deficit, current account deficit, inflation, we tracked the growth or their as a percentage of GDP. This is the latest January numbers. Pretty much every signal indicators were in green. So we at least have a solace on the fact that we entered the crisis better. Things went awry, but at least it was better. We had domestic demand buffer. Consumption has stood up really, really well. People have consumed. And by the way, it was not by chance. If you thought it was by chance, remember last year? Exactly. Direct tax cuts, indirect tax cuts. In fact, last year when they announced the direct tax cuts, we were wondering what happened, why? It makes so much sense when we look back that the government did foresee, yes, maybe there's something coming after Trump came to power. And see how it has held up the consumption, that the growth remained resilient, despite the fact that geopolitical index has been at the highest level since last year. External balance kind of becoming more towards deficit, but still under control, much lesser than 2%, which is good because it helps your forex, helps your currency. And policy, as I mentioned, the governments have been very, very proactive. So has been RBI. RBI has been also keeping a very, very close track of how inflation is moving, whether they should take a rate increase or not. Very, very balanced way they are moving. So what does it mean? What do we have now? We are seeing a lot of uncertainties, and 4 ways your shock will come down to you. One, of course, as I said, food, fuel, and finance. You will see input impact and financial channels impacting you very directly, I did mention. Logistics will be, again, another issue that you need to look at. So if you're trading, if you're doing business across borders, this is another shock that will have an impact on you. And of course, the demand channel. It has held up so far very well, but keep an eye. Consumers will only consume till they can, right? And this will have an impact on margins, your cash flows, volumes, and cost of operations. So in that case, these are some of the determinants which will help you decide how exposed you are. So if you're making a XY quadrant, look at where you are in terms of your cross-trade border intensity. Which route are you following? Are you going through Hormuz or Red Sea? How big is your firm? What is the cash balance? And what is the pricing power? Which market you're playing? If you're in where your margins are close, you may not be able to pass on your cost of production to the customers because they will not be able to pay you. Simple. They are not in a position to pay you. So in an XY quadrant, look at which shocks are there and where you stand in terms of this. So what does it mean for trade finance? As you rightly said, when comes risks, there comes opportunities. Higher shipment values, very good. Longer transit periods, diversification, trade finance grows. You see more opportunities to grow there. When you borrow, who are you borrowing? What is your borrower's risk profile? Are you borrowing to an exporter, importers? Because they will be experiencing shocks very differently. Do they have lower margins or higher margins? Where are they playing? How exposed are they to which sector? Semiconductors? Renewables? Textile? Leather footwear? So see where your exposure is. And finally, what risk mitigation strategies now companies are taking? Because at the end of the day, if they are seeing risks, they will probably go for insurance. They will also look for export credit support, and of course, many risk-sharing mechanisms. So all these are opportunities that is coming up to you because of the geopolitical developments that's happening. So final slide. Let me summarize. Fragmentation is happening. That's something which we discussed earlier as well. This is how it will be. Uncertainties are here to stay. Today you're worrying about US-Iran war. Next year you'll be worrying something else. Your trade will become one of your biggest transmission channel for uncertainties. But thankfully, India is in a very, very strong place. It started off in a very strong place, and we have managed to sail through really well. 7.8% growth is not a joke, given the uncertainties we have seen. And trade finance will become extremely, extremely relevant, and a lot of opportunities will come your way because of these. So the question you ask is, where you are doing business? Which sector? Which corridor? Which geographies? Can you bring in technology to help make yourself more efficient? Because one of the aspects that was touched upon is trust. क्या आप मेरा पैसा वापस करोगे? Very important question. That trust, can I believe in you? And that is something can happen only when you have digitization and AI helping you do your job well. 50 problems in a legal statement is not a joke. It found out. A medical certificate I posted on ChatGPT gave fantastic results. I knew what I need to do next, for which I probably would have to go to 2 doctors to make sure whether the results are correct or not. And of course, where you're focusing, where are your risks, what you're doing to hedge your risks. So let me pause with that. I have about 4 minutes to spare. We can take some questions, or I can give that 4 minutes back to you guys. Take some questions. People ask you while you were doing the presentation. Yes. But yeah, feel free to ask. Yes, please.
Ma'am, we have the mainframe inflation numbers, yes, but the practical cost of purchase is like what we encounter is at least 25 to 30%. Where does it stop actually for us?
Okay, 30 to 35% looks quite large, but I don't know which segment of your effort you are looking at.
No, like the cost, like what we purchase at our level, like okay.
Okay.
So the income level is fixed, but then the inflation keep on going. We're getting poorer day by day. So how does that, what is the government is doing like to cut down on the inflation?
The government has been quite proactive in segments where it can control. See, most of the inflation that is happening has been supply chain driven, right? If you have supply chain shocks, your shipping industry is disrupted. If you do not get your goods on time, prices will go up. There's nothing the government can do about it. All it can do is ensure that it has enough inventory, make sure that there is no leakages while transporting goods from inventory to the consumers, and ensure that the policies are more proactive. I mean, that requires a lot of investments as well, where you're going to store them, right? But we did have. It's not that in fact, we managed to get oil from other routes to ensure. Cash reserves, yeah, it depends on how much requirement we have, based on which they will build inventory, right? It also has a cost to it. Who's going to manage those costs? So that.
Any view on the gold? You know, it went up, and you know, we all know, but it came down significantly. I know it's gone up again, $300 ounce in last 1 month, because of course oil is coming down. So do you think a correlation between oil going down debt market or a bond going down, the yields are going down, and again the liquidity coming back to the gold. What's your view?
Wish I knew. I wouldn't have been working in Deloitte, you know. I would have made my money. All I can say, if you can predict the next bomb falling, then you know where to invest. But as you said, if things are good, commodities prices do not go up that much. It's only during uncertainties is when you start holding on to more golds. So if you want to make money through gold and you're holding more golds, please pray there are more bombs being dropped. If not, please pray for more certainty, and probably the stock market, which is still stuck at 100, maybe that will start going up. So you can invest in stock markets maybe. So the best I can say is gold usually moves up. The question is, will it quickly go up or will it gradually go up? Will depend on what comes next.
As the US debts are ballooning up, dollars are being printed without any economic logics in unlimited form. Do you feel these are the threat for the world economy or for economic zone or economic process of the world? Because there is no check and balances on and it's going against all logic of the economical rules or economics.
I'm not supposed to talk about US. but just yesterday somebody pointed out that the debt went up to 40% of GDP. Shankar did. For 40 trillion, sorry. $40 trillion for the US. Who's going to pay? And who holds that debt? Have you ever thought about that? Whoever holds that debt, and how are they going to manage that debt? As long as they are powerful and they can say, I want to liquidate my debt this way, they can do that. But if the ones who are holding the debt are equally powerful, they won't let that happen. Then you suddenly see two big brothers fighting, which is already happening. And trust me, it's not just debt. In every way, be it AI, be it critical minerals, they are on head-to-head with each other, which will have implications on that. How things will follow will impact India big way. The question is where India can place itself in this whole gamble, or not gamble, or the checkmate that's going on.
That was amazing.
Thank you so much. Thank you.
So good. Can you just stay with us? We'll just call somebody politician. Wasn't that amazing? That was really woman power, even though that wasn't the topic. It was through manifestation. Can I please invite two equally amazing women now on stage to felicitate our speaker, my apologies. Binita Shah and Ms. Sujata Mohan, can we please have you on stage? And Pankaj and, well, please, you have to come de facto. You're the sutradhar of all of this. Okay, so from trying to figure out whether we should invest in bonds, gold, government debt, let's move on to the next panel. They say money makes the world go round. It's actually in trade, it's working capital that keeps the ship sailing. Our next panel looks at who provides that capital, how the risks are shared, and how technology is making trade finance a little less paperwork centered and a little more like 21st century. And to kick off this journey through blended finance, co-financing models, and structured trade solutions, a lot of this is jargon to me and which I hope to unpack at the moment. Let me call on stage the king of trade finance, securitization and financialization, Mr. Pankaj Mundra. think I've already introduced him in very glowing terms, so I'll hand over and let you take over the panel.
Happy afternoon, everyone. Everyone is awake. Awesome. Thank you, Shraddha, once again. And yes, this is very, very interesting because I have this interesting data to share as I call upon my team co-panelist. So I will, of course, request to join with me our mentor, board member, Mr. Peter Mulroy, who's come all the way from US. Peter, please join me. And then we also, in fact, I have an interesting panel. I have two Americans with me. Rumki didn't want to talk about US, but I have two Americans to talk about US, probably. So I will request now Mr. Dilip Masan on the stage, who's managing a large PE fund based out of America in UAE from ADGM. Welcome, Dilip. Awesome. And we will be also have Ms. Gloria joining us from TDB Asset Management from Mauritius, Africa. So interesting. What I will do is request each one of you to introduce yourself in 30 seconds and also why Gift City, why you're here. Peter.
My name is Peter Mulroy. So I was the former Secretary General of FCI. I was in that role for about 13 years. And I left in 2024 in April, and the last 2 years I was kindly invited by the man next to me to serve on the board of 360TF together with Mr. Vimal and all the other gentlemen that are here. It's really an honor, first off, to be in India at this time. I have been in my role, both in FCI and previously, a close hawk as it relates to watching India grow. And really over the last 10 years to see the creation of TREDS, to see the development of factoring from, back in 1991 when State Bank of India was the first bank to join FCI and the first institution to become a factoring participant in India, to see it now. And as Batul said earlier, the potential of growth in India, I couldn't agree more. Today, I serve on the board. I also serve on the board of an e-invoicing company in Belgium called BankUp. I'm actually the chairman of the board of that company, a publicly traded one. And then I'm also involved on a board in Greece, the National Bank of Greece. And I serve on a couple of projects with the United Nations and with the World Bank currently in Angola. So that's me.
Thank you, Peter.
Thanks. Thanks, Pankaj. Thanks, Peter. That's a tough act to follow, by the way. So I'm Dilip Masand. I'm the Senior Executive Officer of Argentum Creek Middle East, which is the Middle East subsidiary of Argentum Creek Partners. We are an emerging market credit fund with offices in Buenos Aires, headquartered in New York, London, and I run the Abu Dhabi office. So we invest in capital solutions in emerging markets all throughout the capital stack. We're very opportunistic. Why gift? As you can probably tell from my accent, I'm a bit of a prodigal son. I was born in Bombay, but we left when I was 6 months old. I grew up in New York, and I would say probably every decade of my life I've tried to find a route back into India, failed miserably every time. Whether that was, when the first SEZs came up, whether it was in Gurgaon, BKC, and then it was my dear friend Bharat Shivappa who told me, well, this is probably my 4th visit to GIFT. First, when the arbitration laws were being put in place, some of the lawyers I've worked with said to come. So Bharat and I were together in ADGM for quite a while, and when somebody that you trust, coming back to trust and how trust compounds, tells you, hey, come look at what we're doing here, try to be a part of this, just as we did in ADGM, I thought maybe I finally found my way home. So let's see.
Welcome, welcome. Thank you. Gloria, I hope I'm audible. I want you to give your introduction in 30 seconds and on 30 seconds why you think that Gift City is important for also India-Africa corridor. Gloria, over to you.
Okay, good morning. I hope you can hear me all, or rather good afternoon. You can hear me? Thumbs up?
Yeah, we can hear you.
Okay, so my name is Gloria Mamba. I work for an entity called the Trade and Development Bank of East and Southern Africa. We are one of several regional DFIs on the continent, but what makes us remarkable is that in addition to what is traditionally thought of as DFI spacing and infrastructure, 60% of our $10 billion book is actually in trade finance. We have seen this as an incredible opportunity to fund and support development across the region in which we operate. And I think what we'll find as we have this discussion is that there's a lot to learn in the exchange between India and Africa. As I said, I serve the part of the region that, the part of the continent that is East and Southern, which has had traditionally for generations very close links to opportunities in India. So.
Thank you. So we have discussed, friends, during the day that, of course, there's a lot of opportunity trade finance. Rumki also spoke about this. We know that a lot of banks in Gift City focusing on trade finance. Chairman also spoke about, Rajaramanji, about the, the overall lending book on trade finance out of Gift City. But what is important today is what we have all been speaking is there are a lot of banks who have moved to Gift City, be it Indian and multinationals. But we yet to see a unicorn from Gift City. We've seen unicorn from mainland India. Of course, we all know unicorns out of, but there's no single unicorn so far. Dipesh spoke about, we got the momentum in 2019. So it's 7 years. So we yet to see a unicorn out of Gift City. And what does it mean? That means a startup founder has to come to Gift City to add value to this overall trade finance ecosystem. We are one among them, unlike others. And what is also important is today, we yet to see a seed fund, which is funding this new factoring company. We yet to see a DFI becoming active and funding the trade finance and factoring companies in Gift City. So that's why this topic has been chosen and the panel has been created, that how can a development financial institution, whether it's TDB or IFC, BI, FMO, Proparco, Sweat Fund, DFC, we spoke during the lunch, can be invited and they come and contribute to the growth of the new finance companies or funds out of Gift City. Having said that, that has to happen. Peter, I come to you that with your 12 years of plus of FCI experience, you led the FCI, and of course 3 decades plus of experience in banking and factoring. What is your experience is about, or what do you see as a support or development financial institution to a new factoring company anywhere in the world? And how do you think that have played an important role in the growth of trade fund, new factoring company, NBFC doing factoring or receivable finance business?
Yeah, well, first off, I just want to say, I really loved Vimal Shah's presentation about the creation of trust and confidence. And, yes, what was the word? Compounding. I loved it, because this is what the topic's about. This is what DFI or any state institution does for small businesses or medium. It creates that trust. It's that spark. And so, I use China as the best example because, it's interesting. Culturally, Chinese hate when you don't pay, right? They want payments. If they're selling goods or services, it's in their culture, right? So they're very conservative. You have these huge institutions in China over the last 25 years, like the Development Bank of China, Sinosure. They dole out billions of credit insurance or funds to support their economy. I remember seeing this one estimate of the Sinosure has spent over nearly $20 billion in losses, credit losses, but how much have they insured? I know for a fact that they were in a lot of bad credits when a lot of the factors wouldn't even touch. Why? Because they're supporting their country's exports. So it's giving that economy all that confidence. I know that's not a DFI, but I wanted to use that as an example. You know, I know the lady from the Development Bank. Yeah. To be honest, Africa is probably one of the best examples. The creation of the Afro-Exim Bank, a spin-off of the African Development Bank, they have, for factoring, something like 20 programs with different factors throughout the continent, funding factoring activity. They have almost, I don't know the exact amount, but I would estimate about $250 million in lines to banks and non-banks, you know, just funding actual receivable finance activity. So, you know, fantastic. EBRD as well. EBRD is also notable for its ability to fund factoring companies. ADB, Inter-American Development Bank, more do very large anchor buyer programs, supply chain finance programs. And you know, the problem with that is if you're looking at impact for SMEs, the SMEs are not the typical large suppliers of big buyers. It's the long tail. And if you can't solve the long tail, then you're really not solving the issue of employment, of benefit. So I'll just stop there and say, you know, it's best to see when these development banks provide direct capital to factoring companies. And someone said earlier, I was talking to you saying, yeah, if you're you did. If you're a good factor, you're going to make good credit decisions, and there won't be any drawdown of a guarantee. If you're not, if you're bad, then you're going to have big losses. So you shouldn't be in business. So, you know, anyway.
No, thank
you.
Peter.
Yeah.
Gloria, we are audible? Yeah. So, Gloria, with you being CEO of TDB Asset Management for more than a decade, where you see as a role of, as a TDB Asset Management, as a DFI playing in the strengthening trade finance ecosystem and closing the trade finance gap in Africa?
Look, thank you, Peter, for setting that up for me. I think we really have a huge role to play. You talked about the African Development Bank and some of the work that they're doing. It's really based on the understanding that we have a gap in the market of about $100 billion in terms of trade finance, whether it's LCs or factoring, invoice discounting, you name it. There's a big segment of our economies that need to be covered. The particular areas that we think are important, as you alluded to, is SMEs. There's really, these people are, their challenge is not that they are high risk, it's just that they're underserved. And so identifying the opportunities and the types of products that work really well for them is a great part of what we do. We do it really in two ways, right? The first is that we do direct lines to financial institutions who might not be able to, so that we can reach markets we may not be able to. We also do it through our funds business. I run our asset management business. We run a series of funds, some of them trade finance funds. And we found big opportunities in Angola, in Ethiopia, in various countries across the continent to really make that trade finance available in pooled vehicles as well as in our own direct. I think what's also interesting is to think about, you spoke about Afro-Exim and the work that they're doing in developing trade infrastructure, things like the payments platform and the settlement system that really will make it possible to strengthen the wider trading environment and reduce the costs of transacting. So I think there's a wide range of what DFIs can do in this space. We've already seen the benefits of it, and I think we just need to be thinking about how do we grow this at a much faster rate than has been the case to date.
Thank you. Dilip, well, this is as a factoring of two part of opportunity. One is cross-border, which we've been speaking from Gift City, but there's also a great opportunity coming in Middle East and especially in UAE with e-invoicing implementation going live this year, is for domestic factoring. the UAE has got the lowest penetration as of now on domestic factoring. Now, having said that, factoring cross-border domestic as an asset class, and you being, leading the Argentum Creek fund, and globally you get been investing in real estate, double-digit returns and so on and so forth. Does this factoring opportunity from a fund investment opportunity perspective, whether new fund or existing fund, excites you enough that as a group you would like to invest in trade finance as an asset class, and especially we're talking about short-term trade finance as an asset class?
That's a tough question. Does it excite me? I don't know if I'm so jaded that nothing excites me anymore. Or as a credit fund, you're always looking at what's my downside, how do I protect my downside? So, look, it's an interesting opportunity, but it's the first step, right? And as you know, in the UAE, we've lived through 2 decades of fraud in receivable finance, in trade finance. We're probably one of the best jurisdictions at that, frankly, because collateral was so light. So to me, this is a move towards at least creating some transparency in the system. The act of double invoicing will disappear. So I don't think it's anything anybody should rush into. The other issue is it's not really an economy of great scale, right? So as an investor, you want to see scale. India is very attractive because of scale. The United States, even the cross-border trade between India and the US on the receivable financing side has great scale. Africa, great scale. I think the UAE is a great incubator, right? So, and we've got the benefit of the ADGM, the DIFC, English common law, et cetera, massive pools of capital that if you're a private sector actor, you're willing to put a model together, put a platform together, put your own skin in the game, then the sovereigns will follow you if they trust you and they know you. So, I think that, from our perspective, it's not something we would build, right? But is it something that one can look at this as a test case, as an incubator, and then say, hey, from this we can now capture the India trade, the Africa trade, the India-US trade in scale? Then it makes sense as a business.
Sure. The another thing, Dilip, you spoke about with your earlier experience of, or a past experience of selling a factoring company to a bank in US. Do you think factoring companies, as they grow in India and UAE, okay, do you see also there's an opportunity from a bank perspective or a use case perspective that these factoring companies over a period of time getting acquired by a large bank? Because we see a slow response right now with the banks in India and in UAE to penetrate or participate in factoring transactions. But do you think bank will have a strategy to acquire these factoring companies in near future, and with your past experience of an acquisition of a factoring company in US? Yeah.
Yeah, look, I think, old line businesses, when they want to get into new opportunities, they don't build, they buy, right? So clearly you would be de-risking them. You should be, if you're providing something that has positive cash flow, that's easy for them to model and say this makes more sense. But I don't know if that's the best opportunity for whoever builds that. Because in India, you've got such a big domestic public market. Why do you need to sell? Why don't you go public in a market like India? Or you can do dual listings, frankly, right? And then you have perennial source of cash from the public market.
Sure. No, that makes a lot of sense. Peter, while we know that DFI have contributed to equity investment, debt investments, do you also think that they can also be part of credit guarantee schemes? Especially like we in India, we have a SIDBI, Small Industrial Development Bank of India, EXIM. We have seen in UAE, Emirates Development Bank. We've seen in other part of the world where they're not investing, but they're giving a credit guarantee to support SMEs. Yeah. So from a lender perspective, the risk is minimized, and for a factoring company to borrow further, this portfolio is secured by a credit guarantee scheme of the DFIs. So what is your takeaway with your past experience of these schemes being supported by DFIs from a credit guarantee perspective? Yeah.
Pankaj, these schemes to me are so essential, and again, it goes back to trust. It's like you have to give the company that has a great idea that chance. And these guarantee schemes do that. I mean, you know, I don't view these schemes to be supporting, you know, medium, large corporate. They're really for the small to lower medium. You know, I'm on this project now in Angola. And it's incredible, actually. It's an oil-rich country, in a sense like the United Arab Emirates. It's going through what they call the diversificamais, which is the diversification of its economy away from oil and minerals. And I think they're in it for just a couple of years. It's a 2050 vision. But the point is, they also incorporated a triangle. They incorporated a strategy for guarantees for small businesses. They mandated the banks to lend up to 2.5% of their loan portfolio to SMEs. So it's actually mandated by law. And they also created a guarantee scheme called the FGC. And you know, basically any institution, non-bank bank, can go and get that guarantee. What I didn't like was that although they allow for factoring as a preferential product to use, all the banks don't do it because, like we said, many banks, especially in emerging markets, are new to factoring. So they do what's comfortable. Or as someone else said, they're lazy bankers. They basically just do a traditional loan. So one of my takeaways was, why don't you mandate, like you're mandating all these other things, mandate the fact that you're going to allow banks or require banks to at least a portion of their capital outlay is based on factoring. So just for them to learn and for them to, and they're guaranteed, they have a 70% guarantee. So the worst case scenario, and with the factored receivables, they'd make themselves whole. So they wouldn't have losses. So this is the point.
Yeah, no, makes sense.
Yeah.
Gloria, last one for you is, what are your experience like? We spoke about overall investment in trade finance. TTBs was being set up for financing trade finance in Africa. But has been, what are your experience so far in investing, especially in factoring companies, factoring fund, giving guarantee for factoring program, or doing factoring directly under TDB portfolio? We know Afri-Exim have a couple of programs to support factoring and receivable finance. But what has been TDB experience specific to when coming to factoring, be it domestic factoring in Africa or goods going from Kenya to South Africa or South Africa to Tanzania or outside of Africa?
Okay. Look, I think one of the things that we're really very pleased with is one of our guarantee program that has, over the past probably 5 years, we provided guarantees in the amount of $150 million that have facilitated 1.8 billion in trade. So really a almost 12 times multiplier. What we found is really helpful in terms of thinking about factoring and invoice discounting. The point Peter just made is that the commercial banks are sometimes challenged at looking at that. So we've expanded the scope of who benefits from our guarantees to include non-bank financial institutions and other such, micro lenders, you name it, so that the benefits are spread widely, and we have many players in that sector. What we have done also is provided training for regional banks. You'll always have the tier 1 banks with links to global entities, but some of the regional commercial banks that sit in that second layer have been the benefits of training that we've provided through our technical assistance, as well as the funding, and have encouraged them to try to think about new products as well. So this is an area that we think we're beginning to see real benefit and fruit from.
Thank you. I want to have the slide back, Saksham, my colleagues, if you can bring that slide back on the, on the screen. There's something very, very interesting. We talked about this global factoring data over the last 2 weeks when Peter was there in UAE and we went to Abu Dhabi and Dubai. There's something very, very interesting. We spoke about factoring as a percentage of GDP, right? Maybe Peter, you want to just quickly talk about versus all other countries versus China, France, and Germany. This is the same data we spoke. But how are you thinking a correlation of factoring as a book as a percentage of GDP of mature market and emerging markets?
Yeah, it's so interesting because, you look at all these countries and the common denominator, they're all developed countries. So what about the developing countries? There are 3 countries in particular that have huge success stories, and we're in one of them, India. India's growth rate for the last 10 years has been almost 25%. It's incredible. It's like the China story back from 2005 to 2015. The other 2 countries are Chile, and I can explain why, but I need another half an hour. And the other one is Egypt. Both of them growing. Egypt, I think, is around, don't quote me, but something like 15% a year over these last 10 years, and then also Chile is around 7-8%. And why are these 3 countries so strong in factoring? Because, number 1, they did everything right. They created the factoring law. Number 2, they created factoring regulation, sound regulation. Number 3, they created e-invoicing, which we're experiencing soon in the United Arab Emirates. And India. India also has a lighter version of e-invoicing. They created a factoring association in all 3 countries. So the point is that they set the game up whereby everybody can participate in a clear way. There's confidence in the system because of the fact that the laws are tested in the courts. So that's a long and short.
Yeah, but I want to share this important data with all of you, and if my friends sitting behind, they can always come on the first rows, the team. And I'm going to ask a question on this. But you see this versus China GDP, India GDP, where China is factoring $800 billion and India has $50 billion. Now, of course, because of threats, the domestic factoring volumes have gone up to $48 billion, but cross-border is just $2 billion. We talked about total export of $850 billion. We're talking about going up to $2 trillion. But when we talk about the factoring volume, cross-border India is just $2 billion. So there's a huge, huge gap. When we are way behind when we compare, of course, about from a GDP and growth perspective, we are growing. But when it comes to factoring, we are way behind. So that's the opportunity for the banks, the factoring company like 360 TF, both. Even if we have a UAE data also on the, I don't know if you can read it, it's just $4 billion, which we of course going to see that is going to grow post e-invoicing implementation. But all in all, what is the common denominator over here is, of course, those are mature markets, better system, UCC. We have SARSA now in India. But we need more and more liquidity, which is what we are speaking about the development financial institution. US has got program of refactoring. And of course, FCI is very active in Europe. So India need to pick up from here, because otherwise, as Chairman spoke in the morning, that the $2 trillion of export which we are planning, unless the banks become aggressive, the factoring companies come into play, and there are more and more factoring companies come into ecosystem, we will not able to achieve, because it requires liquidity, it requires system. So the opportunity here is for the investors to invest in trade fund, which is investing in factoring, investors to invest and become the shareholders of factoring companies, and maybe the bank needs to wake up, I'll use this word consciously, wake up to start investing in factoring and factoring companies to support this. So with this, I think we have good goals for the bank and the institution to see where the opportunity is. And I'm sure as we deliberate, this message will go to the regulators and of course the institutions, how they can contribute to the overall growth of India and factoring business. So thank you once again, Peter, Gloria, Dilip. I hope we are well in time, Shraddha. Thank you. Awesome.
Thank you.
I'd like to invite Dr. Dinesh Tiwari and Mr. Altaf Baradia to please give away tokens of appreciation to our guests.
As they come in, I have a very humble request to all the participants sitting behind to come in the front as we going to start Dr. Anil Khandelwal's session. After some time, please come in the front, guys. We're going to have an interesting session.
Hi, can we have everyone at the back please come to the front? I promise there is no test quiz. I'm not going to ask you any out of syllabus questions. Please, can we have all of you in the front? This session, I think we've deliberately kept it for the last because it is the most special session, and as they say, last but not the least. So please just make your way to the front. Awesome. So as I said, let's move on to our last but the most special session. You know, patience is what gives you the best sort of returns, and I think this is going to be that session. It will tie up the subjects of how trust, governance, leadership matter more than ever in trade, by someone whose introduction is an absolute pleasure for me to get the privilege of doing this. Our next speaker has done something many people think is impossible. He transformed a public sector bank and made it a global success story. He has a government committee named after him. I mean, how many people have that for HR reforms? Dr. Anil K. Khandelwal, former chairman and managing director of Bank of Baroda, is widely regarded as one of the architects of modern banking. From leading landmark HR reforms to writing best-selling books on leadership, he spent decades proving that banks don't just need capital, they need culture. Please join me in welcoming a true banking legend, Dr. Anil Khandelwal.
Thank you very much for a very generous introduction. I know it's end of the session. It's a highly technical conference. I don't know. I'm the odd man speaking in this session because I come from technicals. Bank is a technical organization. I will tell you, organizations are socio-technical systems. There is a social system, there is a technical system. The technical system of organization is a left brain. We will talk of, all the techniques, you talk of strategy, you talk of ROE, ROC, profit, net profit, gross profit. We don't recognize that there is a right brain which propels left brain. And the right brain of organization is the social system, which holds the left brain activity. And the right brain is the kind of people you have. Just imagine if in 360, Pankaj and Vikram were not there. Just imagine. Their competence, their talent, their patience, their optimism, there is hope. And they're relentlessly trying to do something. So talent, passion, competence, right brain. Most of the time, deal makers are fixated into left brain. Deal breakers, deal makers, they are into left brain all the time. Organizations also have these kind of syndromes. So when I took over Bank of Baroda, I found how come a great bank, 100-year-old, is sliding down at that point of time. It was on the verge in its 100 years that year to make loss, almost. And since my mindset was of this frame, I said something is wrong with our right brain. The organization has become too technical. And from there, my search began. You know, in this world today, world over, there is no deficit of money, I can tell you. No deficit of capital. Plenty. There are more billionaires every time they are getting multiplied. So what is deficit? Deficit trust, deficit governance, deficit leadership. This is the greatest danger. The world's most powerful person is not trusted. What he speaks in morning, what he does in the evening, how markets move. Just see the interplay of trust in the world. And the whole world is wishing somehow how to restore this trust. You can see, he signs a MOU in the morning, in the afternoon he makes a statement, in the evening there is a bombing. Just imagine. This is the potential. So, the world has less fear from nuclear armament and more fear from deficit of trust. A madman can put the button and the world will be on flame. That is trust. In my work in the bank, all competent people, same general manager, very competent and everything else. Bank or any large institution is not run by only techniques and knowledge, the left brain. I went down and down and down and down. First, went to customers. What are they talking? They had somehow got disillusioned. Nothing happens. There are delays, sob stories of delays, credit proposals, other things. And then I came out, maybe I repeated last time, it's such a favorite word with me, and I was telling my general managers, the customers in the bank are those जो कष्ट से मर रहे हैं. Every organization boasts about our service is the best. I was just studying vision of every bank. Trust, customers, this, and you ask those people. I went to employees. I had hundreds of meetings of employees. They didn't trust the bank. When we write, nobody replies. So many things are pending. And I started, somehow moving this huge flywheel of trust. A flywheel is a very, very, very heavy thing to move. And rest is a history that in 3 years, we could double the business what bank had done in 97 years. We were rated, you will not believe, we were lowest on retail banking those days. We became Asia's highest retail banking machine in India. We became a bank, still today, last 20 years, where its CEO, unfortunately me, got Asian Banker Singapore's highest transformational leadership award. Why did it happen? How it can happen? What is this miracle and magic? Nothing. I did not do banking. I told my people, You do banking, I will do something else. I will try to put the ladder right. If your ladder is ricketing, you are climbing. So let me handle, let me fix the ladder. And believe me, last 20 years, the bank remains, after State Bank, the biggest, most performing bank of India. So you not only you create ground, when you work fundamentally on customers and employees, when you create trust, and believe me, even after 20 years, people write mails. What we did, very too small thing. Listen. I started a helpline directly to chairman, where 40,000 employees could write to me in a life and death situation if they thought something is important. A same helpline to 33 crore kitne hote hain? 30 million? 30 million customers who could write to me. And I give you an example because recently on LinkedIn, a customer wrote about that, reminded me. There was a customer in Lucknow I had gone, and I always having this kind of thing. And he was an IIT Kanpur graduate, so I also remember. He said, "Saab, aapke yahan kuch nahi hota, I am very sorry. I have written to branch manager so many times. My things are not happening." I said, "Okay, write to me." "No, sorry, I mixed up. What happened? I was talking there, and this man wrote to me later on. I said, there is a direct helpline. So he wrote to me on that I had written a letter, my things are this. He wrote a letter and sent a copy to my secretariat. And on that copy, after 1 hour, branch manager visited him with the solution of the problem. And recently wrote in LinkedIn reminding me of that even before branch manager took notice, and he would never take notice. But on a copy, your secretariat worked. But please remember, organizations don't work because there is a Pankaj or there is a Vikram or there is. You have to set up systems. In management theory, there is a structure, strategy, people, process, and purpose. The structure I had set up was that in my own secretariat, there were 2 customer relation officers who are always any letter getting, and I said, I will never lose my head if you make a business mistake, even cause loss, provided it is genuine. I will lose head if something is not responded fast enough. And the first thing is, every single letter I received, I responded, never gave it to department. When you respond, your passion is there, your promise is there. You are transacting trust at that point of time. An executive wrote to me after promotion exercise, "Sir, I'm AGM, I'm not promoted. This is my record of performance. I thought I will be promoted." So when it comes, my secretariat told me, my head of HR told me, "Sir, promotion के समय ऐसे बहुत letter आते हैं. Why do you bother? I think you are obsessed with replying." I said, "Leave it to me." So I replied to him. Now it's not enough to reply. Please remember, what are you replying? I said, "Thank you for writing to me." Most people think they have done a crime by writing to CEO. I said, "Thank you for writing to me." Number 1. 2, there have been occasions in my career when I was not promoted, and I felt the same way as you are feeling, empathy. 3rd, now rational. That when an interview panel has data before me, they have data of several people beside you, improving his perspective that it is not only you, there is a 4th, your performance is good, I acknowledge, and I'm sure if you continue, your turn will come. Now his letter comes back. He says, "Sir, I wrote out of frustration. I never thought in my dreams that you will reply. Your letter has dissolved all my frustration." Now you see the miracle of a responsiveness. Today, if I have any grouse, people don't reply. You try, you write to 10 CEOs, including a multinational, private, public sector. They don't reply. This is the problem in trust. But their vision statement, please read. This is the hiatus. This is the gap. The credibility gap. Recent, a worldwide study covering 180 nations on leadership revealed that one of the greatest quality of leadership is the trust, the credibility, the saying-doing gap. When we go, we make so. Yesterday, you must read an article in Indian Express day before yesterday, written by A.S. Ganguly, former chairman, Hindustan Lever, my good friend, former vice chair, Tata Sons, Gopal Krishnan, and former deputy governor, RBI, Rakesh Mohan. They have only written that we have become a non-listening nation. And a whole list of promises they have given what are mentioned. So, if at all I want to say, I came with a presentation, which I always do and never look at it, because you inspire me. So, I never look at it. I do work hard. What do I speak? So, this time for a change, I made a presentation, how trade finance is nothing but a trust finance. But I will, with contempt, I filed it. Because when I look at you, I think I must talk what is more experiential. Time and again, believe me, there is no need to go through million books. What Gandhi said was, be the change you want to see. Why Gandhi is remembered and not hundreds of leaders who have lived and who do daily advertisement of their persona? Because Gandhi did what he talked. If he talked of Harijans, he went and lived in Harijan societies. When he said about cleanliness, he cleaned his own excreta. The world could not produce second Gandhi in last 100 years. Just imagine. Just imagine. But it is not rocket science to be a leader. It is not rocket science to be a leader. I can tell you. You don't have to go to Harvard to learn leadership. Often I wonder, for learning leadership, you go somewhere, your mother taught you, your father taught you. Even a criminal father does not teach wrong things to their kids. My mother taught me early, not taught that she's teaching. She used to sing daily, Raghukul Reet Sada Chalai, Pran Jai Par Vachan Na Jai. One day I asked, what is this? She told me, we are poor, but remember one thing. If we have made a promise, please always live up to that. Sometimes in our work life, we have to speak some professional tweaking of matter here and there. Suddenly I realize my mother has come and she has caught my neck. And so, okay. Please ingrain something. The promise making. When you are in authority and holding a powerful position, lot of people come to you. Say, okay, I will look into this. You know you can't look into it. Our second national problem is how to say no. Friends, I can tell you, you are often very near to losing your job in public sector if you say no. I have said no and got away with. Got away with. We daily deal with politicians, ministers. We are paraded sometime for a decision before the highest authorities. Once a minister told me, look here, I am under so much of political pressure. Can you see outside 5 people are sitting questioning your decision? So when he said, I am under political pressure, in a very theatrical manner, I said, sir, I have a professional calling like this. Pain and humiliation is the biggest trigger for your growth. And I don't mean career growth. You may develop in the career, but if you go down in your eyes, that is not career growth. You must rise in your eye that yes, I could say no to someone who was higher, who could ask me to leave the job. I could say that. So friends, take baby steps for building trust. I don't say no lecture can make you. Take baby steps. One step. Think you have difficulty in saying no. If an opportunity comes, try to say. I can tell you, when a customer came, he was a good customer of our Chennai office. Sorry, Chennai zone. So at a zonal level, they think I am the big boss because he had a Maruti and whatnot agency. And John was every time phoning, he will close account. And he was a very greedy customer. Every time he will excuse you on interest rates. His interest rate, he didn't even want to pay even RBI rate what they charge us. He was that kind of a. So he once came to me. And Chennai general manager was he's our biggest customer, sir, and this and that. Please see that, this and that. He came to me. He said, sir, as you know, this, that. But he doesn't know what kind of, we have Reliance, we have Tatas, we have this. But a zonal mindset. But still I wanted to be courteous. So he came. I said, look here, I have your record with me, how many times we have reduced, and this is a difficult time for the bank. So at one stage, he was virtually without directly telling that then we will have to, take so many banks run after me. They said that. I told my secretary, Jara, Chennai general manager ko phone mein lana. He thought, now I am agreeing. So Chennai general manager, I told Mr. So-and-so, that customer is before me. I think I am not been able to convince him for this interest rate. And he is very insistent about, or else he will have to find outside. I said, please help him. Please help him in finding out a bank for him. He was shocked. I could say no to him in a manner, in a language, at a time before me. You don't have to say, no, I don't care for your account. You must have conversational intelligence and a contextual setting. So I said, he stood up, no, sir, no, this, account. But everyone was so tense. They must have got 100 crore limit. I had 5,000 crore limits at the bank level. And he was virtually blackmailing the zone. Some customers are. So point is, you can't be hijacked in a situation. But say it in a manner that is dignified. Say it in a manner that you have made all efforts. So what I'm trying to say is, even negative decisions of no can build trust. Because if you say, okay, I will look into this, and please see, account is not, we will adjust you somewhere. You have recently seen HDFC case, HDFC Bank, where the board has fined managing director. For what? For, I think, conveying deposit from Maharashtra State Road Transport or something, that they, adjusted the interest some way. It is very common in banks, what we call March deposits. That towards the end of March, managers will come, sahab apna jara deposit bhi, thoda sa deposit is period, and they will shift deposit. And I used to call it, and in the first week, your deposits will come down at a bank level by X percentage. First time in the industry, I issued a circular to all my branches. If I find that in some ways you have manipulated mass deposits, disciplinary action will be taken. I wanted to stop a wrong practice. I don't mind suffering in business, but stop this wrong practice. It is possible for leaders to practice truth. It is, tell me one thing, is it difficult to practice trust? I've never believed it. Never believed it. Trust is easiest thing which is under your control. Politicians don't demand you to be trustful. You say, oh, trust does not work in the system. So fine, you will earn little less. Trust works. That is why Tatas are there since more than 100 years. I will tell you value of trust. You can count among 6,500 listed companies, hardly 100 companies whom you can trust on governance. 6,400 companies, you will have a question mark. Incidentally, my own experience with governance have been such that sometimes in the board, it is one versus rest of the board who want to do a thing, and you are ostracized virtually. They regret, why have we taken this man on the board? Never mind, I'm not dying. I resigned from 7 boards. My next book is on governance by same penguin. I never write things unless I have experienced. Anyway, I can keep on. My idea is not here to come and say how great I am. If you want to know my own deficits, please contact Vandana Khandelwal, my wife. I mean it, huh? Sometimes she tells me, you're good enough only for lectures. Anyway, that's on the lighter side. Ask me questions. And the best question will get my book, The Gym of Leadership. Its full volume had come 2 years back. This paperback edition has come because students were demanding that they want a book they can afford. It's available on Amazon. By the way, I have not come here to sell my book. But it has 18 skills of leadership. It is not all that easy that you tell, you should listen more. It's very painful to practice like a gym. For 10 years, I have been wanting to write a book on leadership. But I was asking a question, who is going to read? It's so simple. What is new that I will write? So one day I was in the gym and suddenly I thought, for coming to gym, I have to have self-discipline, get up at 6 o'clock, be in the gym, practice regularly, occasional bruises, coach. From there the idea came, Gym of Leadership. And I want to share with you something. For quite some time, I practiced how to be a better listener. After 12 years, even observing speaking fast for meetings, speaking fast. That when I go to bank, I will say first 20 minutes in morning meeting, I will not speak. Something will happen after 7 minutes, I will jump onto this. That is the problem of listening. Through reflection and other thing, I can tell you, with so many years of practice, I developed listening skill at best about 18 to 20%. That's the difficulty of building leadership. That is why I call the Gym of Leadership. This book has 18 skills of leadership. It is endorsed by Wharton, Harvard, INSEAD, Eastern gurus, Western gurus, fortunately. So I will gift you to a person for the best question, which will be determined by, let me say, Mr. Vimal Shah, why not you, and Pankaj, which is the best question. I'll give you a signed copy of this and will be privileged to have photograph with that man along with you. I don't want to speak more. Thank you very, very much for inviting me. Pankaj trusting me time and again, and Vikram trusting me for inviting me here. You are some of the most brilliant people on the technical side. And the kind of people, Pankaj, you are able to bring time and again, that shows trust in you, trust in 360 trade finance. If I had known you to a conference like this, which is so technical, I would have never ventured to come, to be very frank with you. Since I know you 12 years back, can you believe, a mad chartered accountant called Pankaj invited me to Dubai to address his conference. Has he gone mad? I used to have very poor opinion about chartered accountants because they're deal makers, hanky-panky, always interested in this, that. I told him also. And I said they are brokers, basically, euphemistically called investment bankers. So I've been very frank. You can kill me for that. But I realized, who is this man inviting me to talk on leadership, talent? I said, this man will go very far. When I met him, because his vision, and every year, which I am not able to do, he spends a week, almost he disappears with his mentor or Guruji to practice all that I have taught. Watch out this man. Watch out this man. Thank you very much, everyone. Some questions, because I'm not done till you ask some questions. Yes, please. Madam, you can come little ahead.
Thank you so much, Mr. Anil. It's always a pleasure to listen to you. My question is, since we work with a lot of corporates and we are from service industry, so...
Can't hear.
No?
You have to still come forward.
Okay.
I'm aging. I'm 78.
Am I audible now, sir?
Huh?
Am I audible?
Oh, very much, very much.
Okay.
As long as you speak Indian English, you are audible.
Okay. So my question is, since you've highlighted so many points from the service industry, and we've been also serving a lot of our clients, there is a genuine concern which we have faced in corporates. While handing over the responsibilities, the senior management, how do you shift your mindset from directorship to the mentorship without micromanaging?
With every promotion, please abandon part of your work. With every promotion. See, you may have been a general manager, credit. When you become chairman, I learned maximum from some of my ex-bosses. In their good old days, they were general manager, credit. Throughout the day as chairman, they will be with customers and doing credit. Part of your past, you hand over to new generation. With every promotion, your role changes. You know what, can you tell me difference between job and the role? Job is what you do. Role is what people expect you to do. People expect you to solve problems. People expect you to do in a particular role, particular thing. Focus on that. Micromanage excellence of your function. Our customers listen to, our regulators, are we prompt with them? Define what is your role. With every promotion, define your role. I always managed, as I said, and I will tell you a story. I'm very fond. I have funny hobbies. Right from the beginning, I was very fond of going to see film shootings whenever I got time. So I went to see a film shooting where the famous Saroja Khan was choreographing and Madhuri Dixit was there. And the song was, Mera piya ghar aaya, oh samni, something like that. And she was taking dance steps. मैं तो बोर हो गया, उसके 5-7 शॉट्स हुए एंड आई आस्क्ड, मैडम ये आप क्या कल्चर है 5-7 शॉट्स लेने का? शी इज सच एन accomplished artist. शॉट ही नहीं हो रहा है पूरा. She told me, I had gone through some VIP contest. She said, look here, today I don't know what is wrong with this girl. So when she's dancing Mera Piya Ghar Aaya, her fingers are not coming parallel. I said, sir, who has got time to see her fingers in the film? She taught me a lesson I have not forgotten. She said, if I knowingly as a dance director accept this, similarly if music director accepts something else, editor something else, writer something else, you will see a blurred movie. And then I realized how it is important for top. And then this is one of my, in one of the books I have written, Micromanaging Excellence. But the top start micromanaging business, day-to-day things, employees, other things. वो कितने बजे आया, कितने बजे गया, क्या हुआ? I mean, those kind of things. So, I mean, is that the, have I answered you? Yeah. Okay. Yes.
Sir, another mad chartered accountant asking you a question.
Take it lightly.
Yes.
If at my age I cannot, if at my age I cannot pull the legs, I am not worthy of my age. Yes.
So thank you. It was very effective. It takes ages to build the trust, yes. But one small incident and it's broken. What could be, if that incident happened for whatever reason, what could be the most effective way to rebuild that trust?
You have known the case of Rajat Gupta, managing director of McKinsey. What happened? Some small thing, he was jailed for 2 years. You have seen that French man, forgetting his name, who was, you know, he did some mischief with the maid in the hotel, and he was filing nomination for presidentialship and it had gone. How smallest thing, because as you write, if you are a sweeper and you do something, nobody will notice. If as you go up, the level of expectation of behavior goes up. Rajat Gupta being managing director in insider trading thing and whatever. So your question is how to redeem it? By actions. By actions. There is no way. Yeah, all of us make mistakes. All of us make mistakes. By redeeming. I think 2 very simple words, we don't use it. Sorry and thank you. I will tell you what is the beauty of sorry and thank you. I always say, saying thank you may be the most routine thing, you will not even take notice. But absence of it is a discourtesy. Just imagine, Pankaj brings a gift for me. Not that I am seeking gift, Pankaj, from you. You know, sometimes you speak something very naturally and Pankaj gets an idea, oh, I need to take a gift from him. Sorry, huh? And I don't even say thank you. On way back, he will think, what kind of a man is he? He didn't even say thanks. Important of thanks. Every day, when meal is served to me, I go to kitchen and thank my servant who cooks it. Every single day. How we treat our spouse? We only give negative feedback. इसमें नमक ज़्यादा है, इसमें ये ज़्यादा है. How many times we thank our own wife for something that we do? Very small things. Sorry. Sometimes it is made such a prestigious issue to say sorry. Why should I say sorry? 3 levels below he is there. Sometimes I fire, in the bank I have fired people, I have gone 5 levels below to say, yaar, sorry, aaj mera jara, you know, I was not in, you know, he said, no, I'm very sorry. It doesn't, you know, redemption, not standing on ego. And you are not impressing the other person. You are undertaking your own redemption. That's the best way. Yeah. Yes, sir.
His father was a journalist. Yeah, he can hear me. His father was a journalist, I believe, with Hindustan Standard. He was once the president of the International Chamber of Commerce. He also was one of the prime movers of the school in Hyderabad.
ISB. ISB, yeah, yeah. Why? Fell from the grace. Because the American system of catching him, in India it happens every day, nothing happens. It is as simple as this. So one day he fell from the grace because of the wrong. My dear sir, at that particular time, it was proved that he indulged in insider trading from the boardroom. So what is your question? I didn't get your question. See, I will tell you one thing. This exactly is the problem. When Rajat Gupta can do, why I can't do? Huh? Huh? Yeah. I cannot answer for them by then. Yeah. I can't. Tomorrow, if I am caught somewhere, you will say, here is the man who came and lectured us. It can always happen. I have no answer to. I have no answer to this question. So I always say, if I can't answer a question, I always say, it's a good question. Okay. Right. Okay. Yeah, please. Your guest, mister. Yeah.
Sir, is governance applicable in case of diplomacy?
In case of?
Diplomacy.
Of course, all the time. All the time. In the case of diplomacy.
Diplomacy.
So what
the
I
diplomat
understand,
play with the various situations.
Let me explain what I have understood of your question. That, see, when you say governance means all the time, every time, an absolute truth, it is not governance. What I get your question is that in diplomacy, in the real life, so the question is, and this is where we are not able to either follow truth or governance because we think extreme side of it, right? I am talking is the how far I will do my very best to do that. If good governance at some point of time or speaking truth at some point of time may not be in my national interest, like, will I declare I am going to attack Pakistan tomorrow? It may be true. I may not declare, but it is not being untruthful. So, you have to find out in a certain circumstances, in a certain roles, spy organization. So, we are talking corporate, where as much as possible, we don't release our secrets to people, even business secrets, but that not being less truthful or less governance. I will tell you, there is a clause in Indian Companies Act, SS1, which says that even in the boardroom, if the chairman of the board feels that certain thing is not in the interest of the company, it need not be recorded. Now some people think It's not governance, but the law itself provides. The other day in a boardroom, a friend referred to me that he wanted to know what is the criteria of paying to CFO and CEO. And the chairman explained the criteria. This is how we are paying, right? X percentage of profit. And he said, you record it. He said, no, I don't think it is in interest of the company. Now, there are two views on this. His view is, if you don't record when an independent director is asking, it's not good governance. The rest of the independent directors felt in that board that it is not, because in these days, nothing is secret. Auditors will know, so they will poach people if they are getting this much. So there can always be two sides of a thing. There is no right and wrong in the real life. You get my point. But the law itself provides discretion to be truthful and not in certain circumstances. Yes, sir. No.
Yes.
Yes.
Mahesh Kokolaki, founder and CEO of Climate Capital Market. We are a 1-year-old startup, and by nature, I am humble and
by
practice.
nature, you are humble.
Yeah.
Others have to give you certificate, not you yourself.
Let me come to the main point.
I don't mind contradicting.
How to practice humility?
Law. You say you are humble, now you are saying how to practice humility.
Without.
Look at it.
No,
I have not heard a joke like this for a long time.
No, I'll give you the context.
Oh yeah, on his recommendation, you really need to read. Huh?
No,
but I like your honesty and childlike honesty. Yeah.
I'll come to the context.
Okay.
So being in power and practicing humility is, you are not, you are in a very powerful position. You can't be taken for a ride. For people like us who are entrants, like we want to make change through technology.
Short.
Yeah. So being humble, at sometimes we are being taken for a ride or taken for granted. Now, we are also leaders from our industry or for our company or for our people. We are representing them. How to ensure, how to practice humility without being taken for a ride, or the
read
respect,
my book.
mutual respect.
Read my book. There is a whole chapter on this.
Okay.
There is a chapter on humility which says humility is not meekness. And read it. You need to read a little more.
Okay. The respect should be both ends protected. That was the whole
Read
criteria.
books. Yeah. I've answered you.
Yeah. Thank you.
Okay.
If I may?
Yes, madam.
Yeah. Leadership is often associated with positions of power and authority. What would be your words of guidance for youngsters and people who are starting out to inculcate values of leadership in their own right?
Very correct. Experiment with it. Experiment with it. When you have temptation to be what you are not, your leadership moment arrives. There is a temptation to agree with something which your convictions don't permit. There is a leadership moment for you at that time. To exercise politely your own conviction. Saying for me is easy, it's very difficult. It's because you get ostracized. You get punished for it in variety of ways. But still, be a Rosa Parks, who in Alabama, several decades back, refused to leave her seat, and the movement was born. I think those are the leadership moments which we deny. But let me share with you, courage is not as simple as talking you should be courageous. Being courageous is not being rash. Being courageous is not being stupid. Being courageous requires a lot of thinking, planning, missing moments. Sometimes, even now, I go to very high-level meetings. I think I will ask this question and return back without asking questions. Sometimes I feel They should not feel I'm stupid. I've led a bank and now I'm asking such a stupid question. So courage is constant. If there is something most difficult, is to exercise courage in a moment. Maybe third time I would ask. Sometimes I return and send my question to a speaker in writing. There are conferences, if you speak, we are full secretaries and this and minister. Courage can also make you feel stupid in your own eyes. Please remember, these are not the things. Experiment. Live those moments of anxiety. Live those moments of personal humiliation. Lift yourself up next time. Use conversational intelligence. Use contextual intelligence. One day you will find your eureka.
Hi, good evening, sir. Sir, when we are talking about trust and loyalty, as of now it is little difficult to achieve, or you can say, because people say when you are listening from your heart, okay, sometimes you miss out on the loyalty part. So I just want to understand from you, like when you are talking to your employees, okay, you want them to be loyal and trustworthy, and that should feed into the business. Like in this competitive world, when we are working with so many targets, achievements and everything, sometimes people find it difficult to get into that trust level or loyalty. How do you think as a CEO, as a leader, we can keep a bridge between both the things? Like we should be, like internal trust and loyalty should be there, and external
I've
should be
understood
there.
your question. To cut short, don't expect your employees to be loyal and trust. This is a wrong assumption. Be yourself a model of that. It will pass on. High expectation, high frustration. Low expectation, low frustration. No expectation, no frustration. This whole business of expectation, but be straightforward. Transaction to transaction, be straightforward. Don't mistake that when I say no expectation, you have to run an organization, but be a transaction to transaction. Don't say I expect your loyalty. Why should you say? Don't say I expect you to be, but say transaction to transaction. I have taken on highest people, the bank's executive director. I came, my next man, everyone said, Saab, paper clear nahi hote hain, ye hain. So one day I had just taken over, I went to his room. I said, Mr. So-and-so, and very jokingly I said, I have decided to raid your office tomorrow. He got the message. He stayed overnight and cleared the papers. One line. I have decided to raid your office tomorrow. अब मैं जाके बोलता अपने नेक्स्ट आदमी को, अरे यार बहुत पेपर, बड़ी कंप्लेन, रो रहे हैं जनरल मैनेजर, ये पेंडिंग है. Find out the right word at the right time. No nonsense. I have decided to raid your office very pleasantly. After all, he was intelligent that he became my number 2. But his pen suffered from Parkinson's disease. He never took decisions. So, some people's pen suffers from Parkinson's disease. They can't write okay. You have to use a metaphor that conveys the meaning. So I will tell you a metaphor. When I took over, things were not happening, and everyone was boasting. We are a great bank, we are this, Maharaja set up the bank, but the net result is nothing is happening. So I say, the bank is suffering from a disease. The collective conspiracy of complacency. In my various lectures, I'll go around. Do you know we have a problem? The collective conspiracy of complacency. Everyone without working is thinking we are on the grid. the past successes are fodder to future failures. Anyway, unless there is a last question, and I can assure you my fodder is your questions. She's getting restive, I know. She has to give vote of thanks. So vote of thanks is deemed to have been taken. So I take your 2 minutes. Yeah, come on. Yes, Peter. As long as I understand your language, I will respond. Yes. A very poor background in language. Yes.
I'll speak very slowly. No, I'm joking. Sir, someone came to me the other day and, just was saying that they said humans think most of the time negatively. Like that's the natural, there's some type of science behind it, that the mind automatically goes to a negative state. And so I'm kind of curious to hear your views as it relates to, how you handle negative states yourself, and secondly, how you deal with people that are in a negative state.
If I have understood your question, let me first of all, it's very important to understand the question. Otherwise you are flying, it's a kite flying. Your question is that human beings, by certain mechanisms of brain, shall I say, they are negative, or they interpret the reality as negative, is that? Yeah? So, I myself? Oh yeah, I get all the time negative vibes, I tell you. All the time. You will not believe I'm such a pessimist. And all the time. Oh yeah, every person is a double-faced man. I once asked my brother, who spoke very less, he's no more, very less, and he used to live in London. And I said, Bhai Sahab, do you ever think of death? You know what he replied to me? He said, all the time. Why? I was the man who was all the time thinking. My brother sounded a rishi. So when I asked him, I said, do you ever think of death? He said, all the time. So your answer to question is, I think a lot of negative thing all the time. But I also know the flushing out process. Few things are not taking out. It is a flushing out. So if the both mechanisms work simultaneously, you live in this world. This world is a very funny world, by the way. People are funny, you are funny, your family is funny. So you have to live like as if you are in a theater, Everyone is playing a role, and you are also playing your role, No one is ideal, let me tell you. Neither Peter, nor me, nor anyone else. We are manifestation of certain traits. We are manifestation of certain, and we are, in one word we'll say, we are work in progress all the time. There is no Victoria terminus of leadership. I may have written so many books on leadership. There is no Victoria terminus where the lines end. We are work in progress. So remain a work in progress, but something that has sustained me all the time is my curiosity and learning and interest in people, much beyond the work. Who this man is, can you believe? In one of your conferences, we found in Dubai or Abu Dhabi, a chartered accountant, a great painter. You remember? Bahrain. And day before he writes to me, sir, do you remember me? I'm a painter, chartered accountant. I said, yes, I met you. I completely remember. Then he gave a whole history. I have settled down in Bangalore. I have this, that. Because from every meeting, conferences, I take 5 names always in my mind. I take 10 faces all the time in my mind. Unless you have that engagement of people. For me, a conference is not a assembly of people who came, he went away. I think few, you may not remember names, but I certainly remember faces, I try to understand names. You must have curiosity in your organization to know people. If you don't know people, you only know deals. That's the problem. So thank you very much, ladies and gentlemen, and our Bimalji and these. Tell me, who should get my book? The Gym of Leadership is available on.
The lady, the Rajini, the chartered accountant here.
Very good. Very good. You know, somebody asked me, what is your learning in a session? You are only giving. You know what is my learning in the session? I learn from the questions of my participants. I've learned from your questions. Yeah. So what is your good name? Rajini. My email is aakk1948@gmail.com. Anyone can write to me. I can promise you a response. Unless somebody writes, people started writing me, मेरी society में problem चल रही है. So I reply to, because I am an obsessed writer who has to reply. I said, gentlemen, I too have problems in my society. So I cannot, unless but you can write to me about anything. Once I was attending a session by our ex-president Abdul Kalam, and he was in Hyderabad, and he was in great hurry to respond. So he declared that anybody who wants to, he can write to me. I will reply, I will try to reply. उसने देखो मैं इतना बड़ा आदमी है. I wrote to him. रात के 2:30 बजे 2:30 I got the reply. These are my role models. आज subordinate reply नहीं करते हैं भाई साहब. देखो लोग वो सोचते हैं अब इनसे हमें क्या काम है. I tell you, this is the word. Oh, shall I write here?
Yes, please.
Rajini, R-A-J-A or what?
R-A-J-I-N-I.
R-A-J. लाइए आपके साथ एक फोटो का मैं प्रिविलेज ले लूं. Thank you, Rajni. You are based in Dubai? ये पेन किसका है? I normally forget things, so I'm checking my mobile. So thank you very much. Vinita, sorry for hanging on.
No, not at all, sir. Sir, it's always pleasure to hear you.
आधा घंटा दिया. आधा घंटे में तो मेरी warming up हो गई.
Sir, 1 minute, sir. If you could. Sir, it's always pleasure to hear you, and we can't just let you go like this. You have awakened a leader and a courageous person within us. With this, can I please invite Rumki, Dr. Rumki, Mr. Ravindra Mathur, Pankaj and Vikram to felicitate Dr. Khandelwal, please. Can I request all the speakers to come up and we'll take a quick photograph with Dr. Khandelwal, please. I request Mr. Peter, Vimal Bhai, Somani ji, Dilip. So, as we come to the close of the 360TF Global Trade Finance Summit 2026, on behalf of the entire team of 360TF, thank you everyone for joining us. Our sincere gratitude to our distinguished speakers for sharing their valuable insights. We are equally grateful to all our partners, Gift City, FCI, BAFT, IDA, SCPC, NFLA, and GTR for the unwavering support. Throughout the day, one message came through loud and clear. The future of trade cannot be built in silos. Whether it was the vision of Viksit Bharat, the idea of one KYC, one dashboard, one accountable journey, of the or the beautiful analogy of Wali art, every discussion reminded us the progress is built throughout collaboration. As Vimal Bhai mentioned so aptly today, don't just trade more, build together. I believe that perfectly captures the spirit of our summit today. To all our delegates, thank you for your participation. I would like to specially mention about Nonzuzu, who is with us from South Africa. Thank you for support. And to all of us, before I conclude, I would like to invite Priyanka and Pankaj and Vikram to join me on the stage as we felicitate Ms. Shraddha Bhandari in recognition. Please, can we have a round of applause for Shraddha? Shraddha, thanks a lot for the valuable contribution and your support throughout the summit.
That was my pleasure. Thank you, everybody, for appreciating being such an awesome audience.
Thank you everyone once again. For everyone who is traveled from outside Gift City, we have our office here in BIFC. We invite all of you to please come visit us. Anyone traveling to Dubai, we have office in DIFC as well. We would love to see you there. And yes, sorry, I forgot about the place which is very close to all of us in Jaipur as well. As you want to travel to the Pink City, please do remember 360TF has a very big team sitting there waiting for all of you. Yes. While I invite the 360TF team on the stage for the quick photo, I would like to also announce that the high tea is served. You might want to energize yourself with a cup of tea and some snacks. Thank you, everyone.